Good Monday morning and welcome to Yahoo Finance Live. I'm Brian Sazi alongside Brian Chung. Lots to get to this morning. Here's what's on tap. Markets tank. Global markets are under severe pressure as the West has hit Russia's banking sector with more sanctions. Deutsche Bank says a, quote, financial war is now underway. And buying interest. One sector bucking the sell-off is defense stocks. Names such as Lockheed Martin and Raytheon are popping on the Yahoo Finance platform after Germany announced a significant step up in defense spending in its budget to reach 2% of its GDP. And tech is taking action. Big tech is clamping down on Russia for its invasion of Ukraine. Yahoo Finance tech editor Dan Halley joins us with the details. First, over to Yahoo Finance's Akiko Fujita for the latest on the developing situation between Russia and Ukraine. Akiko.
Good morning to you, Brian. Well, talks between Russian and Ukrainian officials are now underway along Ukraine's border with Belarus. This marks the first direct talks since the fighting began, and Ukrainian President Volodymyr Zelensky making very clear he is calling for an immediate ceasefire. Meanwhile, the U.S. is stepping up its sanctions this morning, imposing a ban on any transaction with Russia's central bank. That is a historic move that essentially freezes up all of its assets here in the U.S. And this adds to crippling sanctions the U.S. and its Western allies imposed over the weekend. Number one, moving to cut some Russian banks out of the financial messaging system known as SWIFT, preventing roughly 70% of the country's banking sector from processing these international transactions. The U.S. also imposed direct sanctions on President Vladimir Putin, Foreign Minister Sergei Lavrov, and the Russian National Security Team. And over in Europe, the EU has moved on a number of sanctions here, including imposing a blanket ban on all Russian planes. That means Russian aircraft can no longer take off, land, or fly over the EU. Now, the impact of these sanctions already taking shape. We saw the Moscow exchange closed for the day. The Russian ruble crashed, falling to a record low against the dollar. And that prompted the Russian central bank to more than double its key interest rate from 9.5% to 20%. And there are reports of Russians rushing to withdraw money. Long lines reported outside some of these banks. You see one right there. Amid concerns banks would start limiting cash withdrawals and that their bank cards may not work. And we've seen a number of Western companies move out of Russia as well. BP, one of those companies, divesting its 20% stake from Rosneft. And there's a number of companies that have joined them as well. Now, out in the field, Russian forces are continuing to press into the capital city of Kyiv and the second largest city of Kharkiv. But Ukrainian forces have put up a fierce resistance, with Russians failing to take any major cities in the country so far. The UK government is reporting this morning that Russian forces still remain about 18 miles outside of Kyiv. That has led to reportedly Russians stepping up attacks, with Ukrainian officials now accusing Russians of launching rockets into a residential neighborhood in Kharkiv, killing dozens of civilians there. And of course, guys, we are continuing to see the humanitarian fallout of all of this. The UN Refugee Agency now reporting that 500,000 Ukrainians have fled the country. And we saw a lot of that video over the weekend with them crossing the border, especially over into Poland.
So many developments over the weekend. Thanks so much for breaking all that down for us. Yahoo Finance's Akiko Fujita. Let's take a look now at markets. Obviously, three things that we're watching for if we tried to boil everything down, looking at the Wi-Fi Interactive. The first, of course, would be the Russian ruble. We have seen a marked deceleration, as Akiko was walking us through, in the Russian ruble against the U.S. dollar. One U.S. dollar now getting you about 98 Russian rubles. But keep in mind, the slide has been happening just over the last few days. When the fighting really began is when the acceleration began. Russian ruble originally at around an 80 to 1 U.S. dollar exchange rate before all the crisis kind of really accelerated. Now you can see it's continuing with the actions that were taken over the weekend to sanction not just the central bank of Russia, but a number of individuals, as was announced by the Treasury earlier this morning. And then one other thing I want to highlight here is just ways in which American investors can get access to the Russian market. One of the ways is the Van Eck Vectors Russia ETF. It's actually up about 1.3% as of the end of Friday. We'll see what the market looks like once we do get the open at 9:30. You can see over the last 5 days, though, the big story for Van Eck Vectors Russia ETFs and other Russian ETFs listed here in the United States has been low, low, low. It's been down about a third over the last 5-day period. if you zoom out over the last 2-week period or so, down about 40%. Interesting narrative, given the fact that a lot of people were saying get into emerging markets before the Russia-Ukraine situation really kind of picked up. So very interesting to see on that front. And Brian, I know that you've been watching some of the commentary with regards to the Russian economy and really the exposure there.
Yeah, and I should note too, the Russia moved to close its stock market too, so that's something to pay attention to as the sessions wage on throughout the week here, how markets respond to that. But yes, Brian, also watching oil and BP over the weekend. BP said it would divest its little more than 19% stake in Rosneft, that is the Russian oil and gas provider there. I was reading a good note out of Jefferies. It's unclear who will be stepping in to actually buy this, but nonetheless, BP will incur a $25 billion charge because of this asset divestiture. And you can see BP shares under pressure there in the pre-market, in large part because of that really large $25 billion charge. Also, Brian, watching this interesting note here at a JP Morgan. JP Morgan, I would say, is the first Wall Street bank to step up here and try to estimate what all of these Western sanctions, higher energy prices, you name it, what that means to the Russian economy. JP Morgan's saying that you could see the Russian economy fall 20% from current levels and ultimately enter a recession. Now, I have more on this right now on the Yahoo Finance homepage via story, but still, that is a very big number. So I would suspect more banks will be following JP Morgan's lead here as the week goes along, trying to estimate what an isolated Russia means to its economy, if not the rest of the world. All right, going back on oil, though, here, energy markets are on edge as traders eye whether Russia will curtail production to the West in light of those new Western sanctions. Doing so could have far-reaching implications, especially for those oil-rich Gulf states. Hussein Ibish is a senior resident scholar at Arab Gulf States Institute in Washington and joins us now. Hussein, good to see you here this morning. What could be some of those implications for the Gulf states?
Well, they're all in a difficult situation. In fact, every single country in the Middle East is in an awkward situation of one kind or another. The U.S. allies in the Gulf are facing a situation where some of them, the most important ones of them, the UAE, Saudi Arabia, et cetera, have tried to reach out and build relations with Russia, with China, with countries beyond the U.S., as the U.S. has been perceived as reducing its commitment after the Iraq fiasco. And you know, they now find themselves kind of trapped. In a sense, they're trying to protect their new relationship with Russia from the fallout of this crisis. But that's going to be very difficult because they're going to come under the same kind of pressure the Israelis felt, where they've been forced to say much more than they wanted to, and now literally forced to support the UN General Assembly resolution. It's going to be very, very awkward when you're trapped between two big powers.
Hussein, it's Brian Chung here. I want to kind of zoom in on the country across on the other side on the Black Sea, that being Turkey. We know that historically they've been allied with Russia in the region, a very important economic linchpin of that particular area. How do you think they factor into the development so far?
I think in the bigger historical picture, they're rivals with Russia. They've been a rival of Russia for many hundreds of years, especially in the Black Sea, in the Caucasus, et cetera. So Turkey and Russia, well, they've been allied at times. Most of the time, they've been at loggerheads. They're at loggerheads in the Black Sea, where a Turkish ship was hit by a Russian missile at the beginning of this campaign. They've had very close calls in Syria, where the troops fought a bit on the ground, where the Russian ambassador in Ankara was killed, where there have been a Russian plane was downed by Turkey on the border because of the Syrian war. There's been a lot of tension. So right now, I think of all the Middle Eastern countries, and maybe in a way all the NATO countries, Turkey is really on the front line here. And I think both Turkey and Russia are trying to avoid any intensified confrontation, and which is why both countries played down the fact that a Russian missile hit a Turkish tanker in the Black Sea. But Turkey is hinting that they could, as Ukraine has urged them to, invoke the Montreux Convention and say, no, Russian warships are belligerents fighting in a war, and we therefore are denying them passage in the Dardanelles and the Bosphorus Straits, basically cutting off the main access to the Black Sea. So there is a whole other level of confrontation that could be coming, especially if the war drags on or gets worse.
Hussein, a lot of investors are still looking through this situation through the prism of higher energy prices. So let's say Russia does curtail its production. It's the third largest producer of oil and natural gas in the world. So let's say they do that. How might the Gulf states respond? Would they increase their production to keep prices down, or are they inclined to just keep levels where things are now and let prices skyrocket?
Yeah, I think the second. I think their natural inclination is to stick to their current plan because they negotiated in OPEC plus Russia, a very, they had a little war, and not physical, but a kind of a bidding war, pricing war, production war between Saudi Arabia and Russia that the Saudis basically prevailed in. But they finally managed to satisfy all the main producers, UAE, Saudi, and Russia, with a certain production quota and an arrangement. Now, that is a very delicate thing. I don't think they want to risk that. They also have really elaborate plans, especially the Saudis, for shifting investment and for how to develop their economies into a post-oil structure. And they don't want that sort of disrupted. On the other hand, they're going to come under intense pressure from the United States, from Europe, from others, to increase production and basically sell their oil at a discount is what it would mean. If they increased production and sold at a lower rate, just to keep the global energy market supplied at a reasonable rate, they'd be getting less per barrel than they should in the long run. So they're going to be asked to take a hit, and they might do that. Qatar is the big alternative for LNG. Its LNG, the liquid natural gas, is mostly dedicated to Asian customers. So really, the West and Qatar would have to kind of convince these Asian countries to kind of let those supplies be redirected to Europe and to settle with the Asian countries later. That could happen. The Qataris are working on it. They're keen on doing it. But I think the real problem is petroleum pricing. And there, I think, if the war drags on and the confrontation drags on, it's going to be a major issue for these Gulf producers, because they're not going to want to increase their production that much, but the whole world is going to be demanding they do.
And, when you talk about energy and Iran, I kind of want to ask the question, broadly speaking, about just the chatter that we've been hearing, which may have gotten overshadowed by the Russia-Ukraine crisis and might actually be a little bit related to the speed by which perhaps some nations want to get that deal done. But what do you see on that front with perhaps a deal going on the nuclear front with Iran?
Well, it's really interesting because the Russians have been playing this critical role of being the positive voice. Because when you've got two people negotiating, if they say anything positive, really positive, it sounds like they're willing to do a deal and they won't be tough on the last remaining issues. So neither the Iranians nor the Americans have been inclined to give the talks momentum by going out in public and making positive comments, lest that be perceived as a willingness to compromise too quickly. The Russians have been doing that. Right. And they've been playing a very positive role, at least psychologically and in terms of messaging and perceptions, which is very important in any political circumstance. They might, we don't know how this is going to affect them because it's only been going on for a few days. They might decide that the nuclear talks are really a problem for the West and not for them. And that, they're being pressured over Ukraine. They're not inclined to help anybody in Vienna. And we'll see how that happens. But I do think the Iranians also have to be worried that Putin has inadvertently revived the Western alliance, that NATO is back to some extent, that Europe and the United States are on the same page more than they've been in a decade or two, or maybe even 2.5. And that the old forces that used to secure the global order that seem to be breaking apart during the second Obama term, and especially during the Trump era, is coming back together to confront the Russian aggression. And that's really bad news for Iran and any country that wants to challenge the global order as a matter of sort of strategic goal, which they do.
Hussein Ibish, senior resident scholar at the Arab Gulf States Institute. Really appreciate your insights this morning. We'll talk to you soon.
Thank you.
All right, we're set for another wild week on Wall Street. Amid the uncertainty surrounding Russia and Ukraine, you can see really Dow futures down more than 400 points, S&P 500, NASDAQ deeply in the red here in the pre-market. Our next guest is warning the Fed is the real threat to the markets right now. That's straight ahead.
Well, developments in Russia and Ukraine continue to weigh on the markets as we watch about 13 minutes before the market open. Across the board, futures in the major indexes down about 1%, over 1%, at least for the Dow and the S&P. All of this against the backdrop of financial conditions that were already tightening as the Federal Reserve remains a story with red hot inflation still happening in the United States. So let's get a little bit more of a breakdown on what's weighing on markets with Aaron Brown, PIMCO portfolio manager. Aaron, it's great to have you on the program this morning. Just kind of want to get your broad thoughts right now about what is the bigger story you think for markets, given the ups and downs that we saw last week in response to the Russia and Ukraine headlines.
The acute risk, certainly to markets in the very short term, is residual risk from Russia. And I think that's going to continue to weigh on risk sentiment and certainly on financial conditions, which it already has over the next couple of weeks. However, if you step back and you look historically, these geopolitical risk-off events have led to risk sell-offs of about 5 to 8% and have persisted for about 3 months before they retrace to new or at least to their old sort of starting levels. And so I think that as we move past this risk, I think the real risk for markets right now is financial conditions tightening because of the Fed. And that's certainly going to be a more persistent and lasting risk for markets overall.
Aaron, is the next shoe to drop here? We're supposed to get commentary this week from Fed Chief Jerome Powell. Really, it's his first commentary on the situation in Russia and Ukraine. Is the next shoe to drop for markets him coming out and saying we're still going to move likely on rates come that March meeting?
So the market's already retraced its expectation largely for 2 hikes in March. If even rewind 2 to 3 weeks ago, the market was concerned that the Fed would start with a 50 basis point hike in March. And now the market has moved off that and has settled back into the expectation broadly that we're probably going to see only 25 basis point of interest rate hike in March. The question is going to be after the March hike, what the Fed pace of removal of accommodation is. I think that if the market continues to believe that the Fed will be, fairly regimented in its approach with 25 basis points per meeting and doesn't accelerate the pace beyond that, I think that the market's already digested that. So I don't think that's going to be the next shoe to drop. I think that's already embedded in market expectations. But, given the risk that we have now around Russia, given the fact that the Fed is starting to tighten and eventually will announce quantitative tightening with the eventual sort of stopping of reinvestments, I do think that the market right now is really keyed into growth and the impact that all of this financial condition tightening will have to growth and ultimately to markets.
Aaron, did you see any impact of that on earnings in the fourth quarter of last year? I mean, the Fed hasn't started tightening yet, but we've already seen, longer-term borrowing costs going up on the expectation that the Fed would start hiking. Have you seen margins get compressed or anything in corporate earnings that tell you kind of now is the time to start thinking about maybe even rebalancing your portfolio?
It's a really interesting question because through the fourth quarter of last year, we saw by and large companies being able to continue to drive margins higher or at least maintain margins. And you haven't seen, significant cost pressures eating into margins as of yet for the market. However, what we did hear in fourth quarter earnings guidance is that it's likely to get tougher as we start to move through 2022. And you saw real differentiation between those companies that really gear or cater to the lower end consumer versus those that are more geared towards the higher end consumer or to businesses. The lower end consumer, because of the end of the child tax credit and because of the end of fiscal stimulus, is now starting to really take pains in terms of higher cost pressures. And I think as we continue to move through 2022, what we heard from corporates is that they expect that it's going to get harder and harder to be able to pass on those higher costs to the lower end consumer. And I think you're going to start to see this really play out as we move through 2022 in terms of those companies that are able to drive margins higher and be able to pass through those costs and those that aren't. And so that I think is going to lead to real differentiation in the underlying stocks.
Over the past week or so, Aaron, what changes, if any, have you made to your portfolios?
So we have taken down risk slightly, and that's really just to take some chips off the table, to be patient and wait for better entry points. I do think that the market is starting to look more attractive. We've seen an 8% sell-off. I think as the market opens today, will be in excess of 9% sell-off year to date. You have seen some stocks, getting discounted pretty heavily in excess of that market average. And so I think that there are attractive opportunities, but I want to be patient, wait for the dust to settle, wait for more clarity with regards to Russia, and then we'll start to nibble back into the market.
All right, Erin Brown, PIMCO Portfolio Manager, thanks so much for breaking all that down for us. Have a great week.
Thank you.
Coming up on the other side of this break, we'll be watching some of the biggest movers pre-market as defense names in oil are on the move. Again, traders assessing the short-term situation between Russia and Ukraine. We'll be back with more on all of this coming up.
Welcome back to Yahoo Finance Live. And Brian, I don't know about you, but I'm stationed right now on the Yahoo Finance trending ticker page. Bunch of things moving on there, really as nobody would be surprised. It is defense stocks. We're talking Northrop Grumman here. We're talking Lockheed Martin. You even flagged L3 Harris here this morning. All three, really all these defense stocks are getting a nice boost after Germany said over the weekend it wants to increase its budgets, its defense budget, to reach 2% of GDP. And I'm just scrolling a note out of Jefferies right now. They're noting that non-U.S. NATO members must increase their defense budgets by 25% if they want to reach Germany's new target of 2%. So the market is looking at this as a potential big boost for some of these global multinational defense companies.
Yeah, and what's been really interesting is that it's not like it's just last Friday, for example, that we saw the big bump. I mean, I think markets had known that these defense stocks were maybe going to be a play that they liked in the initial first days of the Russia-Ukraine conflict. I mean, even if you just rewind to last week on the 24th, you actually saw a huge bump in the stocks of, for example, Northrop Grumman, NOC, L3 Harris, LHX. Raytheon notably got a decline, but I think that also coincided with the earnings that they had reported. And there was a headline that said they may not have been able to deliver the 70 engines that they had originally been signed for to Airbus because of some shortages in their supply chain. So actually the stock went down, at least for Raytheon, during that time. But of course, broadly speaking, it's bounced back anyway. And over just the last, let's say, 3-day period, each of these stocks are up over 5%. So that's kind of not a surprise, I guess, to say that this is a good play, I guess, for equities investors that are looking at the volatility and seeing where can I reallocate here.
Mr. Market always knows, Brian Chung. It always knows, even when it doesn't know. Also, too, switching from defense to oil, another, seeing a lot of these stocks. Of course, we mentioned BP at the top of the show, divesting its stake in Russian oil and natural gas giant Rosneft. Unclear who will be stepping in to buy that almost 20% stake. But still, you're seeing oil prices here up in the early going, seeing shares of ExxonMobil catching a bit here as the Yahoo Finance Trending ticker page breaks down. It is amazing, Brian, how strategist after strategist, at least to me, continues to downplay the risk to the global economy from higher oil prices. I just don't sense a lot of folks are concerned. They really should be.
Well, they downplay it, but I think what's interesting is that it's within the narrative of, well, there were already secular trends at play, irrespective of the Russia and Ukraine crisis, that were going to push oil prices higher anyway. I mean, you had Dan Dicker come on our show, I believe it was the end of last week, saying, even if there were no Russia-Ukraine situation, I still would have expected a barrel of oil to be over $100. So I think the question now is, how do the sanctions that have been put in place already further exacerbate perhaps what we're seeing in oil prices? Because we have to remember, the sanctions don't mean that the oil price is going to spike because of a shortage today or even tomorrow. It's going to take some time for some of that to bleed through the system. And if it is indeed the case that Russia will very quickly be cut off from the global supply chain when it comes to at least their oil and gas supply, maybe it's going to take some days or maybe even weeks to see the full impact of that.
Yeah, indeed. And we're coming up against the opening bell here. Markets look like they could open under a good bit of pressure. At one point last night, the Dow futures were down more than 500 here, but we're seeing some of those losses get pared back here. And here we have that opening bell on Wall Street. There we had, there's the new New York City Mayor, Eric Adams, ringing that opening bell down at the New York Stock Exchange. Again, Eric Adams there kicking the session off. And Brian, we briefly touched upon this with Aaron Brown over at PIMCO moments ago, but we're getting comments later this week from Fed Chief Jerome Powell. Market's going to have to digest that stuff too.
Oh, yeah. Well, look, they're going to keep me plenty busy this week. We have 2 back-to-back days of testimony from Jerome Powell. He's going to be speaking to the House Financial Services Committee 10 a.m. on Wednesday, and then again in the Senate Banking Committee on 10 a.m. on Thursday. Going to be very interesting to see what he has to say there. It'll be his first time speaking since the Russia-Ukraine situation really flared up, and it will be the last time that we hear from him before the Federal Reserve and all of their officials go into their traditional blackout period beginning on Saturday in the 9-day period leading up to the Fed's next meeting on March 16. So we'll be holding on to his words very closely. And of course, there's a dashboard of other Fed speakers we're expecting to hear from later this week as well, with Raphael Bostic from the Atlanta Fed expected to speak today. It'll be interesting to see not only how they respond to the Russia-Ukraine situation, but whether or not they have any sort of predictions ahead of that employment report on Friday. And then, of course, another CPI read next week.
Ryan, you still seem so calm. It's already a busy morning for you. You have a busy week coming up on tap, and you just
I haven't had my
appear to be
coffee,
taking
so
all
I
in
guess
stride.
I'm a little down. Yeah, I'm a little slower today. I haven't had my caffeine yet. So
Fair enough. Well, good to have you here nonetheless. All right, coming up, the Russian central bank has raised its key interest rate overnight to 20% as the ruble plunges in value against the dollar. We'll dive into the implications of this move straight ahead.
Welcome back to Yahoo Finance. Markets just opened 4 minutes ago, but you can already see the impact of the Russia-Ukraine headlines weighing on the market, with the Dow down almost 500 points. That's about 1.5%. The S&P 500 down over 1%, and the Nasdaq down 0.6%. Again, there's a whole day of market trading, so we'll see where we go from here. But let's head down to the New York Stock Exchange now with Yahoo Finance's Jared Blickley, who's got the update on all of the market action. Obviously, the ruble in focus, but a number of other things now that the market is fully open.
That's right. How about that central bank action by Russia? You know, you think of what's going on in Turkey, that's probably the right direction to go. At least they're getting a handle on it. Let's go to the Wi-Fi Interactive. We are seeing financials, the worst sector, off today. We're going to get to some European banks in a second, but first of all, financials off about 2%. Materials following close behind, down 1.5%. So is staples. Then we got healthcare and real estate rounding at the bottom. Pretty defensive setup here. Utilities in the lead. Industrials flagging as well, but as you can see, everything in the red right now. I did mention the Russian central bank, and I want to go to the Eurostoxx Bank Index, and you can see that it's underwater over the last 5 days, down about 6-7%. So this is definitely taking a toll on European markets. Let's take a look at a 1-month view as well. You can see a little bit more deterioration there in price, and you go to our trending tickers. Probably never seen this before. The number one trending ticker all morning has been the Russian ruble. And Brian, you were talking about that massive devaluation there in the ruble, the central bank literally doubling their interest rate to try to fight inflation. Let's go back to our heat maps and see what's going on inside the NASDAQ 100. We're just going to navigate over here, and you can see a sea of red. One of the notable standouts, Tesla. Tesla is up about 2% here. Also looking at CrowdStrike. That's another group of stocks that's doing well this morning, which is cybersecurity. So let's see if we can navigate over there as well. Getting a little bit of pushback here from the Wi-Fi Interactive, but maybe we can hit up the travel sector. There we go. We can see booking down about 3%. We also have Carnival Cruise Lines off more than 4%, along with United Airlines and American Airlines. Delta Airlines off 3.5%. So very similar scene to what we've seen in past weeks here. Less green than red overall. Now here's the China heat map. We can see NIO, XPeng, some of those EV plays. Those are bucking the red trend here, but for the most part, take a look at Alibaba. That stock's down almost 3%. And just on a year-to-date basis, let's take a look here. We can see really the carnage in these markets. That's not even going back 1 year. This is this year alone. You can see NIO down 32%. Starbucks, although not a Chinese stock, does have a lot of business over there. That's down 21%. But a lot of these high-growth multiple stocks, not only in China but also the U.S., have seen a bit of negative price action. Finally, want to round out the day by going to our leaders, our sentiment index here, and we can see TAN. That's a solar ETF. That's in the green for about 4.5%. Other than that, really not seeing a lot of excitement in some of these fringe markets where you would expect to see the hot money flow if, in fact, there were some buyers, and definitely not seeing that today, guys.
All right, Jared Blickley, thanks so much. All right, Brian, since you are our chief Yahoo correspondent here, explain to new investors out there that might be watching us, why would Russia raise its interest rates at the same time as that it looks like its economy is essentially falling apart here?
Yeah, well, that seems to be the biggest story of the day, Russia raising their interest rates very substantially. But we need to take a big step back and just remember that all of this has to do with the sanctions imposed on Russia by the West. And of course, everything began over the weekend with the announcement over SWIFT that the United States, the European Union, and the United Kingdom had basically agreed to put some restrictions on the ability of Russian institutions to access SWIFT, which is, again, that messaging network. We did the Yahoo U on it on Friday that kind of allows you to message other banks and facilitate payment requests. It's a record-keeping situation where banks can keep transactions and understand exactly how money is flowing in and out of the world. Now, if you unplug those institutions from SWIFT, that's essentially cutting off an entire country from the ability to really trade and make payments around the world. Now, what we're hearing is that the SWIFT sanctions themselves would be a little bit more targeted. It's unclear about whether or not oil and gas, for example, transactions would not be allowed on the SWIFT network. But this is kind of leading into the second and larger point from the weekend, which was the sanctions that were announced on the central bank of Russia from a number of countries. That's not going to allow the most important central banking institution in Russia to deploy international reserves, and it really prevents them from being able to defend the Russian ruble by tapping into reserves around the world. And that's an important story for why the Central Bank of Russia then raised their rates from 9.5% to 20%. That's because they need to handle what they see as inflation that will be coming down the pike. It's not the same story necessarily as what we saw here in the United States with rising prices. The idea is that because the Russian economy is closing off, they're going to have to rely only on their own domestic goods and services to keep their economy afloat. That's going to raise prices, and the impact of that cannot be understated when you see a devaluation against the Russian ruble as harsh as it's been just over the last day. So you have some that are warning, like Zoltan Posar over at Credit Suisse, that central banks will have to offer more U.S. dollar liquidity as not just Russia, but all the people that and organizations that are intertwined with Russia have to scramble for U.S. dollars as the essentially a whole large nation that's so important to the global economy has to put itself back together. So it's going to be a very interesting story over the next few days. Some people have worried about whether or not this is going to lead to some sort of financial instability, but at large, Russia certainly in the limelight here, and it remains to be seen if politically the sanctions will have the effect that it wants to have, which is bringing Russia to the negotiating table, Brian.
Yeah, I'll just add real quickly here, Brian. I already saw some chatter on the street here this morning that level of interest rates in Russia may just be a starting point. You might very well see even higher rates moving forward as Russia tries to stabilize the economy and, of course, its currency. All right, Yahoo Finance editor-in-chief Andy Sower writes in his latest column that Russia President Vladimir Putin won't win in the long run. Andy joins us on the other side of the break. Stick around.
Well, so much of the Russia-Ukraine developments circle around one character, Russian President Vladimir Putin. And that's the subject of this weekend's piece from our editor-in-chief, Andy Sower. And Andy, your piece touches on Putin's motivations for all of this, but you noted that if markets are any indicator, they too will shrug this off.
Yeah, I mean, boy, markets talk about a difficult time for all of us to process this information, Brian. And, we saw those two rally days at the end of last week, and then this morning, things are looking pretty grim. I guess, you're talking about what's going on with the ruble and Russian rates, but let's not forget the other piece of news this morning is Putin putting his nuclear forces on high alert. And nuclear forces high alert, not good for stock prices, right? I think that's kind of a simple correlation. But yes, indeed, over the long run, this is sort of my point that, these times of crisis and even the most significant, you go from the the Cuban Missile Crisis to 9/11, and then even bigger events like Vietnam and World War II, that over time the market tends to rebound. And that goes back to the old line that stocks go up and our economies expand and the stock market reflects that. So over time, the market will rebound, and it usually isn't that long. I mean, it's usually 12 months from these kinds of events. That is, if we don't go into a recession, which at this point, from the U.S. standpoint, would be doubtful that we're going into a recession. But that suggests that if we're going to rebound, that Putin's not necessarily going to be the winner here.
Andy, your column got me thinking back to past periods of crisis for markets, and of course, the Great Recession. I'm sure you remember this. There was this thought that somehow we can decouple from what was happening in the housing market, but I think obviously that was proven wrong, and it might be proved wrong again in here. I know markets are declining here, but JP Morgan out this morning saying the Russian economy can fall 20%. It's going to be hard to think that U.S. markets can decouple from something like that.
Yeah, that is a great question. And by the way, you wrote a great column yourself this morning, Brian, about this and how it's a financial war really at this point. And, you're seeing a tremendous amount of rallying by the private companies in the United States, the government of the U.S., the governments in Europe and private sector in Europe as well. And this is putting a tremendous amount of pressure on Russia. The Russian economy is not that big. It is not that impactful to the global economy. It is a huge force in the energy markets when it comes to Europe. We know that a country like Italy gets 40% of its energy from Russia, and they're about 10% overall of the global energy market when it comes to supplying oil and gas. So that's very significant there. But after that, not so much. I mean, you look at exposure by U.S. companies, McDonald's has about a 4% share. There's a few others. In other words, McDonald's gets 4% of its revenues reportedly from Russia. But other than that, there's not so much exposure. But you're right, decoupling is hard. I mean, this conflict can cause all kinds of friction in supply chain beyond even oil and gas as well, disrupting the European economies, which would have a tremendous amount of impact for the U.S. So, I think that's an excellent question. Obviously, it's not as central as Europe, but it remains to be seen exactly how central it is.
How about China? How did they play into this? I mean, second largest economy in the world. We know that Xi Jinping, the president, has tried to serve as perhaps one of these brokers, as many other jurisdictions have, to a negotiation between Ukraine and Russia. How important are they to all of the political calculations here for Putin?
Hugely important. And, if Putin continues along this course or even goes further off the rails, Brian, the person perhaps with the most leverage here globally outside of Russia is Xi Jinping. As you suggest, they have those two leaders, those two presidents, Putin and Xi Jinping, have become closer over the past couple of years, in large part as an alliance against the West, and in particular the United States. I wrote, be careful of your new best friend here, Xi Jinping. This is your new best friend that we're talking about here, because, national sovereignty is supposed to be a big deal for the Chinese. But then you look at what Xi Jinping has to deal with now that Putin has invaded Russia. So I think that the Chinese president, has leverage, but it's tricky because, he has to balance off. He doesn't want to throw himself back into the camp with the U.S. So it's a balancing act, but you've already seen late last week, the Chinese president was calling for Putin to stand down a bit. So I think this very much bears watching, that relationship.
Yahoo Finance Editor-in-Chief, Andy Serwer, thanks so much.
Thanks.
Coming up on the other side of this break, tech giants facing mounting pressure as the crisis in Ukraine intensifies. We'll have more next.
Big tech is clamping down on Russia for its invasion of Ukraine. Yahoo Finance tech editor Dan Halley joins us with the details. Dan.
That's right, Brian. What we're seeing out of big tech as far as Ukraine and Russia goes is a number of different moves. We'll start with Intel and AMD, which are reportedly cutting off some shipments of their chips to the region. Now, neither company has come forward to confirm this. This is still just a report right now, but that would be massive because it would mean that companies that require those chips to build out things like computers or servers would no longer have access to them once their initial supplies run out. And we've also seen companies like Google and Facebook's Meta, or Meta's Facebook, cut off access to the ability to not only monetize their channels, that means being able to take money out of some of the sites that they have on YouTube or Meta's Facebook, but also restrict access entirely in Ukraine. So we won't be able to see certain things on Facebook if you live in Ukraine, or in YouTube if you live in Ukraine, that are coming specifically from those Russian-operated entities. And then finally, as far as Meta goes, they're also making it so that people who are in Ukraine who have Facebook, they're limiting the ability of people to see their friends list so that they wouldn't be targeted by Russian forces. So these are just a few of the things that we're seeing out of big tech. We have one of Ukraine's officials now calling on Apple to cut off access to Russia for things like iPhones, as well as Apple's own app store, and completely block access there. So it looks like a lot of big tech is really getting asked to step up to the plate here and make some moves that would put pressure on Russia as far as this invasion goes.
Dan Halley, thanks so much. And Brian, another stock we're watching here this morning, not related to Russia and Ukraine, that's Target. Target shares are up slightly in the pre-market here. The company is out with an interesting release here this morning, saying it's lifting its wages to a range of $15 to $24 an hour, depending on what markets, depending on certain markets, and depending on what jobs per se. But again, big move here by Target that I believe will cost it $300 million. And of course, Brian, this comes before Target reports its earnings tomorrow and has a key investor day in person, I should say, in New York City. But again, Target was really one of the first retailers a couple of years ago, I think it was 2017, to come out here and lift wages to $15 an hour. And it looks like now the company's still in that leadership position.
Yeah, and to be clear, I think the notice is that it could increase up to $24 per hour. It's not like in every part of the country where they have stores, it'll be going up immediately to $24 an hour. But you imagine that it'll probably be happening in a lot of those high-cost cities like perhaps New York and Chicago, Los Angeles, where they do have a bit more priority on these kind of city kind of shaped, smaller scale down stores that are in the centers of a lot of these big metro areas. But Brian, interesting to me that they would make this announcement a day before their earnings. Do you think there's anything to be gleaned from this and perhaps what we should expect to see tomorrow?
As being a longtime Target watcher, Brian, they like to highlight these wage announcements. And this is another big announcement from Target that deserves, I would say, to stand on its own. Hence, you drop it today. Now, historically, these investor days for Target have been hit or miss. I remember going to one in New York City a couple of years ago where they outlined really an aggressive long-term capital allocation plan and how they thought about remodeling their stores. And the market absolutely hated it, really punished Target stock. Now, in hindsight, those investments have really paid off here for Target. Looking out over the past few years, they remodeled a lot of stores, got a lot of great workers, doing a lot of things before a lot of other retailers out there. So that is good. So that maybe perhaps that's what you could see in the early going.
Why do they have it in New York City as opposed to in Minneapolis where they're based? Why aren't they requiring you to go out to Minneapolis in the middle of the winter?
Well, I would. I certainly would, Ryan, but this is where all the banks are. I think this gives a good opportunity for Target to come back to New York City, visit with its bankers, see its analysts that cover the company in person here. So hence, Target is coming to New York City, not having this day in good old Minneapolis in its own backyard. All right, we'll leave it there. Coming up, we'll reset the show and stay on the developing situation between Russia and Ukraine and the impacts on global markets. Do not go anywhere.
dour, I suppose.
Welcome back to Yahoo Finance Live. We are just about to cross the 10 a.m. hour here on the East Coast. I am Brian Chung alongside Brian Sazi. Markets are getting whacked again as the West unleashed new sanctions on Russia over the weekend. Corporate America also spent the weekend responding, notably oil major BP, which will exit its stake in Russian oil giant Rosneft. You can see the Dow Jones Industrial down over 1%, almost 400 points. The S&P 500 down about 0.75%, and the Nasdaq down only 0.2%. Let's get right to Yahoo Finance's Inez Ferre for a look at what's moving in the early stages of today's session. Inez.
And Brian, we're taking a look at oil. We're watching Brent crude futures up above $100 a barrel right now, up more than 2%, 2.5%. You've got WTI that's up more than 3.5%. I do want to mention the Wall Street Journal also reporting that the U.S. and some other countries, they're considering releasing 60 million barrels from reserves. Also want to mention that gold futures up more than 1%. We're watching palladium futures up more than 4%. And wheat, remember that Russia and Ukraine are big producers of wheat. So you're watching those futures higher as well. We're also taking a look at some of the energy stocks. As you mentioned, BP down more than 7% after announcing it would be selling its stake in Russia's oil giant Rosneft. But you've also got some other also oil producers as well that are under pressure that also have stakes in Russia. Shell down more than 3.5%. Total Energies of France down more than 7%. I want to mention what's happening with the travel sector because that's getting decimated right now. We're looking at airline stocks which are under pressure. A lot going on here. Europe closed its airspace to Russian carriers. In retaliation, you've got Russia, which has banned 36 countries from using its airspace. And that's important for those routes that go from Europe to Asia. And finally, I just want to mention what's happening here with the NASDAQ. We're watching some of these stocks which are under pressure, but off the lows from earlier. You've got Amazon down about 1%. Some of the mega caps are that are lower, but you've got Tesla that's in the green. This is the outlier, up more than 3.5%. This also may be because Electric has reported that Tesla's Gigafactory in Berlin is expected to finally get its approval for production this week. Brian?
Yahoo Finance's Inez Ferre. Thanks so much. Well, investors have a lot to assess right now with the Russia-Ukraine crisis, and our next guest says the risk is not simply blowback to our own economy through energy and supply chains, but something that he describes as an unintended escalation dynamic. Ken Rogoff is an economics professor at Harvard and the former chief economist of the International Monetary Fund. Professor Rogoff, it's great to have you on the program this morning. Tell us a little bit more about exactly what you mean by an unintended escalation dynamic, and what do you fear is the outcome of this crisis as it relates to the global economy?
Well, I mean, clearly, Putin is either going to double down or back down. He's not going to simply turn the other cheek if the sanctions start to bite. And so the challenge is how to calibrate things so that he gets a tough message without having things blow up. I mean, yesterday you saw putting his nuclear arsenal on high alert. People have been worrying about a cyber war for a long time, and everybody says, well, that's not going to happen because Russia has more to lose than they have to gain. But there's a concern that, you know, it's not just rational. It involves emotions. They have a lot of capacity to hit our infrastructure, to hit our financial system. We can do worse to them. But I mean, that's just an example. I don't want to, you know, sound hysterical, but this is still early days. I mean, Putin's in there to win, and we have to make sure he feels pain. But it's a very, very volatile situation.
Professor, you're a noted expert in financial crises and understanding them and explaining them. What do you think the blowback of Russia being isolated increasingly, what does that mean for the U.S.? Does that set the stage for some form of U.S. economic crisis?
Well, not yet where things are. I mean, the fact is Russia is very important in energy markets, but it's a midget in the global economy, and Ukraine's even smaller. You know, of course, it matters for some markets, but the real concern is just the uncertainty this breeds, the whole change in the post-war stability, et cetera. I mean, that's really the concern. I mean, I think if it stops here, nothing much has happened in the global economy. There's going to be worse inflation and lower growth. I think that's baked in a cake at this point with what's happening, but it's still a very, very volatile situation.
Can you, I guess, walk us through the significance of some of the actions that were taken specifically against the central bank of Russia, very clearly designed to make sure that they can't tap into international reserves at a time that's very important, which explains the ruble's movement. What does that mean in terms of the Russian economy being able to do this type of thing? And how significant is it that they're doing this? Because we don't usually see these types of actions.
You know, it's an absolutely radical measure to try to freeze assets at a major central bank. It's a break the glass moment. They're trying to thread the needle. So they're, putting restrictions on. They'd like Russia to keep pumping its gas because the Europeans want that, and sending out wheat, but to make it hard for them to use it when they get it, they want to make it hard for them to thread the needle. There's a sort of, it's very delicately used. They didn't go full blast in SWIFT and freezing the central bank, but they've ramped it up radically. And, again, the questions, what's next? But it's a major thing. And if you want to look at the long run picture of dollar dominance in the global economy, believe me, China's looking at this. They have, $3 trillion in dollar reserves. And someday they may well do a similar thing in Taiwan, and they're thinking about how to shield themselves. And it could have very big longer term ramifications for the global economy, dollar dominance. But near term, the volatility is really, what's going to happen, where will things stop at the border, et cetera.
I want to drill down on the dollar dominance thing. You're an expert in this field, and I've never seen so many people care about SWIFT before or want to learn about exactly what SWIFT is doing. But, SWIFT, in addition to all the other measures, is clearly designed to isolate Russia, which has required them to not have as much of a reliance on U.S. dollars or U.S. dollar denominated assets. And we know the central bank was already trying to reduce their exposure by kind of getting into gold in the years leading up to the pandemic. What do you feel as the risk of everything that's been going on here to the dollar dominance? I mean, you said that Russia's not too substantial in the global economy, but if they start turning to, let's say, a digital yuan or cryptocurrencies here, would that do anything to the U.S. dollar strength?
Well, absolutely. This isn't going to happen overnight. The fact is, there are not a lot of moves they have. I mean, SWIFT isn't the whole global clearing system. It's about half of it, but it's a very important half. And yeah, there are ways around it, but it's very expensive and very hard. It's absolutely a crippling move. And it's a very big deal because the whole infrastructure of the global financial system, trade, finance, everything, pensioners getting their money, everything is built around SWIFT. And so the question, if you're using it in this way, which I fully support, but you don't quite know whether it's going to accelerate a move away from SWIFT. I'm sure the SWIFT, is looking at this very closely themselves, because we are in a very dynamic world where there eventually will be a move to more digital assets.
And Professor, eventually, and it's hard to see this now, this will end in some form. What do you think Russia's standing in the world will look like?
I mean, at this point, Putin's a pariah. I have many Ukrainian friends, Russian friends who are just utterly distraught. They look at being cut off from the world for a long time. It's really hard to know how to come back from this until Putin's gone. he's going to be looked at as a mass murderer. People are going to be looking at genocide charges. They're suddenly treating him like North Korea, Venezuela. He's painted himself into this corner. It's a very dark place where we are, and I'm not sure how we get to an end of it until Putin and his cronies go. And if we look at North Korea, that's not happening. I'm not sure how fast it will happen in Russia.
I mean, given the situation that you've just kind of painted there, what more can be done? I mean, the sanctions that we've already done and other Western nations have done have been pretty dramatic, as we discussed earlier in the segment. Is there anything the International Monetary Fund, for example, where you used to work, can do? I mean, special drawing rights are an enormously important part to that region of the world. Would it help to give Ukraine more SDRs, or do something to target Russia's SDR? I mean, is there anything more that can be done at the international level?
I mean, a little bit. They already have somewhat cordoned off Russia's SDRs. Russia's not allowed to use them directly. They have to use them through the IMF, which leads to problems. But no, the IMF's not a big player in this. They may be in some of the fallout that happens. We're already in a very fragile state in the global economy. Emerging markets, particularly the smaller ones, developing economies, are all in debt distress. As interest rates rise, it's going to get worse. And having this extra volatility is certainly, going to make things much worse. So we were already entering a difficult situation after the pandemic, and this is going to amplify things. You asked about financial crises. I don't know about in advanced countries, but certainly in emerging markets, in developing economies, it's going to be a problem. And coming back to Russia, one thing they might achieve with the SWIFT, I don't know how it will go, is to create banking crises in Russia, because there's a lot of dollar-denominated debt internally, and if people try to withdraw it, they're going to have to freeze it. They're going to be bank runs because the central bank can't use its dollars to bail them out. So, and again, how will Russia react as this goes on?
And Professor, you mentioned the potential for cyber attacks moments ago. Are you confident the U.S. could thwart any cyber attacks on our infrastructure?
We kind of know we can't. We do what we can. This is really mutually assured destruction. We can do a lot to them, maybe worse. So that's really the risk of their ramping up on cyber. I think it's, pretty clear we can't stop them at every point. I mean, I don't know. It's a fast moving situation. Maybe we're at a brief moment of technical dominance, but I kind of doubt it. There are all kinds of vulnerabilities. We've tried to patch them up. But the big risk to Russia doing something is that we can do it to them worse.
Kenneth Rogoff, economics professor at Harvard and the former chief economist of the International Monetary Fund, in a wide-ranging discussion. Thanks so much for stopping by Yahoo Finance this morning. Coming up on the other side of this break, Discovery has tapped a new leader to run CNN. We'll have all the details next. Some headlines in the media world as veteran CBS executive Chris Licht is expected to be named CNN's next president. The announcement is expected to be made by Discovery as soon as next week. The network recently parted ways with President Jeff Zucker after it was revealed he failed to disclose a romantic relationship with another executive at the company. Licht was previously an executive producer on CBS This Morning, as well as Morning Joe on MSNBC. Discovery is in the process of finalizing a takeover of Warner Media, the company that owns CNN. Warren Buffett's Berkshire Hathaway announced record annual profit over the weekend. The company says fourth quarter profit was boosted by gains in many of its business and common stock investments. This, of course, coming on the tail of Berkshire repurchasing $6.9 billion with a B in stock during the quarter and boosting buybacks in 2021 to a record $27 billion, also with a B. The buyback pace has slowed a bit, though, with Berkshire repurchasing $1.2 billion in stock so far in 2022, a little bit below that pace. And Elon Musk announced this weekend that SpaceX's Starlink satellites are now active in Ukraine as the country suffers outages tied to the Russian invasion. Musk was asked by Ukraine's vice prime minister via Twitter to deliver satellite internet to the country, and Musk apparently followed through. Starlink is SpaceX's satellite-based internet constellation, and as a reminder, its goal is to provide worldwide high-speed broadband, especially to areas with unreliable internet access.
All right, the CDC is out new mask guidelines as the pandemic continues to show signs of improving. Yahoo Finance senior healthcare reporter Anjali Khemlani has the details. Anjali.
That's right, Brian. The CDC on Friday not just rolling out new mask guidance, but also redefining what concerning levels of transmission of COVID are. The CDC said that these new guidance will affect 70% of the U.S. population right now, moving them into low or medium areas, and that affects about 55% of counties. The redefinition really looks at hospitalization and strains on hospital systems. As you can see, low areas of concern are those with limited impact versus high areas where we know that hospitals could be strained or have limited, healthcare professionals and the like that we've seen throughout this pandemic. And so that has impacted also when we know to mask. So as we know, the Omicron wave has subsided, and we're looking at possibly a few months of reprieve before any other variants of concern come about. We've seen that pop up every 4 to 5 months. So if another one does come along, that is around the time that we can expect that. So when to mask, we look at medium areas of transmission. That is the first area of guidance. Low basically has no guidance. Medium areas of transmission, asking your healthcare provider. This is especially important for those who are immunocompromised or have other vulnerabilities, such as elderly individuals. High transmission areas is when we go back to really looking at masking indoors. And this masking is largely for indoor spaces because, as we now understand, this virus really transmits in indoor spaces a lot. And so that's sort of where the concern is. We know that the CDC Director Dr. Rochelle Walensky said on Friday that this is exactly what is needed for now. None of us know what the future may hold for us and for this virus. She said, we want to give people a break from things like mask wearing when our levels are low, and then have the ability to reach for them again should things get worse in the future. We are seeing this play out across the country, of course, noting specifically in New York City, where the mayor just announced that there will be some reprieve from masking for kids, as well as the vaccine mandates and checking in passports for restaurants and other indoor spaces that is set to go in effect on next Monday, March 7th, with a final decision on March 4th. Again, this is all aligning with what we're seeing around the country. There have been some other areas of the country which have said they're going to either wait, either based on their current level of transmission or concerns. But it's important to note that the CDC, as well as other experts, have said that if you want to mask, you can certainly remain masked for now. Back to you.
Anjali, it's Brian. I want to ask just kind of about some news headlines that we had gotten over the weekend regarding some research into the origin of COVID-19 tracing back to China. Any more details you can provide on that?
Yes, so we actually got two preprints. Really important to really amplify that these are not peer reviewed just yet, but two new studies pointing to the Wuhan market. That market was originally thought to be the origin of the virus and the resulting, of course, COVID-19 pandemic. But what the study shows is that based on actual Chinese testing of the animals at that market, we found that there are two lineages of the virus that had been in circulation early on. And that's really important to note because, of course, we know that there have been some lab leak theories, and this sort of adds to the body of knowledge of the market being the original source. Much more to, of course, dig into when it comes to that. But as it stands right now, we see more promising information coming from not just the studies themselves, which have been global collaborations, but also from the Chinese themselves releasing this information. We know that the market had been wiped down and wiped clean pretty soon after the first report, so there was very little that international experts could do, but at least the Chinese have now, 2 years later, released these results, and that's helped with this body of study.
Yahoo Finance's Anjali Khemlani, thanks so much for breaking all of those headlines down for us. Coming up on the other side of the break, Overstock CEO Jonathan Johnson will join us for a look into the retailer's business. We'll be right back.
Overstock says its turnaround remains on track. The company emphasized in its latest earnings that it's focused on driving profitable sales and will look to offer even more home goods. Overstock CEO Jonathan Johnson is here with us now. Jonathan, good to see you again here this morning. Should Overstock at this point in its life cycle just be viewed as an online retailer that sells home goods?
It should. In fact, that's the direction we've been coming. By the end of the second quarter of this year, we'll have removed any non-home products from our site. That is our primary focus.
Hey, it's Brian Chung here. I mean, the big story across all categories, non-home and then home, is still the supply chain. I mean, what have you seen from Overstock's vantage point in terms of possible alleviation of the supply chain? Have things gotten worse? And how are you trying to work through possible price increases as we do continue to hit these snags, even in the early parts of 2022?
Brian, lots of good questions there. Things have not gotten worse, but it's slow for the supply chain to get better. I think it's probably through the end of this year before we see any kind of return to any normalization. Frankly, that works well for Overstock. We have a vast array of suppliers. And so when one is out of inventory, another usually has something very close to it. And we continue to have better in-stock product than we did a year ago. Not quite back to pre-pandemic levels, but being in stock is not the problem for us. And then, of course, very little of what we sell is on the water. It's almost all in the warehouse, so our customers can be assured that if they make an order, it's shipping out of the warehouse in a day or two.
Why the outsized focus, Jonathan, on home goods? I, for one, have always liked going to Overstock's site, looking at the watch section, for example. In fact, I went last night, saw a couple Rolexes selling for 50 grand. Why are you exiting those categories?
We found that our customers that purchase home goods are twice as likely to come back. They have a larger average order value. They're just a better and more loyal customer. And what we want to do is make sure that all shoppers begin to associate Overstock with the home. And when we have a mixed message of selling pet goods and watches and apparel, people don't think of us first for home. That's our best customer. That's who we want to cater to.
And what's interesting is that taking a look at your earnings, you guys sound like a tech company at times. I mean, you guys are a tech company when you talk about the mobile downloads that you have. I mean, interesting that caught my eye. You saw an 80% increase in app downloads in the fourth quarter relative to the third quarter. What are you seeing as trends in the way that your customers are engaging with Overstock, be it, desktop, mobile? Are a lot of people ordering couches just from their small phone?
They are. We've seen a move to mobile, and if you define mobile as tablet, phone, and app, there's more than half of our traffic and more than half of our sales comes from mobile defined writ large. We have been making a big push to have our customers download our app. Once they download the app, they're still more sticky yet in their habits, and we're able to communicate with them in a very natural way. So we do view ourselves as a tech company. We were an early pioneer in e-commerce back in 1999. We continue to try and improve the experience for each of our customers through technology, whether that's a better mobile experience, a mobile app, easier findability. What we're really trying to get to is make it so each of our customers can build their dream home, furnish their dream home on our site.
It's been a tough week and a half or so, Jonathan, for the world, given the situation between Russia and Ukraine. It has hit markets. It has hit consumer confidence. Have you seen any shift in real time on how consumers are spending on your platform?
Not much. We're watching it carefully. It is a tragic situation, and I do think people are stopping a little bit, but we've not seen much of a impact on our traffic or on our sales. But I do think it's of great concern. I think for our business, probably the biggest concern is what it does to oil prices. As we are working with UPS and FedEx and last mile carriers. They're of course hit hard by oil prices, but so far no major impact to Overstock's business at all.
Are you planning to raise prices in light of the current situation?
We do all that we can to keep our prices down. Our best customer is a savvy shopper who wants smart value, which means the highest quality product for the least amount she's paying. She's really looking for value. And so throughout the supply chain challenges, we've done our best to either have our manufacturers, our suppliers, or Overstock take most of the inflation. That being said, there's some inflation that we pass along to the customers, but we do the best we can to keep our prices low and the lowest in the market.
All right, we'll leave it there. Overstock CEO Jonathan Johnson, always good to talk with you. Have a great rest of the week.
Thanks, Brian.
All right, up next, we're taking a closer look at the banking sector and how it will be affected by these sanctions and swift changes. Do stick around.
As we've discussed, the United States taking action against Russia by banning transaction with the Russian central bank and the country's wealth fund. This all coming as the United States and the European Union work on a list of banks to cut off from that SWIFT messaging network. Obviously, unplugging an entire nation from the world's financial network would be pretty significant. Let's bring in Gerard Cassidy, RBC Capital Markets Managing Director and Head of U.S. Bank Equity Strategy. Gerard, it's great to have you on this morning. Citigroup disclosing $5.4 billion in exposure to the Russian economy. How impactful are all of these measures going to be on the U.S. bank stocks, which are having a rough morning, by the way, this Monday?
No, they are. They certainly are having difficulty this morning. There's clearly a risk-off approach to the markets today, and the banks in these types of environments have rough days. In terms of the actual exposure to the U.S. banks on what's going on over in Russia, the exposure is minimal. You mentioned Citigroup's over $5 billion number, which in nominal dollars appears to be large, but as a percentage of their balance sheet, it's about 3%, very manageable. So what we're seeing here, of course, is the risk off trade with the banks. The 10-year government bond yield has fallen. So that's another factor. The yield curve is flattening. And there's also a question, will the Federal Reserve be as hawkish on raising short-term interest rates this year to fight inflation in view of what's going on over in Russia and Ukraine?
So, Gerard, it sounds like, I mean, the Fed still remains the big story for these banks. That makes sense given the importance of the yield curve for their business models. But, I mean, just to kind of stay on the topic here, over the weekend, you were hearing a lot of people comparing the financial implications of what's happening in Russia to perhaps a Lehman moment. And it is indeed the case that these Russian banks could be at risk of full-on collapsing here. So even irrespective of the direct exposure that the U.S. banks have to the Russian economy, is there a worry that perhaps a global financial issue could be cropping up here?
You never say never, of course, but it's not likely. The global financial conditions are much, much stronger today than they were pre-Lehman. As you know, particularly here in the United States, our American banking system has over 2 times the amount of capital and liquidity built into the system following the financial crisis due to the Dodd-Frank legislation. In addition to that, they are stress tested every year for very draconian scenarios. Now, granted, there wasn't a war breaking out or a conflict breaking out as part of those draconian scenarios, but they do have counterparty risk scenarios that are very significant, particularly for our global banks. So when you look around the world, there's plenty of liquidity. There is less leverage, which is critical, which was the major problem with the Lehman crisis because it spread so quickly and there was a leverage problem. So I don't see it at this point being anywhere close to what happened when Lehman collapsed and brought down, the global financial system because of the precautions that have been put in, safety measures that have been put in post-financial crisis.
Well, Gerard, what bank are you most concerned about in terms of future profits this year, given its exposures to various overseas economies?
I would say that if there is a concern about profits, and again, as you guys touched upon, the real driver of profits for the banking industry, for our global players as well as our regional banks, is the outlook for the short end of the yield curve. If the Federal Reserve raises rates 3 to 4 times this year, which is our expectation, the profitability of that will be very impressive for the banks. But when it comes to the current problems that we're seeing on the global scale with this conflict that is developed, there's really no material impact to the American banks' profitability. The banks that would have exposure, of course, are our global banks, including Citigroup, JP Morgan, then the custody banks such as Bank of New York and State Street. But overall, I would say that there is some risk, no doubt about it. But right now, it seems contained. And again, the system is very strong based upon what happened from the financial crisis and should weather this storm much, much better than they did during the financial crisis.
I mean, as you mentioned, Gerard, the exposure to the U.S. banks might not be that substantial, but would you expect just the challenges here to maybe convince the banks that do have exposure, like, for example, Citigroup, to pare back on their exposure by perhaps cutting these arms of their businesses off? I mean, we already know Citigroup has been trying to slim down when it comes to their international presence, but might this accelerate that?
No, that's a good question, because when you look at what Citi is doing, they are exiting out of certain international consumer businesses, but their global corporate and institutional business is their strength. And that's where the exposure primarily is to Russia. So I don't see them accelerating or cutting off that business as a result of this conflict. Now, granted, they have taken precautions and they're also putting up probably some extra capital levels for safety reasons. But generally speaking, I don't expect a real knee-jerk reaction. Now, maybe 6 months from now, they decide to exit the business. That's always a possibility. But right now, I would be surprised if that happens at this time. Now, some of the foreign banks certainly have much greater exposure to Russia than the Americans. The Americans generally don't have that much exposure. So there is some second derivative risks that if one of the big foreign banks that may have much greater exposure has more direct exposure to some of the American banks, well, then that would certainly be something for us to monitor. But the direct risks to Russia right now are very limited for the American banks.
And then lastly here, I mean, I can't believe the Fed is a final question in this case, but in this news cycle it is. But what would you expect to see as the impact of the Fed's kind of reaction through the March and the meetings later this spring and in the summer to the bank stocks? Because it's not as binary as higher interest rates hurt the banks. I mean, in some cases, higher interest rates could give the banks a little bit more room when it comes to their net interest income. So how important would, let's say, for example, a more aggressive stance from the Fed over the course of 2022 be to the story for the bank stocks?
It would be even better. The real risk is that the Fed doesn't move at all. So what if the Fed becomes very dovish because of this conflict and they don't raise short-term interest rates or scale it back? That would be more negative for the banks than being more aggressive. The banks' balance sheets are positioned to benefit mightily from rising short-term interest rates. You look at Wells Fargo. Wells Fargo is showing that 100 basis point move in interest rates, both at the short end of the curve and the long end of the curve, a so-called simultaneous increase, which is highly unusual, but that's the measure the banks generally use. But when you look at that, that would lead to a 20% increase in revenues over 12 months for Wells Fargo. And so to us, the banks are positioned very effectively to benefit from rising short-term interest rates. It's one of the few sectors that will do so well in a rising short-term interest rate environment.
All right. Well, in the next round of bank earnings, we'll be sure to have you back on. I believe that's going to be in April. But Gerard Cassidy, RBC Capital Markets Managing Director and Head of U.S. Bank Equity Strategy. Thanks so much. Coming up on the other side of the break, BP's bruising Russian exit. We'll break down all the details next.
Crude oil prices are back on the rise after the West slapped Russian banks with fresh sanctions. So what are the best oil stocks to buy right now? Neil Dingman is Truist Managing Director of Energy Research. Good to see you here, Neil. Thanks for hopping on. Before we even get to any picks, I imagine you have to come up with some form of framework here for oil prices. What is your short-term outlook for oil prices? How high can we see them?
Good morning, Brent. Thanks for having me. Right now, there's certainly at least, we think, somewhere between a $10 or $15 geopolitical risk. When you look right now, top worldwide producers, U.S. #1 just by a fraction, Russia only about 500,000 barrels behind, and Saudi about 500,000 barrels behind that. All things considered, I mean, if this continues to last at least another month or 2 months, you could see at least another $10 or $20. So, our call continues to be, on a normalized average or fundamental average, closer to $80. But with this said, you could continue to see prices well over 100. In fact, we wouldn't be surprised to see a spike closer to 125.
Hey, it's Brian Chung here. I mean, we've been talking with other oil strategists and watchers who have been saying that these were secular trends that we were already seeing prior to the Russian invasion. I mean, even before all of this, WTI was at $85 a barrel. So how do you see the Russian-Ukraine situation playing into all of that? I mean, on top of the price increases that you're already expecting, is there a serious geopolitical risk that if this really kind of gets larger and it maybe perhaps spreads beyond Ukraine's borders, that there could be more further implications for oil prices?
It is a good question, Brian. I mean, what we could see that the supply demand was so tight, to your point, even prior to this, there was very, very little cushion. We normally have at least a couple million barrels in there. We actually right now we're running a little bit just the opposite, where demand was still overtaking supply. And so right now they thought with OPEC continuing to step up in the months ahead, that supply on its own would have stepped up, let's say by the end of this year. But obviously now, as I mentioned, Russia out there producing over 11 million barrels a day. If there's any retaliation that's energy related and they decide to go after Russian production, that's going to have, I think, a very quick and dire circumstance on prices and what could push it off. So, again, there's not any thought and suggestion that they're going to go that direction. That means administration right away. But if they do, I think this could have a very quick response of prices shooting up very quickly.
Now, the market was a little bit surprised here, Neil, by what BP announced over the week, and of course, saying it would divest its close to 20% stake in Rosneft, the Russian oil and gas producer. Are there other? What's the Russia exposure for the other oil majors and Exxon, you name it? Might we see more Russian asset divestitures?
It's quite minimal. That was the biggest ownership, and they talked about that as potentially having to do a fire sale, which you hate to see for any company involved in this. But it is quite minimal. You could see U.S. companies that potentially have that have LNG, that export LNG, maybe something like that benefit. But as far as direct ownership, direct exposure, yes, there's some we have a little bit with Chevron and Exxon, but very, very minimal to their overall business.
What about some other stocks? I mean, are there any sort of companies on the E&P side of things that you like right now? I mean, obviously, this is a tough market to be picking individual stocks in, but are there certain types of names that you are really kind of dialed into?
Yes, I mean, I think besides these high prices, what's interesting, what I think investors maybe sometimes fail to realize, and why we were so bullish even prior to this, as you pointed out in another question, was most of now our companies have very low hedges. In addition to that, they have some of the lowest cost of capital they've had in years. A break-even price now around $30, where just a couple of years ago it was closer to $40 or $50. So companies that really fit that bill. Two of our, what I'd say even three of our top: Continental Resources, of course, famous oil man Harold Hamm running that. Number two, Marathon Resources here out of Houston, and number three, Matador. All three have those three counterparts. Obviously, nice high prices, no hedges, and a very, very low cost of capital.
Lastly, Neil, should Russia pull its production in any form, how do you think Saudi Arabia will respond, and what would be the corresponding impact to prices?
I think Saudi will try to step up in the quickest and most material matter that it's able to. But I honestly think that their spare capacity is more limited a lot of times than they're leading on. So, again, as I mentioned, Russia producing 11 million barrels a day. If even 2 or 3 or 4 million barrels of that 11 come out of the market, I think at best, maybe Saudi could quickly add 500,000 to 1 million barrels, but that would still leave us very short and cause prices to spike, I think, well over $125.
All right, we'll leave it there. Neil Dingman, Truist Managing Director of Energy
you.
Research. Good to see you this morning. Appreciate it. All right, and we'll be right back with a few final thoughts on markets ahead of the afternoon. Seeing some mixed action here. The major indices are off the worst of the session. And believe it or not, the NASDAQ in the green right now. We'll be right back.
Welcome back to Yahoo Finance Live. Just a few minutes until the 11 a.m. hour here on the East Coast. And actually, we've seen some interesting moves in markets with the NASDAQ now flipping into the green, although the Dow and the S&P 500 still in the red. So let's bring in Yahoo Finance's Jared Blickery, who's been watching all of the market action so far on this trading session. Jared, what are you watching? I understand Bitcoin and some Bitcoin adjacent stocks on the move today as well.
That's right. Hopefully we've got some time for that in a second, but let me just get to the Wi-Fi interactive here. Let me just chart what's been going on since we started seeing the market move off of these Russian headlines. And in fact, that's going to be a 12-day period, and we'll get to that in a second, it looks like. But here's a year-to-date view, and I want to put some candlesticks on here so we can just kind of get our bearings. Now, we had a nice two-day rally last Thursday and Friday, and as I was saying, in the middle of the day into the close that we had rallied right up against potential resistance. In fact, this was a prior breakdown area, as you can see, and we're right back up against it. In fact, anything up to about, let's say, 4,500 is probably a short seller zone. So we'll have to see what comes of that. Now, when we take a look at our heat map here, it looks like we should have our sector action for the day. And in fact, we see energy, that is the biggest winner. That is up over 1.5%, like many other days this year, when we see energy as either the first sector or the last sector in our group here, followed by consumer discretionary, which really got hit over the past 10, 12 days. Also industrials and utilities, those are all in the green. Now, real estate and financials and staples, consumer staples, all in the red, about 1.7%. Those are the biggest losers in the sector action right now. And if we take a look at the NASDAQ, we can see one of the standouts here is Tesla. That's up 7%. And I was looking at some of the EV plays earlier in the day, and some of them are still in the green here. We got NIO, that's up 8%. Lucid Motors up 7%. Lee Auto, that's up 10, and Rivian 5%. So nice to see some flows back into this space that really hasn't received a lot of love this year overall. So here's the year to date. We're going to take a look at Tesla here. And actually, let me put a 1-year chart on so we can see last year's low. And in fact, trying to figure out, this is 750 in here. It looks like the market might have staged a false breakdown through there. So let's take a look at the year to date again. And in fact, that is what we are seeing. And then if we take a look at the Dow, we can see a lot of red here. It looks like Apple down 0.2%. So is Microsoft. JP Morgan down 3% though. And let's take a look at the banking sector so we can get an idea what's going on there. We're talking about the Russian influence on the European banking sector, which has been weighed down very recently, and in fact, it's been dead money for been dead money for over a decade. But finally, seeing some flows back into it with the expanding yield curve last year, but trend not necessarily continuing now. Now, JP Morgan down 3%. So is Morgan Stanley, and Citigroup off a little bit more. HSBC down 5%. Let's take a look at the yield curve and see if we can figure out what's going on here. Now, here's the 5-year T-note yield that is down about 13 basis points. That's a pretty steep sell-off that we're seeing right here. In the 10-year, that's down 11 basis points. And if you're looking for a reason why some of the growth names are doing better than some of the value names, that would be it right there. So just kind of looking here, it looks like we got to the bottom end of the trading range. So not going to make too much of this, but again, 11 basis points, kind of a serious move there for the financial sector.
Jared, how about Bitcoin?
Thought you'd never ask, man. Let's go back to the Wi-Fi Interactive, and we can chart what's been going on over the weekend. Now, Bitcoin has been struggling to stay above 40,000 and stay there. And let's see if I can get my Bitcoin. There we go, crypto heat map. And we can see it's up 3% over the trailing 24 hours. So we got a nice little pop that we're looking at right here. Let me put some candlesticks on, and we'll put a year-to-date view. And there we go. We can see after touching down and testing these lows from earlier in the year, that was late January, you can see a nice wick action in this candle here. This level was rejected. So maybe, just maybe, we have the beginning of a double bottom here, but really too early to tell to see if anything's going to come of this trend line action here. And let's take a look at our crypto stocks, and we can see a lot of green here. It looks like Mara, that's up 11%, backed up 9%, Riot Blockchain up 9%, and even not Square, Block up about 7%, but got a lot of territory to claw back here, guys.
All right, thanks so much, Jared. And again, we'll have more coverage of everything going on in Russia, Ukraine on the other side of this break. But for me and Brian, thank you for tuning in for the last 2 hours. Akiko Fujita will have you for the next 2. See you tomorrow.
Welcome to Yahoo Finance Live. We are 90 minutes into the trading day. We are seeing stocks slide here as the U.S. and Europe steps up sanctions on Russia. The Dow well off of its session lows, but still down about 260 points. The Nasdaq, though, moving in the opposite direction here, clawing its way back into positive territory, up about 47 points. Oil, meanwhile, climbing on fears of those sanctions will lead to disruptions in energy supply, with Brent crude trading above that $100 a barrel mark. Crypto bucking the trend, moving higher. Bitcoin inching back above that $40,000 handle, even as one of Ukraine's top officials call on all crypto exchanges to ban Russian users. And social media stepping in to thwart disinformation out of Russia. Facebook's Meta banning all ads from Russian state media. We've got a conversation with Meta's head of security policy. Nathaniel Gleischer is going to be joining us up ahead. But first, the very latest on the conflict between Russia and Ukraine. Talks between a Russian and Ukrainian delegation underway along Ukraine's border with Belarus in the first direct talks since the fighting began. Meanwhile, here in New York City, the UN General Assembly is meeting in a rare special session to discuss the latest Russian actions against Ukraine. The U.S. is now stepping up its sanctions this morning, imposing a ban on any transaction with Russia's central bank, a historic move that essentially freezes all of its assets in the U.S. And all of this coming as we continue to see these crippling sanctions take hold. Over the weekend, we saw the U.S. and Western allies move to cut some Russian banks out of the financial messaging system known as SWIFT. The U.S. also imposing direct sanctions on President Vladimir Putin, Foreign Minister Sergei Lavrov, and its national security team. And over in Europe, the EU has now moved to block more than half of Russia's central bank's reserves. It's also moved to impose a blanket ban on all Russian planes. That means Russian aircraft can no longer take off, land, or fly over the EU. The impact of these sanctions, we've already said, taking shape here with the Moscow exchange close for the day, the Russian ruble crashing, falling to its record level against the dollar. That prompted the Russian central bank to more than double its key interest rate from 9.5% to 20%. And we've seen those images of Russians rushing to withdraw money from their banks on concerns that some of these banks could start limiting cash withdrawals. All of this, of course, happening alongside the fights in the field here. Russian forces continuing to press into the capital of Kyiv and the second largest city of Kharkiv. We should mention the humanitarian toll continuing to take shape here. The UN reports more than 400 civilians have now been killed in Ukraine so far, while 500,000 Ukrainians, 500,000, have fled the country. There's a lot to get into this morning. I want to just bring in our first guest for the hour. We've got Charles Kupchan, Council on Foreign Relations Senior Fellow. And Charles, we spoke to you a few weeks ago in the anticipation of the fight escalating in the way we have seen play out over the last several days. We're now starting to see these sanctions really start to cripple the Russian economy. What are your thoughts?
Well, the Russian advance has not gone as smoothly as the Russians had hoped. The Ukrainian military is putting up a fierce fight. Sadly, I don't think that the Ukrainians will be able to block the Russians. We've seen armored columns now coming in to the country. So my guess is that we will see Kharkiv, Kyiv, and perhaps other cities fall in the coming days. Putin knew that he was going to get hit hard with sanctions. These are very significant sanctions, going after Putin and his foreign minister, Lavrov, taking some banks off SWIFT, freezing the assets of the central bank. I don't think it's going to get Putin to back down, in part because he knew this was coming, in part because he's got links to China that can help him weather the sanctions. But yeah, we are now in a full-blown crisis. As you put it, 20% interest rates in Russia. But I think we're going to have to wait and see where this military conflict goes. Putin does not seem to me to be the kind of person who is ready to say, "Uncle, this is hurting my economy. Let's make a deal."
Charles, to that point, the hope is that these sanctions, as crippling as they are to the Russian economy, will essentially move to destabilize the economy and force President Putin's hand. The fear on the other side is, of course, this could escalate the tactics on the Russian side. We've already gotten reports this morning about civilian neighborhoods getting attacked in Kharkiv. How concerned are you that this could really escalate on the military front?
Well, I think the biggest impact on the sanctions front is not putting pressure on Putin and making him back down. In my mind, the bigger concern for Putin is how does this play domestically? And there's no question that many Russians are skeptical of what he's done. You've seen protests in the street. Russians know that their troops are killing their Ukrainian brethren. So I think the issue here is, will over time we begin to see the beginning of the end of the Putin regime? But on the ground in Kyiv, I don't think we're going to see much pullback. I think Putin wants to topple the regime. He wants to take control of at least eastern Ukraine, perhaps more than that, all the way over to the west of the country, to the Polish border. That having been said, I think the chances of escalation are relatively low. The big concern in my mind is that weapons that the US and its allies are now trying to get to the Ukrainians are coming through Poland, Romania, other countries that border Ukraine. Is it possible that the Russians would take a strike, an airstrike, artillery against these incoming weapons? That could lead to a wider war because it would constitute an attack on NATO.
And I know, Charles, you served as special assistant to the president for European affairs, we should say, under President Obama. So you're quite familiar with the security alliance. It feels like there is a fundamental rethink that's happening over in Europe on the defenses that now need to be put in place. We saw Germany now raise its budget beyond that 2% of GDP for defenses specifically. How do you see those pieces moving in the days ahead?
Well, I think the strongest suit of the United States is not the sanctions. It's not more troops on the eastern flank of NATO. It's solidarity. And so far, we have seen the US and its allies, not just in Europe, but around the world, standing shoulder to shoulder, confronting Putin with a united front. And that speaks volumes. It says to me that Putin probably miscalculated here, and he has taken a bite that in the longer run may well not pay off for him. Yes, you're right to say that this is a game changer for Europe. To have Germany talk about increasing defense spending by $100 billion, going above 2% of GDP, nobody ever thought that would happen. They were around 1.4% of GDP and dragging their feet. Germans are confronting the prospect that they now live in a dangerous world where traditional geopolitics rules. That's going to mean more defense spending, a political consensus behind putting more troops on the ground, putting more air assets on NATO's eastern flank. I think what we're looking at here is Cold War 2.0 and the remilitarization of the border between NATO and Russia.
And Charles, finally, with President Putin and Russia really quartered on multiple fronts with these economic sanctions in place, there's a question of who Russia can now turn to. I mean, we've seen China, at least publicly, a little hesitant to just throw their weight fully behind Russia. But to what extent can China step in, at least on the financial front, to support Russia? To what extent do you think China is willing to take on that role?
I think one of the reasons that Putin moved when he did was support from China. That emboldens him. It gives him not just political cover, but economic cover, because linkages between Russia and China on the energy front, on the financial front, have been deepening steadily since 2014, when the Russians first attacked Ukraine, grabbed Crimea. I think it's difficult to say where the Chinese are going to go. They've been flip-flopping. Sometimes they make statements that say, we stand by the territorial integrity and sovereignty of all nations, i.e., we oppose this. Other times they seem to be backing Putin. My best guess is that they will stay on the fence, but generally stand by their ally, Putin. because they see Russia as pushing back against an American-dominated international system that they don't like. But stay tuned. This is a work in progress. The decisions that the Chinese leadership make will have a big impact on whether or not Putin stays the course and whether or not Putin ends up suffering politically for what I think is a gross miscalculation and a war that is not going to serve his interests well.
Well, Charles, it's good to have you back on the show today to get your insights. Charles Kupchan, Council on Foreign Relations Senior Fellow. Let's turn our attention back to the market action now, because we have seen a bit of a slip picture here emerge with the Dow down about more than 200 points, but the Nasdaq clawing back into positive territory. Let's bring in Douglas Boneparth. He's Bonafide Wealth President. Douglas, you know, we've seen kind of these swings happen in the lead up to this invasion. I mean, I'm curious, first of all, what you see in terms of the market move so far. The Dow halving the losses here. We're talking about, it was down more than 400 points earlier, down about 200 here, but the Nasdaq now in positive territory. What's driving the moves there, you think?
Yeah, I think over the last 2 years, nothing should surprise you anymore. It's been wild to see dramatic, if not historical, swings out of major economic and now geopolitical events taking place. I think on the technology side, there's probably some sentiment that things have been oversold, and to re-examine whether or not being in a bear market for tech is something or a place that we should be. I'm not surprised by the broader U.S. indices struggling to turn positive. It's really hard to make an argument that on two fronts here, one, what's happening with Russia and Ukraine, and what we need to deal with our own economy domestically in terms of rising rates and inflation pressure. But it is quite amazing to see what we had on Friday turn green. And look, you know, again, if we finish the day positive on the S&P or the Dow, it's kind of at a point where it should be surprising, right? But we've seen crazier. That's the state of play right now for the markets. It's really a guessing game, and up is down and down is up half the time.
Yeah, I think that pretty much, speaks to what we've seen so far this year, which is that, yes, we've seen a huge swing here, but we've seen worse. When we talk about where things stand right now, in terms of the equity space, what are you advising your clients? Are you saying, more clients should be moving, sort of holding cash, just staying on the sidelines here to ride out at least the geopolitical volatility? Is this an opportunity to get in? How are you thinking in terms of strategy?
Sure. So I know that the most important thing for my clients to do is stick to their long-term strategy. I have the good fortune of dealing with primarily younger clientele between the late 20s to early 40s, where a lot of the money is long-term money, so they can withstand volatility. This isn't the first time that they've had to go into markets that go up and down pretty dramatically. And I would spend more time focusing on when the opportunities are to put fresh dollars to work, whether there are dramatic drawdowns. If you look to technology, there's been significant drawdowns across the board to the tune of 80 and 90% with some companies. But again, the broader index down 20%. And even when you look to large cap US stocks, you see, that 10% correction where, there are opportunities to nibble here as well. I would prefer not to see more dramatic drawdowns. But when we do, that's the opportunity to work with clients on figuring out a strategic way to enter the market, whether that's by reducing longer-term dollar cost average strategies. So if they're averaging in over 12 months, maybe to shorten that to 6 or less. We can talk about taking their long-term allocations and whether or not it makes sense to become more risk-on. So taking a aggressive 80-20 investor and bringing them to 90-10 or 100% equities. Again, I don't know if right now is the time to be shortening these strategies or putting significantly more dollars to work, as it is to just kind of see when greater opportunities present themselves. But those are the conversations having with clients. Again, the most important thing is to stick to your strategy. We know that investors who are disciplined and stick to their strategies are the ones that more likely win in the end. So panic selling doesn't exist here. We don't want that to exist. And we do look for opportunities if things become more dramatically cheaper in terms of equity prices.
What about exposure to crypto? I mean, you mentioned you work with a lot of younger investors as well. We're seeing it kind of diverge from equities today with Bitcoin back above that $40,000 handle. There seems to be two schools of thought here. On the one hand, you've got those calls for crypto exchanges to ban Russian users, and then others saying that, well, this could be an opportunity for crypto at a time really to evade sanctions.
Yeah, so I'm a big proponent of crypto. My practice deals with a lot of clients and prospects coming in with questions around this, if not having exposure. I would argue 50, maybe a little bit more percent of the practice has some kind of exposure without us even, bringing it up from an educational standpoint. The crypto narrative is very intriguing. At first, digital assets sold off in tandem with equities, once again showing that investors, it's not as uncorrelated to riskier assets, equities, as it's made out to be. But as they say, we're still early, and I think it's early into the indoctrination of crypto assets, your more developed assets like Bitcoin and Ethereum, for example. So what we're seeing today, interestingly enough, and really just the last few hours is that bounce is particularly in Bitcoin, showing that this might be a good store of value. Look, the argument of you want to run out of a country with a bag of gold bricks, or do you want to have a thumb drive with store of value? Most people are going to say, hey, I'd rather have a thumb drive with actual value that can help me survive than a sack full of heavy metal. I think there's a lot of merit to that in light of what we're seeing in conflict. And then the flip side is, could we see governments like Russia use cryptocurrency as a way to work around sanctions? So it cuts both ways. But I'm very intrigued to see what comes out of the cryptocurrency narrative in light of seeing a war. So a lot of things are going to be proven either right or wrong here.
Doug Boneparth, it's good to have you on today, Bonafide Wealth President. Well, moving back to the equity space here, one stock that is moving to the downside, it is seeing a huge slide. That chart pretty much says it all. Lordstown Motors now down about 16.5%, despite the company spending less than expected in the fourth quarter. The electric pickup truck maker posted an adjusted loss per share of 42 cents on net income loss of $81 million. But the automaker's sales goals are still far behind initial expectations, with Lordstown expecting to produce and sell roughly 3,000 vehicles through the next year. Well, coming up, Russia builds up its financial defenses. We'll explain why the country's central bank is hiking its key interest rate to 20%. That is the highest level we've seen in nearly 20 years as the U.S. escalates sanctions. That's up ahead. The Russian ruble continues to slide as more sanctions, Western sanctions, we should say, continue to take shape. The currency fell to its lowest level against the dollar, prompting the Russian central bank to more than double its key interest rate from 9.5% to 20%. We also saw the Treasury Department this morning ban all transactions with the Russian central bank, essentially freezing all assets here in the U.S. I want to bring in our very own Brian Chung to kind of break this all down for us. Brian, it's not often we talk about the Russian central bank, but walk us through the significance of the steps that we have seen play out over the last few days and what it ultimately means for the central bank in Russia.
Yeah, Kiko, all the sanctions mean that what was a geopolitical story is also now a financial story. And everything really began with the developments over the weekend that the United States, the European Union, and the United Kingdom were basically in agreement to ban Russia from SWIFT. Again, we did that Yahoo U last Friday, you recall, where we talked about the telecommunications channel of SWIFT, which allows for the communication of payments around the world between banks that might be in one country and then a receiver that's in another country. Obviously, cutting them off from SWIFT would be detrimental to their ability to settle any sort of transactions that have to do with their exports of, for example, oil and natural gas. And then we got the announcement of the sanctions directly onto the central bank of Russia itself. And that inhibits their ability to deploy international reserves, and that prevents them from being able to defend the Russian ruble. And that's a big reason why we saw the central bank of Russia earlier today announce that they were sharply raising interest rates from 9.5% to 20%. You don't see moves like this in one single meeting. All of this is going to be to handle inflation that could be coming down the pike. It's not necessarily the same type of inflation that we're seeing here in the United States. It could be much more dramatic because when you consider that essentially what this is doing is closing off Russia to the world. They'll have to rely on their own domestic goods and services, which could get very pricey given the fact that the ruble is already getting weaker against the US dollar. We saw a single dollar is now getting you about 98 Russian rubles, whereas before the crisis, it was getting you about 80 rubles. Zoltan Posar over at Credit Suisse, an expert on all of this, saying that this could increase a crunch on US dollars around the world, which could incentivize perhaps the Federal Reserve to get more aggressive on the US dollar swap lines that it and other central banks are offering around the world. So again, not necessarily a financial crisis that we should be worried about, but very much a changing picture day to day on exactly what's going on as these sanctions do continue to ratchet up, Akiko.
Okay, Brian, stay right there. I want to bring in Julia Friedlander. She's Atlantic Council Economic Statecraft Initiative Director. And Julia, let me just ask you this, because your team over at the Geoeconomic Center put out a pretty interesting graphic here about where the central bank's reserves are. And I wonder, when you think about those sanctions that Brian just laid out against the Central Bank of Russia, how significant are those steps when you consider that roughly 20% of their foreign reserves are still held in China, which have not necessarily joined in on these sanctions?
Thank you, Kiko. And I think I just want to pick up on something Brian just said, that this is a geopolitical crisis that has become a financial crisis, not necessarily a broad spread one, but certainly in Russia. This is an unprecedented measure for the US and its closest allies to take. I was thinking about the history of sanctions on Iran and Venezuela and other so-called maximum pressure campaigns. And this is unprecedented in scope. And so I think what you're seeing with the 20% interest rates over the weekend was an attempt to prop up the ruble. But again, if your foreign exchange reserves are frozen abroad, who's going to engage in those purchases? So, I mean, yes, we put out a graphic this weekend showing that the U.S. only holds about 8.5% of those reserves. The Russians, of course, have been trying to de-dollarize since 2014, but that combined with the impact of freezing those assets in the European Union, in the UK, in Japan, are going to have a massive impact on the quote unquote fortress Russia, which is what it has attempted to use to shield the economy from traditional sanctions, such as blockings on the banks, as we saw last week.
Hey, Julia, it's Brian Chung here. I mean, this is an interesting point that you bring up, because really we're at this apex point where it seems like the sanctions are substantial enough that people are talking about a possible collapse of the Russian banking system. I mean, that makes sense given the fact that it's been pretty hard on the likes of VEB, VTB, Sberbank in Russia. Do you see any possibility of a spillover here? This isn't necessarily an unintended consequence. We know that's the point of the sanctions here, but some sort of financial crisis globally that could be birthed out of the Russian economy tanking.
Well, thank you. I mean, of course, it's dangerous to speculate about stuff like this, but Russia is a G20 economy. It has swap lines with the Fed. And so this is an unprecedented move to essentially vaporize the foreign reserve holdings of a G20 economy overnight. I do think that there are going to be potential spillovers in global foreign exchanges, as you mentioned, even potentially if Russia faces a sort of default scenario, bottoming out of the economy in the coming days or weeks ahead, that is, of course, going to affect global markets. This is an unprecedented measure. I keep saying unprecedented because I can't think of a better term. We don't really know what the impacts are going to be. We don't know the full dispensation of the foreign exchange reserves. We don't exactly know how Russia is going to react. And so we're gambling against the clock. This is setting up a financial clock against a military clock. Think about this. We're trying to essentially remove the ability to finance a war before the war can be completed. And I can't think of any time that this sort of the financial levers of sanctions have been playing out in such real time, again, over days.
Yeah, can you talk about the unprecedented nature of all of this? Because I think people who are watching this are not necessarily aware of how remarkable it is for the United States to sanction the central bank in another country, especially one that's in the G20, and not have them allow themselves to change their reserves to defend their own currency. I mean, from a geopolitical standpoint, I mean, what does this say about the types of tools that we have in the modern era when we see conflicts like this?
Well, it's not the first time that we have used similar tools like this. It's just the first time we've used it on a country like Russia. Think about Venezuela, think about Iran. We have taken measures against the central banks. But again, these are on smaller economies, not globally integrated. And so what we're seeing here is a measure against one of the major global players in the economy. So I don't really know how this is going to play out, but it really does show that coordination between the US and its closest allies can really take a hatchet to anything they want to. I don't know how it's going to affect the actual situation on the ground. And I think what we're seeing here is that we're pulling all of the stops in the gamble to stop a war. And if it doesn't stop the war, it's going to raise long-term questions about what do sanctions do anyway.
Julia, there's one additional lever here in terms of economic sanctions the U.S. and its allies haven't necessarily pulled, and that is going directly after oil and gas exports. And the U.S. has made it pretty clear, at least President Biden has said that he doesn't necessarily want to take action without thinking about the impact on European allies. If in fact it comes to that, how crippling would it be to some of the major economies over in Europe, like Germany?
I think we're trying to figure that out right now, right? These are calculations about strategic reserves, about what kind of LNG exports we could mobilize immediately, either from the US or from Qatar or from other global providers. We are reaching the end of the winter in Europe. And most calculus says that the sort of long heating period in Europe, there are reserves in Europe to get us through that. But of course, that's not heating personal homes is not the only thing that we need energy for. Major industrial producers need cheap gas, need cheap energy to be able to keep prices down. So again, there is a long-term impact here if we do touch, I think, what is the third rail in this crisis, which is energy. But it's a third rail not only for the United States and its allies, because we need the oil, we need the gas. Again, let's not forget that the U.S. does import a large chunk of crude from Russia after the Venezuela crisis, but also a question of this is Russia's last chance to reap something to prop up their economy. Again, those oil and gas revenues are going to be crucial to really preventing a bottoming out.
Yeah, and Julie, when you talk about the oil and gas, I mean, that's interesting as we kind of wait to see the fine print on exactly how this SWIFT ban is going to be done, because it seems like there could be a carve out to allow the flow of those transactions to still happen, even if Russia's banks are unplugged essentially from that messaging network. How important is that SWIFT unplugging? Because there's been some chatter about whether or not there could be some sort of de-dollarization implications there, as maybe Russia, in the absence of being able to turn to US dollar denominated payments, turns to the digital yuan or maybe cryptocurrencies. I mean, is that a little bit too much of a stretch? What do you see as the ripple effects of that?
I think it might be a stretch in the time frame of this crisis. Of course, these are long-term considerations we have about alternative messaging systems, alternative payment systems, the digital yuan, but we are still operating in the lifetime of this crisis in an overwhelmingly dollarized economy. So I think we have, overestimated the effect of SWIFT itself. Now, we did see the US and its close partners were de-SWIFT select Russian banks, and these are the ones that were already sanctioned. That was largely in response to Ukrainian requests. There was political pressure to do this. So I think we because the SWIFT is a messaging system, it doesn't actually block any transactions. We are looking at higher operating costs, higher transaction costs, things taking a long time for Russia and for payments to be completed if there's a SWIFT cutoff. But again, you can always create special channels for these things to be completed. So we blew SWIFT beyond what it actually means. Now, of course, because we did that, it has a big symbolic effect. And I think that some of our European partners were worried that Russia might see a delay in those payments as a result of a SWIFT cutoff, as the preempting that we had initially touched that third rail on energy markets. And as a result of that, they would consider turning off the taps. So it was a little bit of a goose chase over something that ultimately, just as a matter of purpose, as a matter of what SWIFT is, it doesn't really matter all that much.
Julia, it's good to get your perspective today. Julia Friedlander, Atlantic Council Economic Statecraft Initiative Director, and our thanks, as always, to Brian Chung. Well, coming up, masks off. We will explain the latest COVID-19 guideline updates from the CDC, as the agency says 70% of Americans no longer need to wear masks inside. Plus, we are continuing to watch the Dow amid the ongoing conflict in Ukraine. We've seen it come off of its lows, now down about 115 points. We'll be right back. With COVID-19 hospitalizations declining across the country, the CDC is now revisiting its guidelines on mask wearing to combat the spread of the virus. The agency says with roughly 70% of the U.S. now considered low or medium risk, for contracting COVID, indoor masking is no longer necessary in most parts of the country. Let's bring in Yahoo Finance's Anjali Kamlani, who's following this story for us. Anjali, where does that put things right now in terms of the precautions or at least the restrictions that remain?
Well, Kiko, we know that the CDC rolled out this new guidance on Friday, really giving the country a reprieve, according to the CDC director. So let's walk through what that means. Right now, that affects, as you mentioned, 70% of the U.S. population now placed in low or medium areas of transmission. That affects about 55% of counties. We know that the definition has now changed for what low and medium is, and that's really the core of the changes is these changing metrics. Low now really is defined by low strain or potential strain on a hospital system as well as healthcare workers and low impact to those systems, whereas in high is the complete opposite, areas where we saw overflowing, strains and overflowing patients in these ERs. That's really where the concern is still for high areas of transmission versus just the case numbers, which is what had been defined before. Now, when to mask is the new sort of guidance that came out. Low areas of transmission, not so much a concern, whereas in medium areas, really asking a healthcare provider for guidance is the new guidance from the CDC. And that really relies on the need for those who are, say, immunocompromised or have other vulnerabilities, and their needs to mask would be different from, say, your average person. Meanwhile, high areas, of course, is where indoor masking is really necessary when you have those high levels of transmission, as we've seen during those surges, is when you give the virus an opportunity to replicate faster. The CDC director saying in all of this that this is really to put really give the U.S. a reprieve as we have just come off the surge, saying, quote, none of us know what the future may hold for us or for this virus. We want to give people a break from things like mask wearing when our levels are low, and then have the ability to reach for them again should things get worse in the future, end quote. And that is really to show that this could potentially arise again. We could see this guidance change. We've seen experts say that every 4 to 5 months or so is when we see a new variant of concern. So that's the timeline we should be watching for. But we've already seen the impacts of this, of course, in New York. We saw in the news that the mayor is rolling out a reduction of the mask mandates in schools, as well as rolling back those vaccine passports for restaurants. We also know that Amazon has turned masking into optional for its workers. So that's where things stand right now. Back to you.
Yeah, a lot of people excited about these changes after so many restrictions in place over the last 2 years. Anjali, thanks so much for that. Coming up, oil is surging ahead here as more sanctions are unleashed on Russia. We've got the latest developments as current exemptions allow the West to continue purchasing Russian gas and oil. We'll be right back. had issues with this though.
We're troubleshooting it. We're working on it.
Okay, all right. Welcome back to Yahoo Finance Live. We are continuing to see stocks paring back its losses, with the Dow now down 178 points. The S&P 500 down 7. The Nasdaq, the only one in positive territory, up about 90 points. We started off the day with some significant losses here, but we've seen it claw back as investors continue to try and assess the latest sanctions on Russia and the impact to the broader economy. We've got much more to come here on Yahoo Finance Live. We'll be right back. Yeah, see, you sound fine. You sound fine right there.
Okay.
Welcome back to Yahoo Finance Live. We are seeing the gains for Bitcoin accelerating in the session right now, well above that $41,000 handle. This comes amid reports that Binance, one of the world's largest crypto exchanges, will not be blocking accounts of Russian users despite calls to do so. Ukrainian Vice Prime Minister tweeting yesterday, "I'm asking all major crypto exchanges to block addresses of Russian users. It is crucial to freeze not only the addresses linked to Russian and Belarusian politicians, but also to sabotage ordinary users." Let's bring in Yahoo Finance's David Hollerith, who's tracking the price action for us today. And David, I feel like it was just Friday we were talking about Bitcoin moving in tandem with equities, but today we're seeing a bit of a divergence.
Yeah, Kiko, I guess we have to sort of pay attention to the intraday performance to see what happens. Sometimes we'll see instances where cryptocurrency will lead the equities markets. So that could be something that's going on here. It's kind of tough to discern sort of given all the developments around the Ukrainian conflict and how that seems to be playing into the price right now, it's sort of tough to decipher what's happening. But, I think we'll probably see more of a lead. I've actually spoken to a number of analysts, and they've had a very mixed reception as to sort of what the price performance for cryptocurrencies, especially Bitcoin, could be this week. Obviously, there's a lot of geopolitical uncertainty. And, I think the thing that shouldn't be forgotten is that, a lot of investors are still thinking about the Federal Reserve and other central banks and whether or not they will actually hike rates this month and as of next week. And obviously, what happens with economic sanctions against Russia will play into that. So it's a little bit of it's a matrix we're looking at right now, and sort of a lot of news reports coming out that are, that kind of diverge about what the scenario could be. So it's very choppy, we'll say. But it is sort of interesting. Before the invasion happened about a week ago, the Bitcoin price was actually it was down to where it currently is by about 2%. So in terms of volatility, it has been relatively flat. Now we're seeing a little bit of a rise over the $40,000 mark, which is sort of a psychological touchstone for Bitcoin. But will really be interesting to see. An analyst I spoke to said that the range sort of varies from $37,000 to $43,000 in terms of what they're expecting. So again, that's just one analyst's opinion, but it's a very wide range. And, we're just sort of watching it play out right now, paying attention to the geopolitical developments.
David, well, what about this thinking that the sanctions could actually accelerate adoption, essentially more and more users turning to crypto, Bitcoin, to try and evade some of those restrictions that are now in place?
Yeah, there's a lot of opinions about this right now, Akiko, and it still remains to be seen because we've never seen cryptocurrency sort of we've never seen economic sanctions run into sort of the crypto sector this much. But that being said, U.S. regulators have placed sanctions on cryptocurrency exchanges in the past that have been deemed illicit or to have illicit activity. So to actually put some sort of framework like this into place is actually very possible. Now, the question is that whether setting sanctions on these large centralized exchanges will actually change how commerce can work in crypto, given that there's decentralized finance, which obviously it has a lot of, all of the applications are essentially, permissionless is what they say, meaning that there isn't necessarily a entity who's going to pick up the phone and answer when a regulator calls. So, there's a lot of questions that are sort of still out there. But I think there is a point to be made about how there's definitely a lot of stories, and I'm getting anecdotally on both sides of this conflict about how cryptocurrency is being used to, help either side. So it's very wide ranging right now. But I think that one thing that we should try and remember is that Russia is a very large world power, and the idea that moving to using cryptocurrencies immediately to sort of circumvent U.S. sanctions, I think there's no question that could happen, and it will happen, but how much that will actually play a role in terms of daily commerce and payments, I think it originally, when I've sort of heard those announcements, was slightly overblown.
Yeah, and I guess the question is also what the U.S. can do to circumvent some of those transactions if, in fact, it does move in that direction. David, I know you'll keep a close watch on that. Thanks so much for bringing us that story. Coming up on the other side, we are continuing to watch oil prices here pushing higher as more sanctions are unleashed on Russia. We've got the latest developments as current exemptions allow the West to continue purchasing Russian gas and oil. Welcome back to Yahoo Finance Live. We're getting in some powerful video here released this morning by the Ukrainian Ministry of Internal Affairs as fighting continues between Russia and Ukraine. Villagers in the small town of Koryukivka, Ukraine, standing in the road as a Russian tank approaches. You can see as this crowd stands together to block the tank from advancing. Another video later captured what looked like the same vehicle driving backwards out of the area. So we're continuing to see the standoff between sort of the Ukrainian civilian forces, we should almost say, although in this case, these are just civilians standing in the way of Russian tanks. Turning our attention back to the markets, we've been continuing to watch some of those oil moves pushing higher today on fears of further disruption in energy supply as the West steps up its sanctions against Russia. Now you're seeing Brent crude coming off of its highs, trading below that $100 a barrel mark. We've also heard from a number of big oil majors reducing their exposure, pulling back from Russia altogether. BP, one of those, BP CEO Bernard Looney putting out a statement saying that Russia's military invasion has caused him to fundamentally rethink BP's position with Rosneft. And we know the company has now divested roughly 20% of its stake there. Let's bring in Troy Vincent, DTN senior market analyst. And Troy, I know you've been watching some of those oil moves closely. Oil and gas exports have not been sanctioned just yet, but how much of the sanctions we've already seen are really playing in to the moves we're seeing today?
Well, we had both a move, in the weeks prior to the war even beginning, kind of pricing in some of this potential risk that the market was looking out, along the horizon potentially. But then after the invasion from Russia actually started, we saw prices, this kind of knee-jerk reaction higher. And we're still obviously, holding around that $100 level in Brent, but down from the intraday highs that we saw immediately after the invasion. And I think that, when you start to think about the impact of potential sanctions, clearly there's a reason, that gas and oil have been carved out of whether it's the sanctions and the moves on SWIFT or just the fact that there have been no direct sanctions against oil and gas. It does speak to that mutual dependency, both of the Russian government, given that oil accounts for about half of their budget, the oil revenues, and also because the rest of Europe depends heavily not only on their oil, but more heavily on their natural gas flows and to a lesser extent also coal. So yes, the higher prices, as I said, you saw this knee-jerk reaction, but I think the more that we, this last weekend, for example, we had just so many sanctions coming that it's hard really to gather what the ultimate impact of those are. And so as a result, whether or not you have these direct sanctions on oil and gas doesn't matter all that much at this point, because people are just leery. They just want to stay away from that trade if possible. And to that degree, that's why we've seen Russian Urals crude, for example, move to such a massive discount to global benchmarks.
Let's separate the oil and gas issues here. Specifically on gas, we know how reliant countries like Germany are on Russian exports. There's some talk here in the U.S. about whether, in fact, those LNG exports to Europe could be accelerated in some way to fill that void if it does come down to sanctions directly on the sector. Number one, what does that timeline look like? And number two, what does that mean for prices?
The timeline on the LNG side is very similar to the oil side, in that, the U.S. Just does not have the capability to ramp up production at a rapid enough pace that would offset Russian supplies, into Europe. Furthermore, one of the bigger problems is merely just infrastructure. One of the most important announcements that we heard over the weekend came from the German chancellor and vice chancellor, and one of the major pieces of that discussion was their vision now to build out 2 LNG terminals, as well as to expand natural gas storage in Germany. And these are really key points, because no matter how much the U.S. or any other global producer of LNG can export, there are also constraints on the import side, and that's more important than ever as we look through some kind of potential protracted and maybe year or multi-year problem for gas supplies from Russia into Europe.
On the oil side of things, you've got negotiations around the Iran nuclear deal resuming in Vienna this week. I mean, we're talking about a direct standoff here between the U.S., Europe, Russia, and then Iran now in the mix. How optimistic are you that that gets resolved? And what does that ultimately mean for the amount of barrels that come online at a time when there's concerns about supply constraints because of what's playing out in Russia?
So I think the U.S. and the EU clearly have some extra incentive right now, right? To given what's going on in Russia, and I think that they would certainly like to apply more pressure to the Russian oil and gas sector if there wasn't such mutual dependence between Russia and the EU. So I think they have more incentive now than ever potentially, right, to try to strike a deal with Iran. That said, even with Iranian barrels, if they could return, if the sanctions were lifted today, for example, they would start really to pull from inventories, from floating storage, to try to push as much of their crude on the market at these decade high prices, and take advantage of that. However, once again, it's really just not enough to say fully offset losses if, in fact, you were to see sanctions on oil flows from Russia. So just to put in perspective, you'd likely only see about 1 million barrels per day potential increase in production and exports out of Iran this year. And once again, that's something that's going to take months. It's not something that could happen, with a flip of a switch.
Troy Vincent, DTN Senior Market Analyst. Good to have you back on the show. Appreciate you stopping by. Well, coming up on the other side, talks between Russia and Ukraine. Here, for the first time, those two sides meeting near the border with Belarus in the first direct talks since the fighting began. Former U.S. ambassador to Ukraine is going to be joining us next to explain how the Biden administration could have done more before the invasion took place. That's next. Welcome back to Yahoo Finance Live. We are continuing to see the market pare back some of those losses we saw early on in this session, with the S&P 500 now pretty much flat. And the NASDAQ in positive territory, up 90 points. The Dow, the only one down still about 125 points. Let's bring in Yahoo Finance's Inez Frey, who's tracking the market action for us this morning. Inez, quite a reversal in the session.
Yeah, that's right, Akiko, especially because earlier this morning we had seen the Dow down 500 points. Well, it started with the Russell 2000 that flipped into green territory first. You can see the Russell 2000 on our screen, the small caps index up 0.7% right now. You've got the NASDAQ that also flipped into green, up 0.6%. I do want to mention the 10-year Treasury note because that's at its lowest level in nearly a month, down about 11 basis points at 1.88%. Also, looking at the sector action, we are seeing energy stocks that are in the green, followed by consumer discretionary. Over on the NASDAQ 100, we are watching, look, the mega caps on the left hand of the screen, all in green territory now. And Tesla has been the outperformer since this morning when it opened up in the green, up more than 7%. In fact, Tesla has been leading the electric vehicle stocks higher. You can see on the right hand of the screen here on our EV chart, all of these pure electric vehicle stocks, which are higher. Lucid, by the way, which will be reporting its quarterly results today after the close, up more than 8%. Also want to mention the software stocks. We've been seeing some green on the screen here as well, especially these cybersecurity firms. And we have seen this trend since last Thursday when we saw these cybersecurity names go higher. You're looking at CrowdStrike, which is higher, Palo Alto Networks. In fact, let me pull up a 3-day chart. You can see quite a bit of green over those sessions. And then looking at the travel space, we have been watching declines in the airline names. A lot going on in this space. You've got Europe, which closed its airspace to Russian carriers. And then in retaliation, Russia banned the entire EU and others from using its airspace. And Russia is key, especially for some airlines which use that Europe to Asia route, which use the Russian airspace. So you've got in Europe, you've got British Airways, or the parent of British Airways, IAG, which is lower, Deutsche Lufthansa also lower, and Air France, KLM lower as well. Akiko?
Okay, and as for Ray, keeping a close watch on the market action today. Thanks so much for that. Well, the U.S. is continuing to step up its sanctions this morning, imposing a ban on any transaction with Russia's central bank, freezing all of its assets in the U.S. This coming after the administration over the weekend, along with its Western allies, moved to cut some Russian banks out of the financial messaging system known as SWIFT. Our next guest, though, has been critical of President Biden's response, saying the administration should have sent weapons to Ukraine last year. Let's bring in John Herbst. He's Atlantic Council Eurasia Center Senior Director and former U.S. Ambassador to Ukraine. Ambassador, it's good to talk to you today. Talk to me about the response that you have seen so far in the U.S. and where you think the Biden administration has not necessarily stepped up.
Look, compared to any previous administration responding to Kremlin aggression, the Biden administration has done very well, but that's a low bar. So they outlined a 3-part response to a Russian invasion: additional weapons to Ukraine, beefing up NATO forces in the east, and major sanctions. They have followed through on all these things, but late. Point of fact, Russia had a dress rehearsal for this invasion last spring. At the time, the administration offered a very similar response as now. But after Moscow withdrew from the border last spring, the administration did not send those weapons to Ukraine. That was a serious mistake. Also, in connection with this crisis, in the fall, when the Russians began to build up, they said they would do these 3 things, but only after an invasion. They decided about 3 or 4 weeks ago to send the weapons now. So most of the weapons have not gotten there pre-invasion. And that's an error. And the same with the plus-up of our NATO allies in the East. They only decided 3 or 4 weeks ago to do this. This should have been done months ago. And that would have been a more effective deterrence. So I think the administration needs to be more proactive.
With that said, we are seeing the ball move on that front. You've obviously got the U.S. Providing defenses to Ukraine. Now you've got the EU taking a historic step here in buying up and then sending to Ukraine specifically military equipment. How effective do you think that can be at this point in the fight?
This is absolutely huge news. You know, the United States has always been, compared to, say, Germany or France or Italy, the most forward-looking and most strongest in pushing back against Russian aggression. The fact that now that Germany has made this decision to send Stingers, which are anti-aircraft missiles, and Javelins, which are anti-tank missiles, to Ukraine is a turnaround. The fact that Germany is now willing to spend over 2% of its economy on defense is a turnaround. Major, major blows to the Kremlin. So this is highly, highly significant.
We've seen this play out in places like Kiev as well as Kharkiv. The Russian military, which has the tanks and the equipment, sort of going face to face with the Ukrainian forces, really unmatched in many ways on will on the Ukrainian side. How concerned are you that President Putin, not having been able to advance as quickly as expected, resorts to more aggressive tactics? And what do you think that looks like?
Well, we know what it looks like because they did this in Chechnya, when they basically carpet bombed the city of Grozny and killed thousands or even tens of thousands of civilians. They have not done that yet in Ukraine, but we may be witnessing the start. They sent multiple rockets into residential areas in Kharkiv, Ukraine's second largest city today. But it's unclear that Putin will ultimately do this because he understands that this will be very dangerous for him, not just in terms of his international image, but his image at home. Russian troops seized the Sea of Azov port of Berdyansk today, but then they were promptly surrounded by Ukrainian civilians telling them to go home. The troops did not know what to do. Images like this need to get into Russia because the Russian people want neither Russian soldiers to die in Ukraine nor Ukrainian civilians. This is a war of Putin against the people of Ukraine, not the Russian people, not even the Russian government. Senior officials in Moscow are clearly uncomfortable about Putin's attack on Ukraine.
We had the first direct talks between Russian and Ukrainian officials. Obviously, no resolution just yet, and we know the fighting's continuing. But I wonder what you think the developments over the last several days does for that conversation about how quickly or whether, in fact, Ukraine will be a part of NATO. Has that ball moved in one direction even further as a result of the Russian aggression?
Well, point of fact, NATO is not the reason why Russia is attacking Ukraine. This whole crisis began when Ukraine almost achieved a free trade agreement with the EU, and Russia forced the Ukrainian government, when Yanukovych was president, this was in 2013, to back away from that. That's what ultimately led to this crisis. So Moscow's ambitions go well beyond the EU. In fact, they go NATO, they go well beyond Ukraine. He wants to establish Kremlin influence, decisive influence in all states of the former Soviet Union, and serious influence in all states that used to belong to the Warsaw Pact. That includes 7 or 8 NATO members. Obviously, that's completely unacceptable. And Putin's had a very bad 6 days now. Not only has Ukraine stopped his advance in most places, but Germany, again, made this historic decision to send weapons to Ukraine, to establish a real defense budget, and also to sanction Russia in a serious way. So Putin has lost his influence in Western Europe as a result of this aggression. That's huge.
So from the Russian side, if you're noting, that President Putin, this hasn't been about NATO, I wonder if you think that the Europeans have shifted in their thinking about the importance of bringing Ukraine into NATO. Yes, that conversation happened many, many years ago. The thinking was that Europe was they weren't quite open to really moving Ukraine into the fold here. Does that calculation change on the European side, now knowing what Russia has done?
It hasn't changed yet. I do not rule out that changing, and perhaps in the not too distant future. Another important defeat for Putin lately is a poll in Sweden which shows that 62 or 63% of the population want to join NATO. Sweden, like Finland, are your typical or even exemplary neutral nations. But watching Moscow's very aggressive foreign policy, they want to join. And Moscow has threatened both of them if they join NATO. So again, coming back to Russia, all this demonstrates to people in Russia and to the Russian elite that Putin's foreign policy over the past week has been an absolute disaster
for Russia.
John Herbst, Atlantic Council Eurasia Center Senior Director and former U.S. Ambassador to Ukraine. It's great to have you on the show today. Appreciate the time. Well, turning our attention back to the markets, as we said, we have seen some of those losses get paired in a big way, some huge swings in the market right now, although the NASDAQ dipping back into the red. Let's bring in Diane Jaffe, TCW Group Managing Director and Senior Portfolio Manager. Diane, just give me your assessment of how we've seen the market action move in tandem with what's been playing out in Eastern Europe.
Of course, the markets have reacted very strongly in the face of this aggression in Ukraine. And last week, we saw a waterfall effect where going into Thursday, where the markets were really taking everything quite seriously in terms of even an expansion beyond Ukraine. And then there was a very strong reversal, as you know, Thursday and Friday, as your watchers know. And one of those is that the Ukrainian people, 40 million strong, have put up an amazing defense. As the ambassador said, you know, there has been a tone change, not just from Europe, but also to a degree, Russia, whether they're meaningless or not. There were some hands across the table to maybe have some kind of conversation. And importantly, for markets at home, the Fed now is got a much lower probability of being super aggressive in terms of raising rates. And you can see that there's a case to be made for companies and indices that are more US based. Like one of your colleagues pointed out, the Russell 2000 was one of the first to turn into the green this morning, mostly US based. We have a definite geographical advantages. We have a relatively strong economy. Some would say the best in many, many years. And I think that the US is the place to be right now.
So more names that don't have as much exposure internationally, but I wonder if we can broaden out again here to talk about where things stand, because I wonder if you think, when we see, given what we've seen play out over the weekend, this is now turned into an economic story, a financial story. Does that suggest further downside for the markets, regardless of where the policy goes, because there is a serious concern about a contagion effect?
Excellent points. Investors follow earnings, and fourth quarter earnings were super strong. Nearly 80% of companies outperformed on revenues and earnings. And actually, with all our issues with COVID at home, earnings expectations for the first quarter just came down a tiny bit, and actually for the rest of the year increased. Your point makes a very good sense in that, we're all watching the war, and whether it was Desert Storm or other 9/11, consumers start freezing a little bit. And I think that is why you've seen economists on the street start lowering their expectations for GDP. But it doesn't destroy the fact that the U.S. economy is super strong. Consumers and companies are in excellent shape, and it's really a question of acknowledging this issue in terms of economic impact. But how do we recover? Could be quite strong.
Diane Jaffe, TCW Group Managing Director and Senior Portfolio Manager. Thanks for joining us today. Coming up, the pressure is on for big tech companies. We're going to explain how giants like Apple, Google, and Facebook are all responding to the crisis in Ukraine. That's up ahead. Well, a top Ukrainian official is calling on big tech to step up in this fight against disinformation as we see this conflict between Russia and Ukraine play out. In a letter to Apple CEO Tim Cook, Ukraine's vice prime minister is calling on the tech giant to block the use of Apple products and services in Russia. Let's bring in Yahoo Finance's Dan Halley, who's following that story for us. And Dan, what's the response from Apple so far?
So far, we haven't seen any real response yet, Akiko, but the vice prime minister here essentially said, I appeal to you to stop supplying Apple services and products to the Russian Federation, including blocking access to the App Store. Now, that would be a big deal considering that, obviously Apple operates within Russia as it does any other country, offering things like the iPhone, like Macs, the App Store. There are some regulations that Russia puts in place to prevent Apple from offering the full suite of apps that are available in, say, the App Store here in the US. But they do regularly comply with Russia when it comes to their laws, as they'll say they comply with all local laws. So it would be interesting to see Apple make a move like this. Now, likely what you'll hear is from them, and again, they haven't responded, but based on what other tech companies have said, that if they cut off some people or they decide to cut off all of Russia, then that would be impacting people who aren't a part of this invasion or want nothing to do with it or stand against it. So it really, would be perhaps a dangerous move to do that. We've seen Facebook, Facebook's parent company, Meta, essentially say the same thing when people were talking about cutting them off.
And so on that front, Dan, I know you had a chance to speak with the head of security policy over at Meta. We saw the statement come out from the company about they are, in fact, cracking down, especially on disinformation coming out of Russia. What are the next moves they're looking at?
Yeah, I got to sit down and speak with Nathaniel Gleischer, and basically what he said was the company is seeing increased activity from hackers trying to steal accounts and spread disinformation, and groups that are stepping up their efforts to spread disinformation. Here's what he had to say.
We've identified and removed two separate campaigns. The first campaign is an influence operation, which was a group of individuals that were pretending to be legitimate journalists based in Kyiv, when in fact that's not what they were at all. They were trying to spread false narratives about making claims that the Ukrainian government was failing or that things were going well for Russia and poorly for Ukraine within the conflict. The second operation is a hacking group known as Ghostwriter, which the security community has been tracking for some time. They were targeting and taking over or attempting to take over the accounts of prominent individuals in Ukraine. Think about journalists, military personnel, and prominent figures like politicians. They would try to take over. First, they would compromise their devices and email, and then use them to hack all of their social media accounts to try to spread false narratives and disinformation. The good news here is, although we see these threat actors trying to hack into accounts, trying to spread disinformation, they're not having a lot of success. Our teams and other defender teams have been tracking these types of threats now for years, and they aren't reaching very large audiences. So for example, the influence operation had less than 5,000 followers on Facebook and Instagram. And although they were also on a number of other social media sites, YouTube, Twitter, OK, and VK, which are both Russian social media sites, their audiences were quite small there as well.
So how are these groups spreading? How large are they? How widespread are they? And I guess what kind of information are they spreading beyond just the immediate things of Russia's doing well and making advances, things like that?
So we've been tracking and enforcing against threat actors like this for some time. One of the fundamental truths of security is that the bad guys keep trying, and we know they'll keep trying. And the goal is to make them less and less effective. So as one example, the influence operation we announced yesterday is linked to an influence operation we took down about a year ago. A year ago, the operation that we removed had approximately 250,000 followers when we took them down. This operation had less than 5,000. That's a very good trend, and it reinforces the way that defenders across society are controlling these threat actors and making it harder for them to operate. In terms of, sorry.
No, I was going to say in general, how much volume are you seeing out of these kinds of things? How large are they, and are they only in Russia and Ukraine, or are they operating in other spaces as well?
We see influence operations around the world. In fact, every month we put out a public report where we detail the influence operations we've identified and taken down. Whenever we do that, we share information about how broad they are, how many followers they had, and the types of actions we've taken. We also share information with government and with our industry partners so that they can investigate and take action themselves as well. The truth is that over the past several years, we've built a team that is focused on tackling this threat and containing these threat actors. And we work with our partners across society to do that.
I guess when you look at the kind of impact that these groups can have on Meta users or users, who may not necessarily be on Meta, who may happen to see something or hear something from friends, what kind of impact can they have for a situation like this, like an actual war?
And you actually raise a very good point here, because the influence operations that we see, they don't just tackle one social media platform. They are widespread across social media platforms, and they often increasingly rely on websites that they will create to try to make themselves look more legitimate, in particular because, quite frankly, they're getting taken down so quickly off of the social media platforms that they're looking to find other places to hide. Now, their goal here is to spread disinformation, to spread divisive narratives and undermine trust in public debate. As one example, the hacking group that I mentioned, one of the pieces of content they tried to share was a video that purported to show Ukrainian soldiers surrendering and waving a white flag of surrender. This is why it's so important to find and counter these operations early. One of the biggest differences between 2016, 2018 even, is that there are now determined defender teams around society working on these threats and sharing information so that we can all take action very quickly.
The Ukrainian soldiers purporting to be, Ukrainian soldiers showing the white flag. We've seen other instances where things have been shared on the Russian side and the Ukrainian side, expected or pretending to be actual images, when in fact some of them are scenes from video games. I guess, how is Meta working to ensure that things that are posted, even if they aren't from disinformation groups or from regular people, how is Meta working to ensure that they're actually real, when we see things like that?
So we've stood up a special operations center that lets us bring together experts from across the company to move very quickly to counter these threats. But in addition, we work with third-party fact checkers. These are people who are on the ground, who have expertise in the environment, in the invasion that's happening, and in the sort of reality on the ground. They review posts, whether this is video or other pieces of content. And if they identify something as false or misleading, then we label it to make sure that people can see that clearly, and we demote it. What that means is very few people will see the post in the first place, but if they hunt for it, whether they find that on our platforms or somewhere else, they will see a label on it that very clearly indicates that it's false. And I think it's really important that people can get this information, not just that the video disappears, but that when people see it, it's labeled as false, so that if they find it somewhere else, they can see that it's been debunked.
Yeah, Kiko, he's really providing a lot of information there. And he also says that there's some groups that are trying to hack into user accounts, and basically that users in Ukraine specifically have to be on high alert that hackers don't get access to their accounts and then spread additional disinformation. So a lot of information there, though, coming out of Meta this morning.
Yeah, it's just a reminder of how layered some of these disinformation campaigns are, but fascinating to see how this is playing out. Dan, thanks so much for bringing us that interview. Coming up, President Biden gears up to give his State of the Union address tomorrow night. We're going to outline the expectations for his speech. A lot of things he has to address: the pandemic, the growing conflict in Ukraine, concerns about inflation. Rick Newman's going to break it down for us on the other side. Well, President Biden is set to give his State of the Union address tomorrow night as he struggles to shore up his approval ratings. The president certainly has a lot on his plate right now that he'll have to address. The conflict in Ukraine, concerns about inflation, of course, then the progress on the pandemic. Let's bring in our very own Rick Newman with a preview of what to expect. And Rick, we know this is part policy speech. Part of this is about appealing to Americans who are largely very pessimistic about the direction things are going in.
And we also know a lot of Americans don't even watch the speech, but it still matters. It's a primetime address, and it will reach about as many people as you can. I'm sure we're going to hear a lot about Ukraine, and Biden is going to try to reassure Americans that we're doing the right thing, that we're reacting to the Russian aggression as strongly as we can. But that is not necessarily the main thing that is on a lot of people's minds. As you pointed out, Akiko, the biggest problem for the Biden administration, without a doubt, is now inflation. And the Ukraine war may actually make that worse, because that is creating a lot of nervousness in markets about oil and natural gas supplies, which has pushed prices for those up a little bit higher. So, of course, we're seeing rising gas prices on account of those concerns. So Biden has to address those worries. And he also, I think he's going to talk a lot about that infrastructure bill he signed in November, but he has a lot of policy failures as well. The Build Back Better legislation now really seems basically dead for the year. And at the beginning of the year, there was some hope that Democrats might be able to pull together a kind of a Build Back Better light that they might be able to pass by March 1st, and President Biden might be able to crow about in his State of the Union address. And of course, they're nowhere near that at this point. So Biden has a lot of unfinished business that he's going to have to acknowledge.
And Rick, you mentioned Ukraine. I mean, we're certainly, not even a week into this conflict if we're going to talk about the day that Russia invaded Ukraine. But I wonder to what extent that has affected the president's policies. I mean, is it too soon to say? And has that helped, or you think it's going to help or hurt him?
I think one thing Biden really must do tomorrow is I think he needs to address this thing that Russia did in the last couple of days, which is supposedly put their nuclear forces on high alert. That is unnerving to anybody who heard that. What does that mean? And what can President do to assure Americans that we're safe? I mean, who thought we'd even be here 30 years after the Cold War ended? But he needs to do that. But we've also seen a preview, again, of these domestic concerns. So every time President Biden has talked about new sanctions, for example, that the U.S. and European nations and Japan and others are imposing, he has also reiterated that he is aware that rising energy and especially gasoline prices are a real pain point for Americans, and that he's trying to pursue these sanctions without raising prices here at home. So I think he will continue to try to reassure Americans about that. We're not seeing the worst case scenario for gas prices, which would be shooting above $4 and even approaching $5, but they are still creeping up as a result of what's going on overseas. So it's a tricky message for President Biden to deliver tomorrow.
Yeah, and we've heard the president talk about Americans having to brace for those price increases that are about to come.
Right.
We'll see how the messaging works tomorrow. Rick Newman, thanks so much for that. Coming up, a Russian billionaire emerges as a potential peace broker as the tensions flare up between Russia and Ukraine. That's coming up on the other side. John, not Roman. Well, Russian and Ukrainian officials have now wrapped up their first direct talks since this conflict began. Those talks playing out over at Ukraine's border with Belarus. The owner of Chelsea's football club has emerged as a potential broker for between the two countries. Russian billionaire Roman Abramovich said he has been asked by Ukraine to help support their attempts to reach a peaceful resolution with Russia. I want to bring in Yahoo Finance's Josh Schaefer, who's covering the sports angle of this. And sports certainly not immune from this conflict, but let's start specifically with what's playing out with Chelsea.
Yeah, so Chelsea owner Roman Abramovich, a Russian, announced on Saturday over the weekend that he'd be giving the trustees of Chelsea Charitable Foundation the stewardship and care of Chelsea FC. So he's kind of taking a step back, at least publicly, from his involvement in Chelsea. Of course, he's still financially implicated there, and what Chelsea does still matters to him. But this is a club that's obviously huge. It's one of the biggest football clubs in the world. Forbes has it estimated at about $3.2 billion. And so there's also reporting that he will be engaging in helping Ukraine in these negotiations with Russia. And it seems like he has a vested interest, of course, in peace there, but also the impact of his wallet. A lot of these billionaires own these big assets, and they don't want sanctions to come down on something like a soccer team that's worth about $3.2 billion. And it's a big event for him. So he's trying to kind of back off that, it seems.
And Josh, we're talking about Chelsea because of the owner, but certainly other football clubs have Welcome back to Yahoo Finance Live. We are back with Yahoo Finance's Josh Schaefer talking about the impact the Russia-Ukraine conflict is having on the sports world. And Josh, before I got cut off earlier, we were talking about some other clubs over in Europe who've said they don't necessarily want to play with Russia anymore. What kind of impact is that likely to have on the World Cup, especially some of those qualifiers that are coming up?
Yeah, it seems like it's going to have a big impact on the World Cup, Akiko. So we've had Poland, Sweden, and the Czech Republic have already said they won't play against Russia heading into the World Cup. Poland was scheduled to play Russia in a World Cup qualifier on March 24th. That game was going to be in Russia. So FIFA's solution to the whole thing had been, well, you won't play in Moscow. Russia will have to play under a different name, and they won't be able to show their flag or play the national anthem. And Poland came back and said, no, that's not the point. We're not competing with Russia. We're not going to do it. And it seems like the other two teams would also follow that. And then, of course, the question is, well, is it just these three nations or is it all the nations? And so there are already reports that FIFA, as soon as today, might be just banning Russia from this World Cup that's coming up in Qatar this summer. And it seems like the easiest solution for FIFA. It's hard because they're the ones that have to make that big decision and ban Russia, and they might have some response from Russia there. But then it frees up the rest of the tournament. You can't really play a tournament like this when you have one team that no one will play. So I'd expect something to come out from FIFA relatively soon so they can continue with these qualifiers and keep things moving on pace for the tournament to start this summer.
There's another international organization that is facing a lot of pressure, and that's the International Olympic Committee. And Josh, just to kind of back up, we've talked about this before, but the IOC did not move to ban Russian athletes even after it was revealed that there was a systematic doping operation in place. The athletes have been competing under the ROC banner. It sounds like the IOC is now moving in another direction in light of the recent events.
Yeah, the IOC is now pushing to ban Russian and Belarusian athletes from participating in any international events. That's their official statement. That was their recommendation. They mentioned that the situation is, of course, fluid and they'll be evaluating it. And they did mention in that statement, though, too, if it disrupts the event too much, well, the Russian and Belarusian athletes can compete under a different country or name, which we've seen the IOC do in the past. And it really has no impact on anything, Akiko. If you let these countries still participate and just make them change their name, we all know that's Russia competing at the Olympics this year. It's not a secret, and it hasn't done anything in the past. So it'll be interesting to see if the IOC does go that next step and fully bans these athletes from competing, no matter under what name, and if these other organizations like a FIFA with the World Cup do that. Because that's what really matters, of course, in sports, is being able to actually do the competing and the bottom line and the money that produces. So that's something to watch moving forward. And we'll have to see if Russia finally gets banned permanently from a lot of these international events until this is resolved.
Well, Josh, we're just a few weeks removed, right, from that controversy around the Beijing Olympics and the Russian skater who tested positive for a banned substance who still was allowed to compete. So the IOC back in the hot seat, but it's going to be interesting to see how this all plays out. Josh Schaefer, thanks so much for bringing us that story. Coming up on the other side, gas prices are on the rise, with California getting hit the hardest. The average there nearing $5 a gallon. And in some parts of the state, it's already there. We're going to discuss how drivers are reacting on the other side. We'll be right back.
for the next 10 minutes.
I'm worried you're not hanging in there. You're sounding really weak over there.
I know, it sounds worse. I know.
We are continuing to watch the oil markets here push higher on fears of a potential supply disruption stemming from the conflict between Russia and Ukraine. Brent crude, though, coming off of the highs we saw earlier, right now at $100 a barrel. Of course, we've been seeing gas prices inching higher, with the average creeping towards that $5 a gallon mark over in California, of course, with the highest gas prices there in some parts of the states. Let's bring in our very own Danny Romero, who is watching those numbers for us. And Danny, I know you've been speaking to drivers there, feeling the pinch every time they go to the pump. What are they telling you?
Akiko, I would say feeling the pinch would put it actually lightly. I spoke with some drivers over the weekend who had to dig a little deeper into those pockets to pay for gas at the pump. Take a listen.
I'm just blown away. Like, I couldn't imagine that it would get this high so quickly. It's just really surprising.
Like you heard right there, surprising to say the least. At that gas station in Beverly Hills, California, regular gas is $6.25. But I also heard that that specific gas station is known to be notoriously high, also because of the area. Could be an indication of that as well. I spoke with another driver who wasn't that sticker shock at the pump. Take a listen.
My car pays my bills, because if not, I can't get to my work. So kind of cost of doing business, you know?
And you heard right there, some are willing to pay the price because it gets them from point A to point B for work. The Auto Club of Southern California reports that the statewide average gas price right now is $4.81 in California. A year ago, California's average price was $1.16 cheaper. Now let's take a look at those gas prices across the Southland, which you see on your screen right now. The average cost for regular or unleaded in LA County is now $4.88. In Orange County, it is at $4.85, followed by $4.80 in the Inland Empire and $4.86 in Ventura County. So carpooling or combining your errands into fewer trips could be the way to go, Akiko.
What about EVs? I mean, you know, this is a conversation that happens in California every time those gas prices go up, largely because they do have the most extensive infrastructure for electric vehicles. There's the largest ownership for EVs there as well. What's your sense that this could finally push more drivers in that direction?
I mean, that is a really good point. I did ask that to some drivers if that was something up for consideration. Even our own producer who lives in Southern California said to get a Prius. But the other thing is that I've also heard from drivers is the fact that you know, the structure in Southern California isn't really suitable for biking or public transportation as much as, let's say, New York, on the other hand. So that's something to consider, you know, carpooling. You know, I think that people are trying to navigate this in some way. But again, some workers are saying I have to pay the price because it gets me to work. So I think, like I said, carpooling could be the way to go, or, you know, as we slowly go back to reopening now. But another thing is that the demand for gasoline is increasing in California because the temperatures are a lot warmer now. So people are flocking to other areas. They want to travel. So that's also another indication, too, that, you know, people are willing to pay the price. Who knows how long, though, Akiko?
Yeah, I mean, $18 to $20 a charge for an EV is sounding a lot like more and more attractive, right? As we look at gas prices. I think the last time I was there, it was $60 to fill up. So there you go. That's probably an outdated price at this point because of where it's been.
That's not
Danny, appreciate Yeah. I appreciate you keeping a close watch on those numbers for us. Let's turn our attention back to the markets right now because we have seen the losses accelerate really within the last half hour or so. The Dow now down about 1.2%. I want to turn our attention right to Yahoo Finance's Jared Blickery, who's tracking the market action for us. Jared, what has prompted this? Is this sudden sell-off? The Dow's now down about 400 points.
Yeah, just take your pick of headlines here. I think we all know the situation with the Ukraine and with the Russian Federation having to move their interest rates, having the ruble devalued by an incredible amount. So let's get to the charts here. We have the Dow, as you said, down about 1%. So is the S&P 500. The Nasdaq, the best performing dirty shirt in the laundry basket today. But I just want to show you the bond market. The 10-year T-note yield down 11 basis points. That is another huge move. And when we see all this volatility in the bond market, a lot of times that volatility spills over into the equities market as well. Now, this is a 10-year T-note yield chart going back to the beginning of the year, and you can see we've come down and tested this level that's been in play, kind of a bull flag here. And let me just zoom out to a 3-year view, and you're going to see how small this is by comparison. But on a 1-year, definitely looking like a flag there. So probably going to pause before, if we launch higher, probably going to take another big catalyst. Haven't seen it quite yet. The Russian situation really just moving yields to the downside today. And let's take a look at the sector action. That usually informs our view here. Energy up 1.4%. Crude oil, WTI, we're going to get to that in a minute, just hit nearly $100 per barrel yet again. Here's energy up 1.4%. To the downside, real estate, staples, materials, financials, all the big underperformers. You can see this is real estate down about 2% here. And let's take a look at some of our sentiment markers as well. For whatever reason, solar energy in the forefront today. That's up 6%. ARC, just maybe another dead cat bounce. That's up 2%. IPO, liquid, that's LQD is a bond fund. But to the downside, Chinese stocks taking it on the chin yet again. Then we have emerging markets, kind of the same boat there. SOX is, of course, the Philly chip index. And we got value, cannabis, low volatility. All of those are underperforming right now. And let's take a look inside the semiconductor heat map here. And you can see a lot of red, except for, looks like GFS, Global Foundries. Yes, that's up 3%. But all the others pretty much mired in the red. AMD, I guess, a notable standout as well. That is up 0.5%. A little bit different on this side. I think some of the cybersecurity issues that we're having are giving some of these software companies a boost, like Zscaler, CrowdStrike, for instance. Probably not Electronic Arts or Zoom, but nevertheless, we're seeing some love for those stocks right there. And then we got to check out our travel board as well, where we're seeing a lot of heat to the downside. We see Carnival Cruise Lines off 4%. So is Delta Airlines, Royal Caribbean, Booking Holdings. So really not a lot of red here, except we are seeing some in the EV space. Tesla up 5%, Rivian up 3.5%, Lucid, NIO, Li Auto, all of those up 5% or more. Akiko?
Okay, Jared, thanks so much for that. We're going to continue to watch the market action there as we go down into the close, but we are getting some updates out of Ukraine as tensions continue to rise in this war with Russia. Ukrainian President Volodymyr Zelensky now seen signing an application for Ukraine to be joining the EU. He is seen there alongside the prime minister. The EU has condemned Russia's invasion on Ukraine, has offered military assistance. Zelensky's office says that application is now on its way to Brussels. Meanwhile, over in Poland, refugees are facing low temperatures and even snow as they try to get out of harm's way. And we did get that updated number from the UN's refugee agency saying that 500,000 Ukrainians have now left the country as we continue to see this Russian attack. That does it for me in these 2 hours, but we are, of course, going to continue to keep a close watch on all of the developments out of Russia and Ukraine. Much more to come here on Yahoo Finance Live. Keep it right here.
Russia's economy shows signs of caving under fresh sanctions from the West. And as a growing number of companies turn their backs on the country for invading Ukraine, at least one major U.S. bank predicts Russia is headed for a deep recession. All this as Ukraine's president signs an official request for the country to join the European Union. Moscow battles big tech to control the narrative in its war with Ukraine. How Facebook, Google, Twitter, and others are responding to the pressure and what they're doing to squash pro-Kremlin propaganda. And pain at the pump. Gas prices soaring as the Russia-Ukraine crisis unfolds, with some drivers in the U.S. paying more than $6 a gallon. How much higher will prices go, and what can you do to reduce your gas bill? Hello, everyone, and welcome back to Yahoo Finance Live. I'm Alexis Christoforous, along with Karina Mitchell, and another volatile start to the trading week on Wall Street as investors try to assess the fresh sanctions brought against Russia and what they mean for the global financial markets. Also, of course, investors turning their attention to other major events this week. We've got President Biden's State of the Union speech tomorrow night, the OPEC Plus meeting, of course, on Wednesday, and Fed Chief Jay Powell's testimony before Congress. So plenty, Karina, for investors to be digesting this week.
You're absolutely right. Investors are watching and reacting to every headline they see tied to geopolitics and everything else, and that's making for another volatile session. The major benchmarks now all trading lower to start the day, but then picked up steam before pulling back once again. That is Ukraine's Zelensky is seen signing an application for membership to the EU, and as talks between Russia and Ukraine end for the day, Ukraine agreeing to further dialogue, according to Russia media. Looking at the benchmarks now, everything, as I said, in the red. The Dow is down by 327 points, the S&P lower by 34 points. Bank stocks under pressure, while defensives like Lockheed Martin rose. Cybersecurity also outperforming. And then Nasdaq, which was a leader, also lower at the moment. And then sector-wise, the sole winner at the moment in the green is energy, and the other sectors. Oh, we have a quick check of the oil sectors there as well. Among the losers, real estate, consumer staples, materials, they're all lagging today, along with financials and healthcare. And over to the Treasury yields to take a look at the bond market there. Treasury yields are sliding on stiff sanctions imposed on Russia, Putin, and his loyalists. The 10-year is now down to 187. We haven't seen that number in a while, and the 30-year is down to 2.20. And then over to the oil market, want to take a quick check of WTI. Oil is surging over fears of a potential energy disruption tied to Russia. So we see WTI up there at $96 per barrel at the moment. With much more on all of this, let's bring in Yahoo Finance's Jared Blickery. Jared, another volatile session. What a surprise.
What a surprise, except it's not, unfortunately. Let's take a look at the screen here, and we can see a lot of red on the western part, the western front here, a couple of green spots in Tel Aviv and Saudi Arabia, Brazil as well, South Africa. But in the U.S., a lot of volatility here, and you're talking about not only the equities market, but also the bond market. So let's take a look at the so-called fear index. This is a SIBO VIX, and we can see over the last few days, kind of cluster of volatility here over the trailing 5 days, eking out tracing out quite a range here. So we'll have to see what happens. But a VIX above 30 is especially above 35 could be another capitulation sign like we saw last week. But I think what everybody has on their mind is this a dead cat bounce that we're looking at right here? This is a year-to-date chart. These two big green candlesticks, that was the rally that we had last Thursday and Friday. And now we're just in the middle of this range. But anything in here, any rally in here could easily get sold. That's the area I'm watching all the way up to about 4,500. We'll have to see what comes of this nascent recovery. And then just looking at some of our other markets here, you mentioned crude oil surged to the highest price. Let's check this out. I want to get the exact number, $99.10, not quite the $100.54 price quote that we got a couple days ago, but you can see here we are definitely in a range in the high 80s to just about 100 here. So tracing out this range, we'll have to see if there's another catalyst that comes out of this conflict that just pushes up crude oil even further. You have to keep in mind, too, that President Biden has said he may release some oil from the strategic petroleum reserve along with some other countries. But RBOB gasoline futures, those are advancing as well. Those are up 7 cents. Gold futures pushing up against 1900. We saw this huge rejection a couple days ago from the 2000 level. Let's call it 1975 or so. Going to be interesting to see if gold can push through this boundary, because you take a look at a 5-year chart here, and this is that flag that we were noting, this consolidation area. Now that we've broken to the upside, may come back down and test this area. You don't want this to become a false breakout, but after some consolidation, I would expect after this period, probably going to surge through. But we've seen a lot of fits and start to the gold market, so probably not best to get our hopes up too much. And then before we go, I just want to check out some of our trending tickers here. And guess what? The number one trending ticker most of this morning was the Russian ruble. You can see it's number 4 right now. Haven't seen this before, but that comes as the bank over there, the counterpart to the Federal Reserve, has increased their interest rates substantially, and lots of devaluation still going on there. The ruble has lost 25% versus U.S. dollar. Guys?
Wow. All right. Thanks so much for that roundup, Jared. So much going on. Let's dive into it now and continue our markets conversation. And welcome in Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Jeffrey, always good to see you. You just heard what Jared had to say. Are there any signs here that this market is about to capitulate?
Well, I think the triggers that Jared may have referred to, that the market's looking for, maybe there's a few of those. One, if we found that Gazprom Bank was one of the ones that will be triggered by an expansion of sanctions. We know there are 5 Russian banks that are currently being targeted by the sanctions, including the SWIFT ban, but it doesn't appear to be extended to Gazprom Bank. Gazprom Bank handles most of Russia's energy trade, and so it would be very important to see if that were highlighted. That would certainly result in a spike in energy prices and a capitulation in the market. The other thing is there are probably going to be some Russian offshore bank subsidiaries that may fail. Don't think this is going to cause a financial crisis, but certainly more word that some of these subsidiaries are not able to continue to operate or start for financing. That could be a bit of a problem. Tomorrow, we're going to get the final PMI number for Europe. And the preliminary number, which just came out on Tuesday of last week, was strong, surprised on the upside, strongest reading in 6 months. But purchasing managers, as they look at orders coming in and the stress in the system, may have really downgraded their assessment in the last week or so. So we'll get that really the first economic reading of post-invasion impact on Europe, and we'll have to see how weak that is. If that's a startlingly weak number, that may cause the market to reassess the extent of economic damage.
What's your take on investors, even U.S. banks, holding Russian debt at the moment? What are the implications there? Because for me, it reminds me of the late 1990s when we had that Russian debt default and the collapse of long-term capital management. Do you foresee something like that in the future?
I don't, because that was more of a systemic development that we saw beginning with the ringgit and so many other currencies, really starting in Asia with that Asian financial contagion, the collapse of so many fixed pegged currency regimes. And we're just not seeing those pegged regimes these days. This is really an isolated to Russia. There is just simply not a lot of Russian assets held on balance sheets. There's some, but it's just not material for the vast majority of systemically important financial institutions. So I don't think so. And I think there are actually some potential positives that could come out of this, believe it or not. I mean, energy companies are getting a boost from higher prices. Cybersecurity companies may see more orders. Green stocks may get a lift from Europe accelerating its long-term efforts to become less dependent on fossil fuels from Russia. And agriculture companies could benefit from a tight supply of wheat. But so I think that's a little bit of an offset to some of the concerns in the financial sector.
I'm sure you saw J.P. Morgan Chase, one of the first, or I think the first big bank to predict that Russia is going to fall into a deep recession because of these sanctions. We saw the ruble falling 25% against the U.S. dollar. What impact could a recession there have on our economy, if any? And do we start now thinking about the R word in the U.S.?
I don't think, I mean, there's always some small risk of recession. I don't think that's changed dramatically here, barring a huge spike in commodity prices. Russia's economy is fairly isolated. Russia is, I think, the 30th largest trading partner of the US. We trade twice as much with Malaysia than we do with Russia. It's very low, and what trade there is primarily agricultural, energy related. Both areas are, at least for the time being, excluded from sanctions. So the spillover effects are fairly muted to the US economy. Russia, however, is a larger trading partner to Europe. And if Europe's economy were to suffer more than we currently expect it to, that could have spillover effects to the demand for US companies and may cause a deeper slowdown. Right now, we're thinking that slowdown globally is somewhere in the range of about 1/4 of a percentage point. But I'd note that this year, global economic growth is expected to be somewhere between 4.5% and 5%, well above the 3% average. So even shaving 1/4% off of there, we're still talking about fairly robust global economic growth.
And finally, what are your expectations for the Federal Reserve? We know we're going to hear from Fed Chief Jay Powell on Wednesday and Thursday when he gives testimony before lawmakers. Are you still baking in a 1/4 point rise in interest rates in March? And what about the meetings to come?
You know, it's a coin flip, and there's still a lot to be determined here in the time between now and that March 16th meeting. So this is really the last time we'll hear from Jay Powell and really any other Fed officials, given the blackout period beginning on the 5th ahead of that 16th meeting. But I think it's clear that the Fed might be concerned enough about tightening financial conditions globally that a 50 basis point move is probably off the table. Markets seem to have moved, but are still expecting pretty much 100% chance of a 25 basis point hike. So given that that's priced in, the Fed may continue to move in that direction, barring any new developments as it relates to global liquidity. Though I would just add that we're still in the camp of maybe 3 or 4 rate hikes this year, and nowhere near the 6 or 7 or 8 that some other pundits have put out there.
Jeffrey, I have time for one more quick one. What would your advice be to investors looking at this volatility, trying to change things and rejigger their portfolio? What would your advice be to them at this point?
Well, a long history of these types of events, while they are unsettling, we know that they lead to short-term volatility, but markets are usually quick to recover, as we've already seen in this particular case. So I think long-term investors probably don't need to address their portfolios. That said, volatility is likely to remain elevated this year for many different reasons, and that may test the long-term risk tolerance of some investors. But in the short term, some investors may be seeing opportunity here. I'd caution them, it's not about just picking those opportunities, it's allocating the right size to them in your portfolio. Be careful on making big bets in this kind of an environment with wild swings on an intraday basis.
All right, Jeffrey Kleintop, Charles Schwab's Chief Global Investment Strategist. Thanks so much. We're going to talk more about investor psychology with another guest a little later on, so tune in for that. And of course, we want to help you step up your investment strategy with a free 14-day trial for Yahoo Finance Plus. You'll get expert research reports, actionable investment ideas, advanced portfolio tools, and more in a sleek ad-light experience. You can check it out at yahoofinance.com/plus. Karina?
Okay, and as sanctions grow, more businesses are now looking at severing ties with Moscow. More on that ahead. Welcome back. As Western allies find common ground on sanctions against Russia, some businesses are following suit, severing ties with Moscow. Here to help us discuss all of this is Jeremy Levin, CEO of Ovid Pharmaceuticals. Jeremy, thanks so much for being here. So in a letter, you are advising business leaders to cut ties with Russia. And I'm wondering, in what ways do you want them to disengage, and what impact do you hope that will have?
Corinne, thank you for having me on. It's less a letter than a pledge. And in order for us to really be effective, you have to have a very solid set of commitments. There are over 300 and closer, probably now 400 and increasing exponentially, signatories to this. They're all CEOs. Why is this important? It's important because Russia is actually governed by one man surrounded by a group of very wealthy oligarchs and advisors. They run the businesses in Russia. It's not like the United States. So our intent is very straightforward. Our intent is to economically disengage from these individuals. And how we do that is we make the pledge, first of all, to stop investing in their businesses, to stop having any kind of joint ventures, investing in infrastructure, and at the same time also to stop collaborations or other such activities in Russia. It doesn't mean we won't have medicines and food going to Russia, but it does mean that we stop actively promoting their businesses.
So what extent do you think that the medical industry should cut links as well? Because biopharma industry there is actively testing more than 250 drugs and devices in clinical trials that include the Ukraine.
Yes, the Ukraine clinical trials have already been disrupted. We are supporting the Ukrainians and also the Russians who are protesting against their government. At the same time, we will not do anything to harm ongoing clinical trials, but by and large, the Russians have already done that. They've actually actively done it. What we will intend to do is not start new ones. The clinical trial business is a very big business. Russia targeted biotechnology and clinical trial business as a way of starting to get their feet wet in biotech. They created businesses in this area. Many in the West went to invest in those. Now, this is not something that we'll be doing in the future. We'll wait until we see that the pressure is exerted on Putin and those that surround him to ensure that they bring back a sovereign, free, democratically elected government in the Ukraine. But at the same time, please be very clear, we're not stopping medicines or foods going to those that need it. That will continue until such times as we see the whole world come back to some kind of normality.
How can you be so sure by, businesses and leaders taking this action, it will serve as a deterrent? Because nothing seems to have worked so far. Putin seems to be laser focused on one thing only, and that is gaining control of Ukraine.
Dictators always have people who are either acolytes or those who enable them. The point here is to make sure that those acolytes and those who enable them feel the pain and make sure that they stop enabling the activities of Putin. We can't be sure that we, a small industry, can have this effect. However, what we can be sure is if we show the example to other industries, like the minerals industry, like that of the digital industry, the service industries, financial industry, we most certainly can have an effect, and it will be extremely harmful to the Russian long-term interests. This they need to understand.
Mm-hmm. Go ahead, continue your thought.
No, they need to understand this because this is a serious and concerted endeavor which hopefully will spread to other industries.
Jeremy, I'm wondering, do companies now have to weigh the reputational risk of doing business with Russia versus the economic risk? For example, BP just severed ties with a large Russian oil company, expected to take up to a $25 billion hit on that. McDonald's is on hot water for posting that it's closed stores in Ukraine, but came under fire for not saying anything about the stores in Russia. Delta has been very quick to sever ties with code share agreements with Russian carrier Aeroflot. So How much does the reputational value of these businesses now come into play?
Very much so. Let's take a point in case. Jefferies severed ties with in their banking in 2014 when Russia first invaded into Ukraine. Jefferies is today one of the biggest banks in biotech. So I think every company that does business there has to think very carefully about what those who consume capital in this country will be doing. We as an industry consume billions of dollars and raise billions of dollars in this country to fund our interest, our activities. So every company that continues to support the Russian regime needs to think carefully. At the same time, those who have employees in those countries will most certainly be carefully thinking about how to take care of those employees. And in our case, making sure that the sick, those who need medicines, get them. Of course, this has been totally disrupted by the Russians in Ukraine. And of course, refugee agencies are now having to deal with floods of refugees, many of whom need medicines and whom we're going to try and help on the borders of that country. So just imagine for a moment, you can't get your insulin just because the Russians have invaded your country. Not a thing to contemplate.
No, and we've heard stories of people in Ukraine, for example, unable to get medication that they so desperately need as well. All right, we will leave it there. Thank you so much for your time today, Jeremy Levin, CEO of Ovid Pharmaceuticals. And we've got much more coming up after a quick break. Big tech has also been responding to Russia's aggression. Find out how ahead. Welcome back. Big tech companies are facing pressure as cyber attack risks mount due to Russia's invasion of Ukraine. Yahoo Finance's Dan Howley sat down with Meta's head of security policy to discuss patterns of Russian misinformation and the ghostwriter Russian hacker group. Dan, I haven't heard of that group before. What did Meta have to say?
That's right, Karina. We talked to the head of security policy at Meta, that's Nicholas Gleiser, and essentially he explained how the company is working to shut down disinformation campaign networks and work against this hacking group called Ghostwriter that's been implicated in attempting to kind of throw off the balance of elections in both Poland and Germany, as well as Latvia and Lithuania. Here's what he had to say.
They really follow patterns that our teams have seen before, which is partly why, quite frankly, I think our teams and the teams of our partners are able to catch these operations quickly and get them taken down. These threat actors have really been constrained. Their operations have been limited since the things that they did years ago. And that's because that's how we can see them move off of social media and try to create their own websites. They're spending more and more time trying to make themselves look legitimate. The trouble is, from their perspective, they're just not getting as much attention. And that's great news. It's a sign that the defenders' work is succeeding. To be clear, there's always more work to be done, and we know that these threat actors will keep trying, but it's a positive trend line.
And what can you tell us about Ghostwriter again? I know you mentioned that it's a group that's trying to break into accounts. What is the goal there?
Ghostwriter is a hacking group that has been operating particularly across Eastern Europe for some time. And what they do is they target prominent voices in different countries. They will compromise their accounts, and then they will try to use those accounts to spread disinformation or false narratives. This is a known tactic. We know how to hunt these actors and how to take down and take back control of accounts when they take them over. Generally, what they're trying to do is spread narratives that are aligned with Russian perspectives or are criticizing Russian adversaries. What's different here is we've started to see them more systemically target individuals in Ukraine. And I think one really important takeaway for everyone is Ghostwriter and similar threat actors, they often don't just target social media accounts. They begin by targeting people's devices, targeting people's personal email. Once they can take over that account, they use that basically as a keystone to get to all their other accounts. And so everyone should be thinking about, and I think everyone should take away from this, steps that you can take and that we all can take to keep yourself safe online. So for example, everyone should enable two-factor authentication on their online accounts, not just banking apps. I think that's obviously a good idea, and not just social media, but actually often let's focus on that personal email, which becomes the first point of intrusion sometimes. Everyone should use strong passwords and should use a password manager. There's some steps like this that we can all take that make the work of groups like Ghostwriter much more difficult and help contain the threat.
And I guess just as a regular user, how can Meta protect them from the spread of disinformation, and how can they themselves work to not participate in the spread of disinformation?
So two things. The first is slow down when you're reading stuff online. We put labels on content when third-party fact checkers determine that it's false, so people can see what the context is around claims that are being made. The second thing is, as I said, turn on two-factor authentication. Use a password manager to use strong passwords across your accounts. For Facebook and for Meta, there are very clear steps on how to do this on our platforms, which you can find on our help center. We've tweeted about it. We've shared this information in other places. We've also rolled out a program called Facebook Protect, which provides additional defenses for some of the most targeted communities, journalists, politicians, and other prominent figures, to make sure we're protecting them as much as possible. But I think the thing to remember is these types of threats are cross-platform threats. They happen across the internet. So users should be thinking about all of their platforms and all of their accounts across the internet as they take steps to keep themselves safe.
So you can see that Facebook is really or Meta, I should say, is really working against this group, which has spread disinformation throughout Europe before, spoofed government websites from, again, Latvia, Lithuania, Poland, Germany, all across the board. So it's, again, Ghostwriter, and really the best way for Ukrainians to protect themselves is to follow basic cybersecurity hygiene measures, and that includes multi-factor authentication and just having a good password. Alexis?
Yeah, good insights there for sure. But what are some other big tech companies like Twitter, YouTube? What are they doing with regards to Russia and misinformation?
Yeah, so Twitter, Meta, again, keep wanting to call it Facebook, YouTube, they're all basically pulling back some of the ability for actors that are pushing Russian propaganda to do just that, to spread that propaganda, that disinformation. They're doing that by either limiting the ability for some of these actors to have channels. We've seen Russian state media channels be demonetized on YouTube. Some of them are actually blocked now in Ukraine. We've seen Facebook refuse to stop putting labels on disinformation coming from Russian state media. That has gotten Facebook in trouble in Russia. The country is actually limiting access to Facebook itself, which hurts some of the people in Russia who obviously have nothing to do with this conflict outside of the fact that they merely live there. Apple, for its part, has issued a statement basically saying that they support Ukraine, but the Ukrainian vice prime minister is actually asking Apple to completely cut off access for Russia to have the ability to use things like the Apple App Store. So a lot of these companies are being pulled in some way into this conflict. And we recently saw Microsoft basically saying that they're detecting threats against Ukrainian interests, as well as Western countries that seem to be coming from Russia and its allies.
All right, very important for the big tech companies to be on the right side of this, particularly for companies like Meta who have been embroiled over issues related to misinformation. All right, Dan Howley, thank you so much.
All right, coming up next, how high will they go? The impact the Ukraine crisis is having on gas prices. Welcome back. Russia's invasion of Ukraine has added a lot of uncertainty to an already tight oil supply, and that's playing out at the gas pump, where the national average for a gallon of gas is now $3.61, about 90 cents higher than a year ago. But in some parts of the country, drivers are paying a lot more than that. Yahoo Finance's Danny Romero has been tracking those gas prices for us. She joins us now. So, Danny, what did you find in your travels?
Well, drivers in California feeling the pinch, I would say that's putting it pretty lightly. I spoke with drivers over the weekend who had to dig a little deeper into their pockets to pay for gas at the pump. Take a listen.
I'm just blown away. Like, I couldn't imagine that it would get this high so quickly. It's just really surprising.
Like you heard right there, surprising to say the least. At that gas station in Beverly Hills, California, regular gas is $6.25. I also heard, though, that that specific gas station is known to be notoriously high. I spoke with another driver who wasn't that sticker shock at the pump. Take a listen.
My car pays my bills. If not, I can't get to my work. So kind of cost of doing business, you know?
Like you heard right there, some are willing to pay the price because it gets them from point A to point B for work. The Auto Club of Southern California reports that the statewide average price for regular and unleaded is $4.81 per gallon. A year ago, California's average price was $1.16 cheaper. Now let's take a look at those gas prices across the South End, which you just saw. The average cost for regular or unleaded in LA County is now $4.88. In Orange County, it is $4.85, followed by $4.80 in the Inland Empire and $4.86 in Ventura County. So carpooling or combining those errands into fewer trips could be the way to go. Alexis?
Oh, goodness, Danny, about $6.25 for a gallon of gas. That's outrageous. And of course, a big reason why we're seeing gas prices rise so much is because the price of crude has been on the rise as concerns mount that Russia, the world's second largest crude oil producer, could either end up seeing its energy market sanctioned or even cut the flow of oil to other countries. I want to bring in Patrick DeHaan now. He is head of petroleum analysis at Gas Buddy. Patrick, thanks for being with us. So look, we've got the spring driving season going to be here in just a few weeks. How much higher do you expect prices to go at the pump, or do you think that they may have peaked?
Oh, I wish that we've peaked. I think we're a long way from that, unfortunately. On an average year, gas prices go up 25 to as much as 75 cents a gallon between March and Memorial Day. So just on average, the national average could get closer to that $4 mark. And then you have the Russia situation, which is pushing oil prices up close to $97 a barrel today. It's almost rest assured that the national average will eventually eclipse that $4 a gallon mark in the months ahead.
And Patrick, it's Danny over here. So I am in Southern California. Why is California gas so expensive? It's not just the taxes, but it just seems like that seems to be the common factor that people point to in California.
Well, California is very unique. Geography, the entire West Coast generally is much at a premium compared to much of the rest of the country. You're relatively isolated refineries in the West Coast. There's not as many of them. When there are issues, you really feel it. But keep in mind, in California, it's not just the taxes, but the carbon management program as well. That is cap and trade. Consumers basically paying 20 to 25 cents a gallon to be able to burn that gasoline, and that falls on top of state gasoline taxes. And that's why California, it's basically a shoo-in. We're going to see that $5 a gallon mark on average across the state. And it's not impossible that California could reach deeper into that $5 mark, maybe even $5.50 a gallon by Memorial Day weekend.
So let's talk a little bit about what might at least help stabilize prices. We know that President Biden is speaking with other countries about tapping the Strategic Petroleum Reserve once again. He did it in November. It didn't seem to have a huge impact on prices. And then we've got that OPEC Plus meeting this week. Will any of that, you think, help?
Well, certainly some of it could help. You're going to need a lot of things to happen to really bring the price down, or at least limit its upside potential. You need a nuclear deal with Iran, ease the sanctions on Iran, then the 2 million barrels that they produce can make it back to the global market. So that's one piece that the president's been working on. Talks in Vienna continue. Then you're going to need Saudi Arabia and potentially help from the UAE on increasing production. And that's if we lose that Russian 10 million barrels a day, which it's looking more and more likely every day that either the West is going to sanction their energy sector eventually, or Russia could use that as leverage down the line, but almost nearly expect something to happen. And like I said, there are some offsets, including the SPR, Iran asking the UAE and Saudi Arabia to boost production, but it still could get more messy in terms of higher oil prices.
And Patrick, to follow up with that, so another thing that I was hearing is that California has a more expensive summer blend. Can you explain a little bit more of that, and what do drivers need to know? Is that something that, you know, other states will also be experiencing as well, or have?
Yeah, exactly. And that's part of the seasonality why gas prices almost always go up 25 to as much as 75 cents over the coming 3 months. And a lot of it does entail the switch over to summer gasoline. A lot of these areas have different blends. California, the California Air Resources Board is the one responsible for that standard. In the rest of the country, it's delegated to the EPA, responsible for that. And there's a lot of fragmentation between types of summer gasolines that all just pinch prices even more. And so that's why California, in addition to having its own blend, cap and trade taxes, that's why prices generally are so much higher. But good reminder for what's coming is the transition, rising demand as Americans get back outside, and of course, refinery maintenance season.
So what can drivers do, if anything, to reduce their gas bill in the way they maybe drive their cars, or how frequently they fill up their gas tank?
Yeah, absolutely. The way you drive is certainly a big one of them. 25% of it is driving behavior. If you're racing light to light, even slowing down a few miles an hour on the interstate. Remember back in the 70s during the oil embargo that the US lowered the speed limit? That does help. But even then, shopping around before you fill your tank up, check the prices before you go out on Gas Buddy, Google, or Waze. And then on the payment side of things, sign up for a free loyalty program like Shell Fuel Rewards. It can knock a few cents off. Use credit cards, see if there's a cash discount. Even Gas Buddy has a pay card as well. So on the payments and shopping around, reducing your consumption through driving better, and then make sure your vehicle's maintained. Get rid of that check engine light.
And Patrick, I wanted to shift gears a little bit on the EV world. And do you think that, because of these prices and that they will continue, like you said, to grow, will there spark more interest then for people to incline more in that in purchase of a electric vehicle?
Well, it may spark more interest, no pun intended, of course, but it really takes consumers 6 to 12 months of elevated gasoline prices for them to see the thinking change and what's important in a new car. Keep in mind, too, a lot of supply chain disruptions may mean that there's less options for them, and so that may persuade them to hold off for now. But again, I think the longer prices remain high, 6 to 12 months, even beyond that, 18 months of high prices will really increase the importance of fuel efficiency and or potentially moving to an EV.
We're going to have to leave it there, but Patrick DeHaan, head of petroleum analysis at Gas Buddy, always good to see you. Thanks so much. Coming up on the other side of the break, the power of investor psychology during uncertain times. Investing is an emotional business, especially during volatile times. Here with some insights on investor psychology and ways to avoid costly mistakes is Sneha Jose, Director of Behavioral Finance at Stifel. Sneha, great to have you here. I'm interested to learn more because from the work you do, I'd love to know if you find people care more about losing money or making money, and how might that sort of inform the way they react to volatility?
Yes, no, thank you so much for having me. You know, an emotional time indeed. And while the situation sort of remains tense, investors are definitely reacting, feeling stressed and anxious with what's going to happen and how their portfolio is going to react over the sort of the near term, right? So I think that said, a few tips, and you mentioned sort of the losses and how investors would react. I think a few tips to keep in mind while we navigate through this uncertainty is one, sort of, history repeats itself. So you go back 90 plus years and take a look at the S&P 500, and you will see that markets have survived events such as these. On average, the correction is about 5%, and it takes about 45 to 50 days to recover. And if you look at sort of intra-year declines, you'll see markets react for a variety of different reasons. But for the most part, the calendar year remains positive. So that's number one. The second one is sort of the time in the market versus trying to time in the market. It's really challenging to try to time the market, especially in times such as these. Panic selling is a very common investor misstep. So investors, are mostly no matter how you look at the data, investors are generally rewarded to spend time in the market versus trying to time in the market. And then the third thing is, if you are feeling uncomfortable in times like these, I think it's important to sort of get a gut check of your portfolio. Look under the hood. Look at, assess your risk tolerance, your asset allocation, your investment mix, and your behavioral preferences. And that brings me to sort of some of these biases that we should be aware of as investors. You mentioned loss aversion, very, very common investor bias. It just hurts twice as much on the way down as opposed to the gains. Herd mentality, very common to sort of follow the herd. We saw this exceptional phenomena with meme stock mania, but this time it could be in the reverse direction. The other sort of biases that come to mind are availability bias. There is a lot of information being thrown at us at this point via news, social media, 24/7 information. And sometimes what happens is you tend to react to the current environment and you sort of rule out other potential outcomes. And then there's home bias, right? Sometimes investors are just, looking at sort of how they position domestically versus internationally. Again, a good time to see how the mix is and what is your comfort level. So a lot of this is about the emotional aspect and how you feel, because markets are going to go through cycles, and there's going to be these different events that come. But how you can stay calm, sort of stay the course, and stay invested.
So Sneha, you mentioned herd mentality, which I think it's really easy to give into that during such volatile and frankly confusing times. You're sort of crowdsourcing your decisions. Would you say that's sort of the number one, let's call it, mistake that the average investor makes? What could you point to as the one thing investors are doing that's not helping their portfolio in times like these?
I think the herd mentality, definitely. I think that is something that is very natural to sort of just react in the current scenario. And the other one is recency bias. It's another bias we are subject to because we are looking at we're always looking at the shortest frame of time, right? We're looking at the current events. And there is this need to react because, there's a famous example, right? The system 1, system 2 of thinking, where when there is uncertainty, when there's volatility, you tend to want to react emotionally. And that sometimes could hurt your performance and your portfolio in the long run.
So Sneha, what should investors know or maybe ask themselves when they're figuring out their own investor psychology so they don't give in to some of these biases that you've been talking about?
Yes, great question. So we measure a dimension labeled as composure. So how much short-term risk you can withstand, because most investors are long-term and typically have about 20 years of investment horizon. But composure is a measure of how you can sort of, how much you can react, how much you can withstand some of these short-term market gyrations. And that level, if it's high, it means that the investor is going to get stressed and anxious in times like these. And that's something that we really pay attention to. So investors who tend to react strongly, we try to come up with strategies that can protect the downside, create some kind of defense mechanism in their portfolio, create a strategy that can smooth out the path of returns over a long run. So it's really trying to see how much you can react in these short-term market gyrations. Some investors tend to stay calm and composed and don't really react, and they can sort of navigate the short term a lot easier than some other investors. So it's important to find out how you're wired and how you would react, and what kind of portfolio is then built for you that you can withstand these short-term market swings.
And before I let you go, you talk about something called anchoring bias, when an individual relies too much on the first information they encounter when making a decision. Why do we need to be careful about that?
Yes, it's a great example, because anchoring bias is like you look at a price of an item, and then you are anchored to that number. And I think that is, again, important when you look at sort of investing as well, right? Think about it. Sometimes, you go back 20 years and you stay the course, the prices have gone up subsequently, and you're not going to have that regret that you missed out. But if you sort of stick to that anchoring bias where you think that this should be the price, sometimes it ends up sort of leading into missing out in the long run in terms of looking at your overall investment portfolio.
Fascinating stuff inside the mind of the investor. Sneha Jose, Director of Behavioral Finance at Stifel. Thanks so much. Karina, back to you.
Okay, and we'll look at investor psyche at work when we take a break, and after that, take a quick check of the markets to see how they are handling all the volatility today. Stay with us. Welcome back to Yahoo Finance. Want to get you a quick check of the markets to see how the benchmarks are reacting to the latest Ukraine-Russia headlines. They're fast moving, and they include news that Russia and Ukraine will engage in more dialogue, and that Ukraine has formally applied to the EU for membership. So taking a look at the benchmarks, they're off session lows at the moment, but the Dow is down by 312 points. The S&P is lower by 30 points, and the Nasdaq also down by 12 points at the moment. And then taking a look at some of the sector winners and losers in the Dow, you can see there Boeing, a big leader. No surprise, energy. Chevron is doing well today. Caterpillar as well. Amex and Salesforce also among the leaders. And then turning to some of the losers today, the laggards, financials across the board not doing that well. So you see JP Morgan and Goldman Sachs down. P&G also amongst the laggards, together with IBM and Nike. Want to get you over to the bond market for a quick check there to see what is going on. Yields are lower. We're, of course, at the moment over the stiff sanctions that have been imposed. So you see the 10-year down to 1.87, and the 30-year is now at 2.20. Also want to get you a quick check of the crypto space, because it has been moving higher, not in lockstep with other risk assets at the moment. So the Dow is now, Bitcoin is now up by close to 6%. It was up by as much as almost 9%, but certainly up at one of the highest levels we've seen for a long time. It is now crossing $41,000, and that as Ethereum is also higher, and as U.S. prods crypto exchanges to make sure to foil Russia's sanctions dodgers. Alexis?
Already coming up in the next hour, how the sports world is responding to Russia's invasion of Ukraine. We're back right after this.
Talks and turbulence as Russia's war on Ukraine extends into a fifth day. With no ceasefire in sight, the world is reacting, and Russia is already feeling the pinch of sanctions slapped on its central bank and others. What should you be doing now to protect your portfolio? The airline industry, already hammered by COVID, is now facing the fallout of Russian aggression. Fuel prices surging as airspace is impacted, with one aviation consultant saying passenger flights forced to reroute could add up to $12,000 per hour in airline costs. What's it mean for travel ahead? And the sports world has been one of the first to oppose Russia's conflict in Ukraine. Clubs and individual athletes speaking out about the unprovoked assault on Ukraine as the list of penalties against Moscow grows. Good afternoon, everyone. I'm Karina Mitchell, along with my co-anchor, Alexis Christophorous. It's been a fluid day as markets continue to digest all of the geopolitical headlines that are coming out and investors trying to make sense of it all. Here with more on how investors are digesting it, let's bring in our Yahoo Finance's Jared Blickery. It's been a volatile day, Jared, and investors really trying to take it all in.
Well, we talk about volatility in the markets and especially in the bond market, but nothing compares to what's going on in the Russian markets right now. This is a ruble versus the U.S. dollar. It's actually the U.S. dollar versus a ruble. So when it spikes up like this, means that the U.S. dollar is getting stronger, the ruble is getting weaker. And did it get weaker today? U.S. dollar gained 24%, almost 25% against that currency. And that's coming as the central bank there doubled their short-term interest rate to 20%. Now, imagine, we're in the United States here. We're talking about maybe 50 basis points in March. Is that going to scare off investors? They raised it by 10 percentage points. That's 1,000 basis points. So pretty incredible just to contemplate what they're doing there. And we can see all of these futures markets really in the green here. We're going to take a deeper dive into the commodities markets in about 30 minutes. But for now, wheat up over 8%, corn up over 5%. And then some of these cybersecurity names really heating up as well. Hack, that's an ETF, ETFMG Prime Cybersecurity Team ETF. You can see that's up over 6% over the last 5 days. And you can really see what's happening on a 1 month trailing basis. And this decline in here, this was largely in line with a decline that happened overall in all the markets, and then just really beefing up its stock price here on those cybersecurity concerns. And then what's in the red here? Well, we got the Russian market. That's the RSX. That's an ETF. That's down 30% today alone. And over the trailing month, shaved off half of its value, guys.
Ooh, talking about shaving off value, the electric vehicle startup Lordstown Motors, haven't talked about them in a while, Jared, but I guess they have some pretty paltry numbers out in terms of expectations for how many vehicles they're going to produce, and also that Foxconn deal, the CEO warning about that as well.
That's right. This was a $50 million deal that they got Lordstown stock from. And let me just pull this up here. Now, the stock, because this is on an equal weighted basis, couldn't find it down there because the market cap has shrunk so much. But here we go. Ride down 23% in last place on the chart. And you can see over the last month, did have some gains, gave all of those back. And I just want to bring everybody up to speed on some of those details. Now, Lordstown had intended to begin production in the third quarter. They want to raise about $250 million to execute their new plan. And this is said by the executives on Monday as they reported their fourth quarter results. And those results are in focus, but really about this deal. The automaker plans to make 500 endurance plug-in pickup trucks this year, but that's only if its agreement with Foxconn is carried out, and as many as 2,500 vehicles next year. But kind of in flux right now, and over a 1 year basis, a lot of these EV stocks popped, and they topped out in January, February of last year. That means the comps are getting increasingly difficult. You can see it's down 87% over that time frame, but a lot of other EV stocks popping today. We see Lucid Motors up 5%, Fuel Cell up 10%. This one's catching my eye. What's up 147%? Mullen Automotive, guys.
That Foxconn deal was really hyped up, so there's a big blow there. All right, shifting gears, Yahoo Finance's Plus investment idea of the day is a bullish call on Autodesk after reporting a beat on Q4 earnings.
That's right. And Autodesk is another one of those software makers that's really been slumping over the last few months. Since November, a lot of these software names had peaked out. So over the last year, lost 20% of its value. Over the last 3 months, lost 14% of its value. But Argus Research likes his stock from a value perspective. So let's see if we can get this up here. There we go. And they are reaffirming their buy after fourth quarter results. They have a long-term price target of $290. That's $70 above the current price. And just looking here, they say Autodesk posted 27% non-GAAP EPS growth on 17% revenue growth in its fiscal fourth quarter. However, investors remain uncertain about Autodesk shares amid a volatile macroeconomy and the company's business model transition. They're raising their full-year non-GAAP EPS estimate, and they're also saying that valuations for Autodesk have fallen amid recent tech sector sell-offs, though we believe that the company's highly differentiated software continues to support long-term growth. So just taking a look briefly at the stock over the last year, again down about 20%, but that is Yahoo Finance's Investment Plus idea of the day.
Okay, Jared Blickery, sorry. Thank you so much for that. All right, we're going to stay on the markets and bring in our next guest from Sound Planning Group, the CEO there, David Strzeżewski. I hope I said that name correctly, sir. Thank you so much for joining us today. You know, a lot has changed over the weekend. The world order has gone in a different direction, if you will. And I'm wondering, what are the investor concerns that you are hearing most about? And do you think that investors are being overly reactive at this point?
Well, there's no question that right now we have a very headline-driven market. And it's really important for investors right now to just take maybe a step back and understand that we need to have disciplines, we need to have answers, we need to have real ways in which we are going to be approaching these things in order to be able to really navigate this time well. If we just start reacting to everything, my guess is that we're going to find ourselves, doing what everyone knows that we're not supposed to do, and that's buy high, sell low, or just start trading on emotions. And so it's a big deal, obviously, that Putin has declared this war on Ukraine, and that we've got this turbulence that's taking place on a geopolitical level. I just want to mention, though, that in the United States, we are kind of insulated from some of this. At least a lot of our companies are. I mean, we will definitely see some of the challenges with $100 oil prices, as an example. We'll see some of the challenges with, these supply chain issues. We've got the Fed looking to raise interest rates, maybe not as much now, because there's some slowing and some tightening that's been taking place, and we've got this balancing act that's coming at us right now. So the consumer today, though, is looking for answers. And, this is where it comes down to disciplines. It comes down to risk tolerance. It comes down to sticking with a plan and ultimately being able to navigate these times based upon math and science in the best way possible.
So now what are you recommending as far as allocations based on risk appetite?
So a lot of there's opportunities right now internationally. There's no question in that. But we also have some of these big challenges that I think are now part of everyone's vernacular, and that is right now Europe is heavily supplied by Russian oil. China is heavily supplied by Russian oil. I think those are two real important factors to be considering. Additionally, the United States is supplied with Russian oil. So we're sanctioning on one end, and then on the other hand, we're actually still receiving oil. Those are a couple of things I think that we should be paying attention to, because there are ripple effects as a result of that. I think that, I'm personally bullish on U.S. oil right now. I think that that's one of these areas that if we could step in and maybe turn the spigot back on again, natural gas and oil, ultimately we can be energy independent, and then ultimately supply our NATO relationships. So as far as allocation goes, we are a lot domestic today. I have a challenge with bonds, although it seems like we're having a little bit of a pullback. So there's a slight bull market for bonds happening right now, because when interest rates go down, the value of bonds go up. We see those interest rate hikes, though. Unfortunately, one of the biggest concerns I have for most people entering into retirement, which is the folks that we tend to work with, 55 and older, they're looking to be a little bit more conservative today. And unfortunately, the yield's not there and the safety's not there in some of those fixed assets like we've had in the past. So the question is, what are the alternatives? What do we need to be looking for? And how do we go forward with confidence? And that's a question that people really have to independently answer for themselves as they're looking at and understanding the season in life that they're in, their goals, objectives, risk tolerance, time horizons, et cetera.
Sorry, I was muted there for a second, but I wanted to say that the energy conundrum is a big deal, right? So energy sanctions are off the table at the moment, but if that changes, how does that impact things? And then what do you think as far as energy as an investment? Because the prices are so high, is it sort of past its peak? Is it the time to invest now, or have investors missed the boat in that regard?
What a great question. I think that if the United States can get back to oil production, we see a very significant move here. It's going to be that some of these narratives. I mean, to be candid with you, just watching the talking heads here over the weekend and some of the things that are going on. I mean, this is pretty significant. I mean, the people of Ukraine are putting up an incredible fight. I think the world needs to recognize that an embargo on Russia's oil is not a bad idea. In fact, the blood of Ukrainian soldiers is essentially mixed into their oil production. That's who they are as a nation. We've just stopped them from getting like over $700 billion of their cash that was in US and Euro dollars. So I think that they're going to be running out of money here pretty quick. But if the United States can start getting into the oil production, we have, ironically, more oil and natural gas than anyone on Earth right now, at least discovered. And it's pretty incredible to know that, as a nation, we could become independent in this regard and not have to be, subservient in this way, specifically in this oil area. And I think that everyone wants to go to more of a green solution. That's fantastic. Let's definitely do that. But let's also understand the time that we live in, and that the green solutions may or may not be able to ultimately, keep us all going in the very important ways that we need to right now, as far as energy on our houses and energy in our cars. And where do we get that energy from? That's a really important question that we have to be looking at. And do we really want to get ourselves subject to the whims of other oil producers when we've got all of this here at home? That also makes jobs at home. And that could be a really great solution. So we'll see if that ends up getting brought up. Otherwise, we've got to navigate our way through the tensions that are here right now. And all I have to say is one last thing is thank God for Elon Musk and that Starlink system that he did, because it's not really being discussed today, but he came in and gave that internet to the Ukrainian military. And Putin, I don't think, was expecting that there would be live videos of what's actually going on, not just our reporters back at their safe and away from places. We've got live information of what's taking place. So that's incredible, because Germany showed up, several 100,000 people over the weekend rallied and gathered. They're now putting anti-tank, anti-aircraft missiles in place. That's a big deal for Germany. I think this is awesome for America, because we saw the NATO allies begin to respond in a positive way. So I have hope for this. Unfortunately, it's a really tough situation, though, and our hearts and prayers go out to the people in Ukraine.
Okay, we'll have to leave it there. Thank you so much for that and for your perspective. Elon Musk to the rescue. David Strzeski,
that's right,
Sound Planning Group CEO. Thank you, sir. Alexis.
All right, coming up next, how the invasion of Ukraine by Russia may affect your travel plans. Welcome back. European nations and Canada shut their airspace to Russian aircraft over the weekend, and Moscow quickly retaliated by prohibiting Western airlines from its space. What does it mean for the airline industry and for travelers? Let's bring in Scott Keys. He is founder and chief flight expert at Scott's Cheap Flights. So, Scott, there's some talk now among industry folks that this could be a return to Cold War travel, higher prices, longer flights, refueling in Alaska. What are your thoughts on that?
Yeah, I don't think that's quite going to be the case. It certainly could be the case for folks who are hoping to visit Russia or nearby countries, but for most areas of travel, you're not going to see an immediate direct impact from these airspace restrictions yet. Now, for flights, if you're hoping to go to Asia or places nearby where the conflict is happening, I think you will see an immediate impact from that. But for most folks who are hoping to travel to Western Europe, domestically, Western Hemisphere, you won't see quite any type of major impact to your specific travel plans.
Now, the U.S., I guess, has been slower to act than its allies. Its airspace still open to Russian aircraft and vice versa. But what if that were to change? How does that complicate things for travel?
Yeah, my sense is twofold here. One is that I don't think it's necessarily indicative of a slower to act mentality, in large part because I don't think there are going to be many flights from between the US and Russia anytime soon, considering that all of Europe and Canada has closed their airspace. There's just not a good way for most Russian aircraft to come to the US. Secondly, there is talk that this could be coming imminently, that the US could be shutting its airspace to Russia, and I would expect Russia to retaliate by closing its airspace as well to American aviators in the same way that it has for European and Canadian airlines. And the result of that is that if you are flying to Asia or somewhere else, currently, or at least as of last week, most of those flights transit Russia. It's the quickest way. For instance, a nonstop flight from New York City to New Delhi, let's say in India, goes directly over Russia. Those types of flights will likely have to reroute, have a technical stop in somewhere like Istanbul or Dubai en route, and that's going to mean a longer flight, more connections, more pilot hours, and likely a higher price for those flights.
And I know that the U.S. Embassy in Russia did tell U.S. citizens there to consider leaving, to avoid being stranded. So perhaps they already see the writing on the wall. I want to talk, though, about oil prices skyrocketing and what that means for the industry. I know the travel industry was starting to recover quite nicely during the pandemic. Jet fuel is, I think, the second highest cost behind labor for these carriers. What are these high oil prices going to do? And are they going to pass that along to us in the form of higher ticket prices, Scott?
That's right. Look, this is just one thing after another for the airlines, because you nailed it exactly right, that the price of jet fuel is the second highest expense for airlines after labor costs. And in some cases, if it gets high enough, it can become the most expensive cost for airlines, as it did in the 07-08 oil crisis. Will that get passed on to consumers? If it sustains at a high level, it absolutely will. Now, if it's more of a blip, if things work out that the price of oil comes down sooner rather than later, I think the impact for individual travelers and ticket prices will probably be minimal. But if the price of oil stays above 90 or certainly above $100 a barrel for the foreseeable future, there is no way around that showing up in higher ticket prices. And the reason why is that there's no airline that doesn't rely on jet fuel to fly its planes. They are all exposed to the price of oil. Even if they've maybe bought oil for the next few months, they've already locked in their price now. This is why a sustained high price of the cost of oil is something that would need to happen for it to show up in a material way for travelers.
And Scott, also, if this war is prolonged, you say it could be felt in the airplane supply chain. Tell us about that and its impact on the industry and possibly to us as travelers.
That's right. Look, if we enter a new Cold War or something along those lines where there is significantly diminished trade between Russia and the West, that is going to have a major impact on aviation supply chains. Let me give you an example. The landing gear for many of the wide-body jets used by Boeing and Airbus and others is sourced through Russian titanium, and that titanium is critical for building new airplanes, and yet their supply chains are not exactly diversified at the moment. They're wholly reliant on a couple different Russian companies. And so a prolonged war, prolonged interruption of trade could really start to show up in airplane production over the next few years. Will that come to pass? I think largely depends on the course of the war, the course of the invasion. But this is something that I can guarantee you executives at Boeing and Airbus are monitoring closely and thinking about how to proceed moving forward.
So many forces at work there for the airline industry that's already been through so much during the pandemic. Scott Keyes, founder and chief flight expert at Scott's Cheap Flights. Thanks for being here. Karina, we'll toss it back to you.
Thanks so much for having me.
Okay, thank you. Great discussion there. Coming up after the break, Elon Musk getting involved in the Ukraine crisis. Find out how he's helping ahead. Welcome back to Yahoo Finance. Well, SpaceX founder and CEO Elon Musk says his Starlink internet satellites are up and running in Ukraine as the country takes a hit over a barrage of airstrikes. Let's bring in Yahoo Finance's Inez Ferre for more details. And Inez, a top Ukrainian official actually appealed directly to Musk for help here, right?
Yeah, that's right. Ukraine's deputy prime minister through Twitter tweeted out to Elon Musk asking Musk to connect Ukraine to Starlink stations. And Elon Musk replied, Starlink service is now active in Ukraine, and said with more terminals en route. Now, this comes after intermittent power outages in some areas of Ukraine with heavy conflict. And of course, the fear is that as the conflict continues, that there will be areas with power outages with communications not accessible to people in the area. So as far as what Starlink is, just to back up for a second, Starlink is SpaceX's project, which is thousands of satellites in low orbit, just above 300 miles above Earth. Right now, there's over 1,400 of them, and the plan is to have tens of thousands of them in years to come to be able to connect the world to a broad internet, so high-speed internet. And this would be in remote areas especially. So rather than connecting through fiber optic networks or through cell towers, you're connecting via these satellites. As far as the rollout is concerned, this service has been rolled out in some areas of the US, of the UK. And according to Starlink's website, the activation for Ukraine was supposed to happen in 2023. So this does appear to be an expedited rollout or activation in Ukraine of the Starlink network.
We had a guest on earlier praising Elon Musk for what he's doing there and getting those Ukraine soldiers access to the internet, which is really a lifeline to them in so many ways. But Inez, how feasible is it that Starlink can work across the entire country of Ukraine?
Well, in order to be able to access that internet connectivity, you need a dish on the ground. You need a Starlink kit, as it's called, which includes a router. So provided that these can get into the hands of Ukrainians, then the next question is the scalability. Right now, as far as users are concerned, the service counts on more than 140,000 users. But what if you got millions of users on there? So millions of Ukrainians who are using this Starlink service. It's yet unclear as to the scalability as far as the internet speed that you'll be getting when more and more people do connect. But again, you do need that dish, you do need that router to be able to connect.
Inez, this isn't the first time Starlink has come to the rescue, right? They also helped in Tonga when there was that underwater volcano that exploded. It was a lifeline there. And I'm wondering how much ammo does this now give Musk? Because he got a lot of flack for having a lot of, junk in space. Remember, his satellite almost hit one of the Chinese satellites, and he was getting a lot of flack and a lot of trouble for that. So is this sort of a redemption for him in a way?
Yeah, it certainly is. I mean, when you're talking about trying to get into remote areas where there is no power, where there is no communication, and you're depending on satellite communications, this is sort of a perfect scenario to be able to use this service, this satellite service, in order for soldiers to be able to communicate, in order for people to be able to communicate and to keep those communications going. I mean, the whole entire premise of this is to be able to get internet connectivity to remote areas, to areas where there is no internet connectivity. So this is definitely a sort of redemption for Elon Musk, as you say.
And a lifeline to Ukraine at the moment. Okay, Inez Ferre, Yahoo Finance. Thank you so much for that. We're going to take a quick break, and on the other side of it, we will check the energy sector and sanctions on Russia from an unusual source. More on that ahead. Welcome back. Well, oil is on a ride higher today on fears Russia's energy could be caught in the crosshairs of sanctions. Also, some talk of a possible coordinated oil reserve release, that push made by the U.S. and being mulled by the EU today. Here with more on all of that, let's bring in Yahoo Finance's Jared Lickery. And that deal with BP pulling out of its stake with that oil giant as well, making news, and Shell's similar move now.
That's right. 20% stake in Rosneft, probably going to go the way of the dodo bird here. And you got to imagine a lot of U.S. companies scrambling to just disentangle themselves with any Russian entity that could possibly end up on the sanctions list, either now or possibly in the future. Here's WTI crude futures. They just settled. That would be April at $95.72 a barrel, up over 4%. And guess what? Testing those highs that we saw last week. And that was $101. Let me show you on the candlesticks so we can see that big candle here. You can see this price level was rejected. It was just above $100 per barrel, and that's a big psychological number, so not surprising to see that price action, but very much trading in a range here between about $88 a barrel all the way up to $100 a barrel. So we'll see what comes of this. And you mentioned that strategic petroleum reserve potential release, and this is something that happened last year, 50 million barrels. It was coordinated among the U.S., Europe, Asia, various countries. But going back to our heat map here, you can see a lot of green on a lot of these stocks. And here's our energy heat map. Let's check out what's happening in the market here. We see BP. We're just talking about that deal with Rosneft that they're trying to divest themselves of. That's down 6%, Shell down 4%, Total down 8%. So really, it's the European banks that are taking this, European energy companies that are taking it on the chin here. By the way, Occidental Petroleum up 10%, ConocoPhillips up 2%. So really just seeing a lot of the European stocks take it here. Guys?
Okay, thank you so much for that, Jared Lickery. I want to bring in our next guest and talk about sanctions, which have been swift over the weekend, coming from Western allies. But so far, Russian energy is off the table. And here to help us discuss that, let's bring in Lincoln Mitchell, research scholar from Columbia University. Lincoln, thank you so much for that. So energy off the table now, but do you think that could change? And if it changes, is that the crippling hit that Russia needs to be dealt to be able to stop them, halt further aggression?
It certainly could change. And if the war continues like this, it very well may change. It would be very bad for Russia, but perhaps more significantly, it would push them closer to China. Russia has to sell its fuel somewhere. They have no other way to generate wealth in that country. China needs a lot of this fuel, whatever form it is, and will buy it for dimes on the dollar because Russia has nowhere else to go. And that will essentially put Russia, I mean, if you're sitting in the Kremlin, in danger of being essentially a Chinese client, which I don't think is where they thought this conflict was going. But if the West can stand by these sanctions and toughen them, Russia will have nowhere else to go.
Do you think that, sort of trying to mitigate against any sort of energy sanctions and what that could do to the world market and the oil market in particular, do you think that this talk of releasing strategic reserves in some coordinated effort is useful and will help mitigate the impact? And then what do you make of BP pulling out of its big oil deal with a big oil company in Russia, and now Shell doing the same thing?
Well, the actions by BP and Shell are very serious. And if you're Russia, they've got to really strike you, because throughout all of the conflict that Russia has had with the West, going back to the Georgia-Russia war, or the Russia-Georgia war more accurately, in 2008, through to the incursion into Crimea and the Donbass region in 2014, through today, the major oil companies have kept doing business with Russia because there's so much money to be made there. This is a real break. Now, as far as I can see, at some point, the United States and other countries are going to have to find ways. The United States doesn't get a lot of oil directly from Russia, but a lot of countries in Europe do. So releasing strategic reserves does make some sense. It's a kind of trick you only can pull once because you eventually run out of strategic reserves. But now is kind of the time. This war that Russia is making on Ukraine has the potential to be a globally destabilizing event, and with ripple effects that we can't quite foresee now. And preventing that from happening should be a pretty high priority.
And then, a stunning move. Switzerland says it's freezing Russian assets. This is a country with a long history of neutrality. What do you make of that?
I thought that was extraordinary. I mean, I just saw that headline before I came on or got ready to come on here. I think that's extraordinary. What it shows here is just how strong how the coalition against Putin is, just how close it is. And a lot of credit for that, I mean, behind the scenes goes to the United States. I think Joe Biden, this is when Joe Biden ran for president, this is what he said he could do, and nobody really believed him. And certainly after Afghanistan, where he really didn't handle it well. But these coalitions don't come together easily. They don't come together magically, and they don't come together without the leadership of the United States.
And, certainly Switzerland is a country where the Russian assets are held, there are a great deal of them, $11 billion in Swiss banks in 2020. So that is a big move. I'm wondering, do you think Putin severely underestimated what he could achieve here?
Putin made a couple of underestimations here. One is, despite what so many commentators and analysts in the West were saying, he thought either that the Ukrainians would be kind of happy to see them and not put up much of a fight, or that the Ukrainian military resistance would be very weak. And he's gotten a much stronger resistance from Ukraine than he thought he would have. Now, of course, sitting where we are, the human suffering, most of it is in Ukraine. I mean, these are civilians who have lost their homes, who've been killed, who've had family members killed, but Russia is taking casualties earlier and in higher numbers than Putin anticipated. And that is a real miscalculation. I suspect he also figured the coalition between Europe and European countries and North American countries and others would not hold together, and it has. So he overplayed his hand here. He was always in a position where threatening war was going to help him and making war wasn't going to help him. And we're seeing that right now.
And we've seen thousands of Russians in Russia over the weekend protest. And I'm wondering, has he sort of painted himself into a corner now? And is he going to see his demise soon enough? And is it at his own hands because of his actions?
Well, I can't come on television or the internet and say that his regime is going to collapse in the next couple of days. That would be extraordinary. But he is not stronger for doing this. And back in the fall and early winter of last year, when he began to amass the troops on the border, there was a domestic political piece to this. Putin's thinking, I suspect, went something like this. As we know, the economy is very bad. Russia's COVID situation was much worse than the media was reporting in Russia and therefore in the West. Thousands and thousands of people were dying, probably hundreds of thousands. So he needed to do something. And he thought a move like this might generate some excitement, might bring the country together. Well, it's had the opposite effect. So you've seen these demonstrations and the arrests from the demonstrations, which means that he's concerned. And soon we may see some of the very wealthy people around him who are really dependent on his good wishes, good graces, getting angry at him because they can't access their wealth in the West. So Putin, to a great extent, this war was always about regime survival for Putin. He looked at Ukraine and he said, I don't want that happening in the in Russia. In 2014, when a corrupt president, Viktor Yanukovych, was ousted by massive street demonstrations. He sees that could happen in Russia. He thought he had to topple this government to give himself a little bit of a buffer, and it may have had the opposite effect. But it's too early to really know anything for sure about that.
Lincoln, really quickly, want to get your reaction in just 30 seconds left. Headline crossing from the Times of London reporting that the Kremlin has sent 400 Russian-paid mercenaries to Kyiv to try and assassinate Zelensky. Your thoughts on that?
Well, I hope they fail. Let's be clear about that. But secondly, what you're seeing here is that Putin painting himself into a corner. He's got himself in a situation now where he will remain isolated for the rest of his life, and he will spend his life doing one of two things. One, doing everything he can to cling to power, or two, ending up in a cold jail cell in The Hague.
All right. Thank you for your perspective. Lincoln Mitchell, research scholar, Columbia University. Alexis?
Thank you.
All right, thanks, Karina. U.S. banks prepare for cyber attacks after the latest Russian sanctions. We've got details for you straight ahead. Welcome back to Yahoo Finance Live. Cybersecurity stocks like CrowdStrike and Palo Alto Networks have been a bright spot as the war in Ukraine prompts fears of cyber attacks. In fact, U.S. banks are now preparing for retaliatory cyber attacks after Western nations slapped fresh sanctions on Russia, including blocking some Russian banks from the SWIFT international payment system. I want to welcome in Chris Ruland. He is CEO of Phosphorus Cybersecurity for more on this. So, Chris, just how well prepared are U.S. banks to protect themselves against these kinds of cyber attacks? And should Americans be worried about their money and their personal information being compromised here?
Well, let's start backwards. I think all of our personal information is already compromised, so you don't need to worry about that anymore. It's already out there. U.S. banks have been investing for decades in cybersecurity and resilience of their systems, especially to deal with the problem of computer fraud and theft. What we haven't really prepared for is the destructive malware that we've seen deployed against Ukraine. So historically, when US companies have been hacked, the adversaries leaves those computers alive so they can steal from them. In the case of cyber war, what we're seeing now is the computers are hacked and then destroyed.
Well, let me ask about what they can do to sort of really protect themselves, because we see time and time again, these attacks have been successful in lots of different industries. So what is different today, I guess, than even, 6 months ago in the way they're protecting themselves?
Well, I don't know what's changed in the last 6 months. Certainly, there's been a lot of work over the last week or two in anticipation of increased cyber attacks. But at this point today, it's kind of too late to do anything. You're going to have to deal with your situation, and I think a lot of the big financial institutions have made big investments and protect themselves, and they're the biggest customers of the stocks that you mentioned that are seeing lifts over being at cyber war.
Today we saw that Toyota had to suspend factory operations in Japan. One of their suppliers, I guess, who supplies them with some plastic parts and electronic components, was hacked. No word on who did this. Nobody's taking responsibility just yet, but the timing is interesting, right? Because Japan just joined Western allies in sanctioning Russia. What are your thoughts on all of this? And are we going to see more of this happening within the auto industry?
Well, I mean, it was timely. And for example, the Russians offered $2 million to a Tesla employee to bring a USB drive into work. So I think they are going to be able to compromise the auto industry if they can have resources like that. Toyota is probably the only one who knows if it's Russians or not. Sunday, we saw British Airways systems go down, and they said that was actually just an IT problem. So probably the next couple of weeks, anytime someone gets hacked, we're just going to automatically blame the Russians. That may be true, it may not be true.
How much of a role do these third-party hacker groups play in all of this? Even if, say, Russia holds off on a full-scale cyber attack against the U.S., what does that mean for those third-party hackers?
Well, I think that hackers generally are not bullies, and Putin's being a bully right now. And so you pretty much have every other hacker on the planet not happy with Russia right now, and there are a lot more hackers outside of Russia than there are inside Russia. So I think Russia's going to get pretty beat up by, if you'd want to call them NGOs or other hacker collectives like Anonymous.
And what should individuals be doing to protect themselves at this point? I mean, you said like a minute ago that a lot of these large companies, they either have their security in place now, or at least for this go around, it's too late.
Yeah, I mean, I think for individuals, I would just keep an eye on what's going on. And, I don't think it makes sense to recommend things like we did after the Lehman collapse, like laddering bank accounts and things like that. It's we're a bit close to it now. I mean, I'd fill all my cars up with gas this morning.
All right, we're going to leave it there. Chris Ruland, CEO of Phosphorus Cybersecurity. Thank you. Karina?
Thank you.
Oh, okay. And coming up, how the sports world is reacting to the Ukraine crisis and a big move from the International Olympic Committee. That story ahead. Welcome back. With Ukraine under attack, the sports world has been quick to rethink ties with Russia. FIFA has now banned the country from all international competition. With more on this, let's bring in Yahoo Finance's Dave Briggs. And Dave, the IOC now also under pressure to ban Russian athletes and officials.
Karina, hi there. Yeah, this is a shocking reversal. Let's first start with FIFA, who I think was actually reacting to the IOC because just 24 hours ago, FIFA said they would allow Russia to play in the 2022 World Cup in Qatar, which starts in November, although they'd have to play under a different name. They could not host matches. They could not use their flag nor their anthem. And then today they come out with the statement you see on your screen and say, yes, we are in fact banning Russia from the Cup. Largely, again, following the IOC's lead, and I'll get to that in a second, but also it was the three other teams that played in Russia's pool to qualify for the World Cup. Poland, Sweden, and the Czech Republic all said, no, sir, we will not play Russia under any circumstances. And the star player for Poland, Robert Lewandowski, told his more than 2 million social media followers that, I'm sorry, this is not the fan of the footballers, the fans, but we can't pretend that nothing is happening here. He was really the lone superstar from these three teams to stand out and say, we will not accept this. And he brings up a good point. It's not the fault of the players, but we have to understand what team sports are for Russia. They are a way to legitimize that country and to further their message. It is very nationalistic there, far more so than it is here in the United States. So this is a major reversal. That match set between Poland and Russia 1 month from now, March 24th, looks like that will not happen unless fighting stops immediately. Russia cannot qualify. And I say the leadership came from the IOC. They said this morning they were urging all governing bodies in sports to ban Russia. And that, I think, is what really nudged FIFA. That's a real surprise considering the IOC, the International Olympic Committee, has held the Olympics in China twice and Russia once since 2008. They allowed Russia to compete in the last two games despite a ban for doping in 2014 in those Sochi games, and they allowed them to compete under the Russian Olympic Committee. The statement from the IOC says we want to protect the integrity of global sports and the safety of participants. They are also, though, Karina, banning Belarus, who has supported the invasion of Ukraine and is housing Russian troops. I think we're in a different world now than we were 6 months ago, maybe even 2 or 3 weeks ago. Sports players and teams are standing up and saying, no, we have power. We will not accept this invasion. Great positive news.
Yeah, it really is happening pretty quickly, Dave. Alexis here. And, another surprise announcement came in the world of baseball today, right? Derek Jeter, no longer CEO of the Miami Marlins, and he is also stepping down as a shareholder there. I guess he was at the helm for 4.5, I guess, mostly unsuccessful years. Did this come as a surprise to you?
Awful years, my friend. Terrible years. The worst in the National League, one of the worst in baseball. They're the lowest valued team in all of Major League Baseball. But this was actually a stunner, maybe even more so than that FIFA reversal. And if you check social media right now, this is the story trending in the United States from coast to coast. This is a 5-time World Series champ, the most identifiable superstar owner in all of Major League Baseball. Yes, stepping down as CEO and also as a 4% shareholder. And basically, you're going to have to read between the lines. He didn't say exactly what happened, but he said the vision for the future of the franchise is different than the one I signed up to lead. If you check the Twitter feeds of some of the star players for the Marlins, it reads as if they are very unhappy with the ownership of the Marlins, not named Derek Jeter. I don't think they're spending the way that Derek Jeter wanted, the way that he felt. I think there's about $10 or $15 million that they left on the table. And Jeter came there to win, not to pinch pennies and try to make a few extra bucks around the revenue system that Major League Baseball has. He wants to win a World Series. That's the type of guy he is. Now, does he go away empty-handed? Absolutely not. The team they bought for $1.2 billion just 5 years ago is now worth $1.85 billion, more than $600 million increase in just 5 years. So we ought to do well. But this is bad news for a franchise that doesn't seem to be doing what it needs to compete for a World Series. And this comes on a very bad day for Major League Baseball. It is the deadline the 30 owners set for canceling opening day baseball games if they don't have a new labor agreement. And everything I'm hearing from both sides say we are nowhere close to a new labor agreement. So this will start costing players, and we believe owners in the same neighborhood of around $20 million a day for every day they postpone or cancel from the regular season. It looks like the lockout is going to drag on into the regular season. Terrible news for owners, for players, for fans, and for those thousands of workers across the country.
Okay, and I want to go back to that Russian ban for a moment because sports franchises have been sort of really carrying the mantle, as you said. And, you know, there was this wonderful tennis player over the weekend, young kid, Russian, won his match and used the opportunity, the forum, to write on that camera, "No war, please." I'm wondering, does the tennis world sort of take note and impose any sort of restrictions as well? I was lucky to see Daniil Medvedev win the U.S. Open this summer. Great match, great player. Is his top ranking in jeopardy, do you think?
It's interesting, right? So that player you mentioned is a top 10 player in the world, wrote right on the camera, "No war, please." Daniil Medvedev today took over the #1 ranking in the world. And why is that significant? He's the first player outside the big four to be ranked #1 since 2004. Immediately, the Ukrainian Tennis Federation stepped up and said that they believe he should be banned, that #1 ranking should not qualify. I don't think they will get a lot of support in that, quite frankly, because Medvedev, although he has not been critical of the invasion, he has certainly not been critical of Vladimir Putin. He has said strongly that he wants to see peace. And what you have to consider, individual sports are very different than team sports. He doesn't play per se under the Russian flag unless he's playing in a Davis Cup or an Olympics. I think that #1 ranking will hold, but you're going to see hockey federations around the world step up and try to ban Russia, and that is a sport in which they dominate globally.
Okay, we'll see what happens. Dave Briggs, thank you so much. And we will leave it there from myself and Alexis Christophorous. Thank you so much, but there is much more action after the break as our colleagues take you to the closing bell on this volatile trading day.
U.S. equity markets hit with the latest wave of volatility in a rising sanction environment amid Russia's continued invasion of Ukraine. The Russian banks that were included in the Society for Worldwide Interbank Financial Telecommunication, or SWIFT, they come as the latest targets that North American and EU nations have included in sanctions as part of economic rebuke of Russian President Vladimir Putin's military invasion of Ukraine. The latest penalties towards Russia prompting JP Morgan to warn recession is in sight for the country as the value of the Russian currency dropped to just 1 cent in comparison to the US dollar. As of this afternoon, reports emerged that talks between Russia and Ukraine on the border of Belarus have concluded. We've got much more on this in a moment. Plus, the energy sector continues to be in focus. Oil prices still hovering in the ballpark of $100 a barrel as international conflict prompts a critical question of how prices may rise for individuals, households, and businesses at national levels down to the local scale. The CEO of PSEG is also going to join us to talk more on energy broadly to evaluate the current variables to the industry, plus how foreign uncertainty impacts the roadmap for sustainable energy. And with the sanctions currently imposed upon Russia, what additional measures may still be deployed against the nation? And how is U.S. intelligence monitoring the risk of cyber threats and informing Congress and the White House? Senator Mark Warner of Virginia joins us during today's show. You're watching Yahoo Finance Live. Today is Monday, February 28th. We've got just about 58 minutes until the closing bell. I'm Brad Smith here with Emily McCormick and Rochelle Akufo. Jam-packed show today.
Absolutely. Another busy day in markets indeed. And let's get a check of where stocks are trading this afternoon. A lot of red across the board in this final hour of trading. The Nasdaq Composite had briefly turned positive earlier during today's session. It's now joined the S&P 500 and Dow back in the red. And the Dow's more than 450-point decline is being led by the financials, including JP Morgan as well as Goldman Sachs. Visa and Procter & Gamble are following closely behind in the red. Now, for more on the market action, let's head over to Yahoo Finance's Jared Blickery standing by on the Interactive. Jared.
That's right. We're seeing a lot of red on the West here. As you said, the Dow off the most here, about 1 1/3%. And I'm glad you brought the bond market, because that's where we're seeing, once again, a tremendous amount of action. Now, the 10-year T-note yield is down 14 basis points. This is a huge, absolutely huge move for this particular instrument. And you can see it's now taken out last week's low and is in territory we haven't seen since the beginning of February. And that was when we had all those mounting concerns about a hawkish Fed, which is admittedly a little bit less hawkish right now, probably, we hope. And then the 5-year T-note yield, that is down 15 basis points, and the 30-year down a little bit less than that. So the yield curve, although it's coming down, it's also flattening at the same time. This has important implications for investments, and we're going to go to the sector action in a minute, but I want to show what's happening in Russia and to all these securities that are related to Russia. First, we have the ruble versus the U.S. dollar. U.S. dollar versus the ruble. U.S. dollar has advanced 28% against the ruble. Wheat futures surging. So are corn, palladium, crude oil. We have cybersecurity ETFs up 2%. So is cyber over there. And then we have aluminum, gold advancing again. Guess what's not moving here? This is the MOEX. This is the Russian stock index. And this is Yandex. This is a stock that would ordinarily trade in the U.S. on an ADR basis, but not moving today because trading has been halted. Lots of concerns about the regulatory scrutiny given the sanctions against Russia. And so you have to think that there's a lot of forced selling in some of these ETFs that also represent and hold these names. So a lot to work out here, but I do want to get back to the U.S. markets as we head into the final hour of trading here. And we can see on the sector basis, only energy in the green. That says WTI nearly hit $100 per barrel. And by the way, Brent crude oil just closed above $100 a barrel since the first time in 2014. To the downside here in the sector action, real estate, financial staples, all off more than 2%. Financials really taking a hit there as that yield curve, as yields come down, and they also flatten. Just give you a quick picture of the financial market. It doesn't look like I'm going to have it here. There we go. Banks. There we go. Unfortunately, a lot of red in this space. JP Morgan down 4%, guys.
Certainly a lot of red across the board there. Thank you so much, Jared Blickery there. All right, well, for more market reaction and to break some of this down, let's welcome in Kevin Mann, Hennian and Walsh Chief Investment Officer. Thank you for joining us today. Now, for those who cannot stomach all this volatility right now, you've said the best offense is a good offense is the investment strategy worth consideration. What does that look like, and how should investors be positioning their portfolios right now?
It's a great question. I don't think investors should necessarily get more conservative just because the markets are moving down, just as much as they shouldn't get more aggressive when the market is moving up. Rather, they should stay true to their risk tolerance and consistent with their longer-term financial goals. However, for those investors that have become unnerved by this market volatility or more conservative in nature, often the best offense is a good defense. And what does that mean? That employs more diversification into your portfolio, building in downside protection without abandoning the markets altogether and running to the sidelines and sitting in cash when you're earning no interest or no yield whatsoever. So identify those stocks that have a history of outperforming the market during market pullbacks, such as the one we've seen thus far in 2022. Those stocks that also pay a reasonable dividend, have strong balance sheet, and have a history of providing upside potential.
Now, obviously, a number of things moving markets. You've got the Russia-Ukraine conflict, but you also have the existing pressure about how aggressive the Fed is going to be. Now, in your notes, you highlight that the interest rate increase is just one component of the Fed's overall TNT program, tapering, narrowing, and tightening to really balance inflation with also full employment. Is there a sense of how the Fed strategy may shift with these three, given what we're now seeing as the invasion continues in Ukraine?
Yeah, I think these geopolitical tensions give the Fed some cover to perhaps not be as aggressive as some strategists earlier thought, with the potential of 8 to 9 interest rate hikes this year. It certainly takes a 50 basis point rate hike off the table for this March. In all likelihood, I believe that they're going to raise rates according to their last dot plot chart that was released between 5 and 6 times this year in 25 basis point increments. But as you point out, this is all just one component of their overall TNT program to help combat inflation. That being, of course, the first T, tapering, and we anticipate tapering our bond purchases ending by the end of March. The second component is N, narrowing or shrinking the size of their $8 trillion balance sheet, of which Chair Powell has told us that in all likelihood, that will begin this late spring. And then finally, the last T, tightening, raising interest rates. That's just one small component. If in fact the Fed does all three elements of that TNT program, we believe that inflationary pressures will start to moderate later this year. Of course, the sanctions that were put in place, the necessary sanctions upon Russia, will further stoke these inflationary pressures, though, specifically as it relates to energy prices.
Okay, and so Kevin, considering the hinge on the Fed here and what they signal, we're going to hear from Fed Chair Jerome Powell later on this week on Wednesday. And if he mentions anything around the international crisis right now, given the buy the news, sell, or buy the rumor, sell the news environment that we know the adage to be in the markets, do you expect there to be some type of relief move to the upside if it sounds like that's something that the FOMC is going to take into consideration?
I think you would see a little bit of a relief flurry there, not knowing, of course, how much further these tensions, military tensions, escalate in Ukraine itself. But I do anticipate Chair Powell taking on less of a hawkish tone later this week during those hearings, and in all likelihood will refer back to being data dependent and referring back to their last released dot plot chart, which again showed roughly 5 interest rate hikes this year. Hopefully there'll be more discussion around balance sheet narrowing and also allowing some of the existing bonds to run off their balance sheet, which would further help to sustain and actually control these inflationary pressures that we're seeing without hopefully slowing down the economy too much and still hoping to promote full employment. We've seen great strides in the employment side of our economy, and that's a critical component to help ease some of these supply chain related issues that have been exacerbated by labor supply shortages over the course of the past year.
And aside from issued sanctions, is there a longer term net impact that you anticipate as businesses who previously perhaps held their nose and did business in Russia, a growing number of private sector entities now joining the public sector and cutting ties with Russian government or Russian corporate entities?
Yeah, I certainly think this will have a long-standing impact on the way that Russia is viewed within the global economy. Remembering, of course, that Russia really has a very small contribution to the global economy, with the exception of energy commodities such as crude oil and natural gas, and agricultural commodities such as wheat. We know that the U.S. actually imported between 12 million and 26 million barrels of crude oil per month from Russia last year. We also know that Europe imports roughly 25% of their crude oil from Russia and 40% of their natural gas from Russia. I think that equation does change as a result of this incident, and you could see Russia playing an even less significant role in the global economy going forward.
But at least in the near term, we have been hearing a lot about the inflationary impact and the inflationary potential of this Russia-Ukraine conflict. I'm wondering, we're already getting PCE, CPI indexes coming in at 40-year highs. How much higher do you expect these to go, and how long would you expect some of these pressures to last?
I think you're going to see a little bit of a spike upward as it relates to certainly CPI and PPI over the short term because of the energy implications of these sanctions, which again are necessary at this point. But keep in mind that the Fed does have a three-pronged approach to help combat that inflation. They don't have a magic wand that can make these inflationary pressures go away overnight, so it will take time. But we also know that the U.S. economy continues to expand. Our overall macro theme for 2022, Emily, is still growing, but yet slowing. And I think that pertains to both the economy and stock market growth potential as well. Here's a great stat for all your listeners today. The S&P 500 briefly moved into correction territory last week. And over the course of history, there's only been 6 other times when the stock market has moved into correction territory this quickly. And guess what? In all 6 instances, the market was higher 6 months later by an average return of 15%. So perhaps this pullback is creating some attractive entry points that investors should consider, but of course, staying true to their risk tolerance.
Kevin Mon, Hennian & Walsh Chief Investment Officer, thank you so much, and it's always great having you on. Coming up, Brent crude oil prices spiked back above $100 per barrel today to hold near a 7-year high. We'll break down the latest developments in the energy markets on the other side of this break. Yahoo Finance Live. Let's take a quick check of the energy markets as we continue to closely watch this space amid the latest developments in the Russia-Ukraine crisis. Now, taking a look at oil, we do have Brent crude oil prices that settled just about 45 minutes ago. Those April contracts settling at just over $100 a barrel, actually coming in at $100.99. At session highs today, those contracts were trading for as much as $104.48. That is near the highest level that we have seen since 2014. And a similar story for domestic West Texas Intermediate crude oil futures, those settling just about at $95.72 a barrel this afternoon, continuing this melt higher that we've been seeing for the year to date, and really especially over the past couple of weeks as we've had these geopolitical tensions continuing. Now, taking a quick check as well on RBOB gasoline futures dated for March 22nd, also seeing a move higher here, those moving higher by about 1.5% and trading at about $2.77. So again, closely watching the energy sector, which continues to outperform in the S&P 500 as we monitor the crisis between Russia and Ukraine.
All right, thanks, Emily. Well, let's take a closer look at what's been happening with energy prices and the potential fallout. I'm joined by Scott Shellady, host of the Cow Guy Close on RFD TV. Thank you for joining us again. Now, as we heard there, WTI crude up nearly 4% to over $95 a barrel Monday. Brent crude over $100 a barrel again. When you see crude testing 8-year highs, what's your reaction and how long do you think this rally will last?
Well, it could actually be too white hot and burn itself out, or it could be sustained higher levels, which is going to really frustrate the Fed. I mean, I think the Fed's got a very difficult job to do. I think the equity market is telling me that they're going to try to thread this needle with attacking inflation with higher interest rate hikes, but at the same time, not hurt the rest of the economy. All the while, you may see crude oil futures and crude oil barrels going up in price. I think that's very dangerous, and it screams stagflation. I'm old enough to remember it. And I think that the Fed's got a very, very difficult job to do. I mean, somehow we've politicized crude oil. I think we should pump as much crude oil as we can right now, and we wouldn't have to raise interest rates as much. We've got an inflation problem in this country because mainly the price of energy has gone so high, and energy's in everything. It's in the transportation, it's in the making, it's in everything that we use and buy in our goods and services in this country. So you have to tack on that big energy component to everything. If you've got to take a large percentage of that out, that would take a lot of the inflation off the table right away. And then we have to simply just stop, printing money. So we have got an issue here, and I know both of those probably are not electable if you're a politician, but we need to pump oil, not pump rates, and we need to stop spending.
So then as the world grapples then with production as they consider what might happen if Russia decides to retaliate and cut off oil or natural gas supplies, obviously Russia accounts for about 17% of the world's natural gas and 12% of its oil. But to what degree could liquefied natural gas replace or at least perhaps offset some of this Russian piped gas as an energy source for Europe? And how prepared are the major players to really ramp up the production that's needed?
Well, they're not. I mean, they should have been getting prepared. I mean, we're one of them. We should have been getting prepared 6 months ago, but it's politically incorrect to do that. Who could have seen Russia and Ukraine 6 months ago anyway? Germany's abandoned a lot of what they wanted to be doing as far as nuclear and natural gas. So we've made a mistake politically. Everybody wants clean air and clean water. I'm not advocating for dirty air and dirty water by any means, but I am advocating that it doesn't help me to be able to fill my car up with gas so that I can go home and freeze to death. We have to take a look at how we're going to get by today and build a plan for tomorrow, rather than force everybody into one thing that's not ready to handle it, and then abandon something that's readily available that could solve all of our problems right now because it's just politically incorrect. And that's frustrating to a lot of the people in the markets because the answer's right there. Stop spending, pump oil. But for some reason, those are two unelectable ideas.
Now, we do know that obviously in a midterm election year, President Biden says he's going to be coming out with the plan, details of his plan to try and cushion the blow to American consumers who are already dealing with inflation at 40-year highs. So then what can actually be done then, though, to lessen the impact of these higher oil and gas prices to U.S. consumers?
I don't want to be redundant, but we have to be able to get back in that business and go back to, look, want me to prove to you that inflation and energy prices are connected at the hip? It wasn't too long ago, about 14 months ago, we were energy independent. And inflation was 1.4%, not 7.5, 1.4%. So there's a connection there. And that connection is that we need to have, energy is power, and that power can be different things. We obviously need it like we need to breathe. And somehow we've politicized breathing. But the country needs cheap energy. And the cheaper the energy, the better the economy, the healthier the people, and then the more the people can do for the environment. But for some reason, we're letting other people now pump oil and do other things to their grounds, like the pipelines abroad. I'm just frustrated because I know that we have the answers in our own backyard, but we're not allowed to use them.
Now, something else I do want to shift gears to is obviously food, the price of food going up. Russia, the world's largest supplier of wheat. When you add in Ukraine, they make up nearly a quarter of the world's wheat supply. Now, we saw wheat and corn futures soaring as the tougher sanctions were announced by Europe and the US. But what are you watching in terms of the effects on food prices and things like that when you do see now China saying it's going to then start buying more wheat from Russia?
Yeah, that's a great point, and I'm glad you brought it up because wheat was up sharply again today, so was corn. There was a lot of wheat and corn ready to be shipped out of the Ukraine before all this kicked off, and now those ports have been closed. They can't move those goods. And so they're going to have to come to the U.S., and the U.S. is showing that in the prices as of late. Now, this is even before, say, we've got the corn in the ground, and we haven't had any sort of calamity when it comes to our own problems with Mother Nature. So the two biggest components of inflation are food and fuel, and they're the two most inflammatory issues, no pun intended, when it comes to our situation right now here in the States. Because of the energy policy we already had, compounded with the incursion, war, conflict, whatever you're calling it, over Ukraine and Russia, that's compounded the problem that we already had going into it. It's also compounded the problem, say, in Germany. Watch Europe. I mean, we'll see how they handle these much higher prices, but it's not anything that's going to be solved anytime soon. That's another issue. It'll take 6 months, but who knows what happens in 6 months. I'm frustrated because it's so simple to me that we should just go back to energy independence. That will take the pressure off of inflation. You won't have to raise interest rates as much on mom and pop shops across up and down the high street. And then at the same time, if we can get our legislators to stop spending money, then we're in a much better position. But there's two things. It took me a long time in my career. I've been doing it 35 years to learn this. It cost me a lot of money to learn this. But there's two things. There's what I think should happen and what will happen. You've asked me. I've told you what should happen, but it's not going to happen. We're not going to fire up our oil here. We're not going to stop spending money. And so the problem is going to persist, and we're going to put all the pressure on the Fed. And the Fed's just got an impossible job to do. They're going to be raising interest rates into higher oil prices. Does that cancel out those interest rate hikes? I mean, that's the situation we're looking at here. And I think that's what the market's worried about, because the Fed's not going to be able to surgically remove inflation without hurting the rest of the economy. And we already had a downgrade of the global economy GDP today from 3.5 to 2.5. That's a large percentage. So there are folks that, I
certainly sense your frustration. Unfortunately, we will have to leave it there. Thank you so much, as always, for joining us. Scott Shellady there, host of the Cow Guy Close on RFD TV. Thank you for your time this afternoon.
Coming up, everyone, we continue our conversation around energy, specifically with the CEO of PSEG, as we've got much more on the climate goals, signaling a long-term shift to sustainable energy. But will the Russian invasion of Ukraine and sanctions that followed the impact and the timeline for critical infrastructure build out for clean energy? We're going to discuss with the CEO of PSEG next. Welcome back, everyone. Significant focus on the global energy market amid the Russian invasion of Ukraine, prompting a critical question of how prices may rise for individuals, households, and businesses at a national level down to the local scale. Joining us now, we've got Ralph Izzo, who is the PSEG CEO, joining us here today. Ralph, thanks for taking the time here with us. The international conflict certainly putting pressure on energy prices, all during the early build out of a clean energy transition. What net effect do you believe the crisis between Ukraine and Russia has on the push towards sustainable energy?
I think it's going to have a different effect over different timescales. Certainly over the shorter term, you'll see some upward pressure on gas prices in Europe. That'll result in additional LNG exports from the United States to our European allies. And that'll put some modest upward pressure on gas prices here in the US. I think over the longer term, though, it's going to have a lot of people rethinking their energy security plans. You'll see a greater shift towards renewable energy. You'll see some rethinking of the existing nuclear fleet. Some decisions that were made in Europe to retire nuclear plants may be reconsidered. I hope they are. Certainly the United States has learned some lessons from 40 and 50 years ago about not having sufficient energy diversity and being overly reliant on nations that don't always have our best interests at heart.
And so let's talk a little bit more about that, because first and foremost, can you quantify for us the capital allocation that PSEG has enacted to build a safe grid while mitigating security risks and other cyber threats?
Sure. We've been averaging about $3 billion a year for well over the past decade, primarily investing in the grid, preserving our nuclear plants, investing in energy efficiency. An often overlooked aspect of energy security is just basically allowing people to live their lives while using less electricity, less natural gas. So it's a whole myriad of things that we've been putting our money towards, from our transmission grid to our distribution system to our substations, and as I said, to the supply equation. Our most recent commitments have been to invest about 25% of the capital needed to develop 1 gigawatt of offshore wind, the equivalent of a very, very large natural gas plant or a nuclear plant.
President Biden is going to be addressing energy in his State of the Union address as well, particularly how the Department of Energy is going to be taking some steps, a $140 million demonstration facility for extraction of rare earth elements to produce sustainably materials that are key to next generation clean energy technologies. There's also $3 billion earmarked by the Department of Energy as well. I want to get your reaction to kind of what the White House needs to do to actually move this forward, considering the number of agreements that would be necessary to take place, and what companies like PSEG are also doing to ensure that even despite any public sector pushback there would be, what the private sector is able to enact in the near term.
Sure. So the Build Back Better bill had some terrific enhancements for the Department of Energy's research program, to touch upon some of the technologies you just mentioned. I think, sadly, though, the Build Back Better climate provisions that did not get enacted are desperately needed. The production tax credits, the investment tax credits for carbon-free energy, from nuclear to solar to offshore wind and onshore wind. You know, our own vision for the future as a private company is one in which people use less energy. The energy they use is cleaner than ever before, and candidly, we make the investments in the grid so that the power can be delivered with greater resiliency and reliability than it's ever been realized before. And we're hard at work at all three of those fronts, on energy efficiency, on preserving nuclear, investing in offshore wind, and making that grid more resilient, as I mentioned a moment ago. But an instrumental piece of that would be the climate provisions of Build Back Better. We just heard from the Intergovernmental Panel on Climate Change today about the fact that some of the worst concerns that we have about exceeding 1.5 degrees C temperature rise are unfortunately already baked into our atmospheric conditions. So it's not too soon to act now, and to act with vigor.
Charlie Munger said a couple weeks back that we're never going to go back to a traditional 5-day in-office work week, acknowledging the virtual employee reality that is here to stay in a larger percentage than pre-pandemic levels. How does this change your forecast for energy consumption and pricing, quite frankly, too, as New York Attorney General Letitia James is calling out one of your competitors in Con Ed to try and explain the unexpected spike in bills for the month of January?
Yeah, so this is an issue that's really underappreciated. I'm glad you asked the question. Look, the reality is utilities like ours made significant investments into commercial downtowns, commercial centers, the downtown of a city. But we don't put the same level of effort into that last mile of service that goes to the suburban home, the single family home. Because in the past, when you lost power in that home, certainly it was a nuisance, an annoyance for the customer who came home and had to reset their clocks. But you could not have the same expectations in the home as you would have in the commercial office building, in the airport, in the town center, in the schools. But now if the home becomes a place of business, loss of power is more than an inconvenience. It means if that power's out for several hours, the inability to charge that phone, to tell anyone why I'm not online on my computer. And in the future, it means that that customer won't be able to get in their vehicle to drive to a place where they can access that power. So the last mile of reliability to the home is something that's going to draw increased attention from companies like ours. We've been named the most reliable electric utility in the Mid-Atlantic region for the last 20 years in a row. But that's not an area where we've spent a large part of that $3 billion a year that I mentioned before. We have been investing that money mostly in our substations, in our transmission system, because there's just a lot more customer benefit associated with that. But we're going to have to be paying a lot more attention to that last mile as we move ahead in the future.
Certainly. I have to hustle to my finish here. I only have about 30 seconds. But studies have found that communities of color incur disproportionate energy prices, further exacerbating the household wealth disparity. What is PSEG doing to mitigate this burden among customers who are in the most heavily impacted markets?
Sorry, we had a little bit of a technical challenge there. Can we have that one more time?
Certainly, certainly. So studies finding communities of color, they're incurring disproportionate energy prices, which is exacerbating the household wealth disparity. For PSEG, what are you doing to mitigate this burden among those customers?
No, that is a critically important issue. One of the things we pride ourselves on are what we call our ESG credentials. We've talked a little bit about the environment in terms of energy efficiency and carbon-free energy. We're quite proud of our governance capabilities in terms of our disclosures and the way in which we manage our company. But the S component, in particular the environmental justice component, is increasingly important to us. So that is why we've been talking about the importance of what we call universal access. That it's not okay to simply have rooftop solar on those homes that are above the median income. It's not okay to have access to energy efficient appliances only for those folks who, once again, have the disposable income to pay that initial upfront cost. So all of our programs are geared towards multifamily dwellings, lower income customers. We have retired facilities, power plants that were located in highly industrialized parts of the state and ceased their operations. So there's no question that that environmental justice is a critical component of how we mitigate climate change going forward. From the point of view of simply paying the bill, yes, there's no doubt that lower income populations have to pay a higher proportion of their household income to their energy bill. And that's why we have public assistance programs, we have payment programs, and we have a variety of ways to help those customers.
Ralph Izzo, PSEG President and CEO, joining us today. Ralph, appreciate the time this afternoon.
And coming up, our triple play. Restock's Brad, Rochelle, and I are tracking for you this afternoon. We'll tell you why we're watching these on the other side of this break.
Welcome back, everyone. It is time right now for our triple play where we put 3 stocks on your radar going into the close. We've got just about 23 minutes left in today's session, and I will kick things off for us here today. Apple is on my radar, and unfortunately they're down right now. But it's on my radar for the reason that Warren Buffett, in his letter to shareholders, which came out over the weekend, talked even more about their ownership in Apple. 5.5% of Apple is what they own, and so that's up from a year earlier. But it's remarkable what they've continued to praise from Apple and about Apple's leadership and Tim Cook. They've said Tim Cook, Apple's brilliant CEO, quite properly regards users of Apple products as his first love, but all of his other constituencies benefit from Tim's managerial touch as well. Now, it's noteworthy here as we've been tracking Apple for Berkshire Hathaway and what it means to their portfolio. They actually said that Berkshire, they actually didn't have to spend any additional funds to get this accretion, and that it was all through really Apple share repurchases doing the job there. And so there you're taking a look at Apple shares over about the past 5 years. We do know it was a position for Berkshire Hathaway that wasn't necessarily initiated by Berkshire's founders and CEOs, Warren Buffett and Charlie Munger, but one of the other associates within the company, fund managers in the company, and it's paid off quite well for them over the years.
Absolutely, Brad. And I do think that is the thing that has been the most interesting about this Apple holding for Berkshire. Beyond the sheer size of the stake now is the fact that Warren Buffett and Charlie Munger have often admitted vocally to having a relatively more limited knowledge of the tech industry relative to their more limited company holdings. Of course, they've gone on to invest in a number of other, or Berkshire has gone on to invest in a number of other tech companies from that point as well. And many of them have been quite lucrative. Of course, Apple now comprising one of the largest stakes for Berkshire Hathaway. And again, these praises that we've been hearing from Berkshire, from Warren Buffett, and from Charlie Munger about Apple CEO Tim Cook are ones that they've reiterated several times now. Charlie Munger even told our own editor-in-chief, Andy Serwer, in an interview earlier this month that Apple is, quote, ungodly well managed. He also said, quote, I've got zillions of friends who'd almost part with their right arm before they part with their iPhone. That's a hugely powerful position to be in. So certainly something to watch with those trends in Berkshire Hathaway's holdings of Apple and others, of course. But shifting gears here, the stocks that I'm taking a look at today, and I do say stocks plural because I'm taking a look at both Dollar Tree and Dollar General. So 2 stocks within this dollar store, discount retailer part of the universe. And now not a huge amount of movement in these share prices today, both moving slightly to the downside, but these are going to be ones to watch according to a new note from Bank of America, because these companies could be some of the most deeply hit by rising gas prices. Now, according to B of A, historically significantly increasing gas prices have negatively impacted dollar stores' relative stock performance and comparable same-store sales relative to other retailers. And why that's the case is in part because rising gas prices means less discretionary income left over for those shopping at these discount retailers. And plus, this would also compound with supply chain disruptions and inflationary pressures already being seen by a number of other retailers as well. So definitely something to continue watching here for the retailers overall, but especially for these off-price ones like Dollar Tree and Dollar General.
And you have to keep in mind that at the peak of the pandemic, it was these Dollar Trees and Dollar Generals that were really the lifeblood for people, especially a lot of these based in a lot of rural areas and perhaps towns that don't have access to fresh food and grocery stores. And we are seeing that the inequality crisis is only deepening, and that could create even more of the company's core customers. But obviously, as they had to raise prices, as more of the pressures weighed on them from inflation, it'll be interesting to see then if they end up lowering prices as inflation also trends down. Now, the stock that I'm watching is Teladoc Health, and that was actually trading back at pre-COVID levels despite forecasted strong growth. Now, the stock rallied in early trading before paring back a little bit, and that was after it announced that it was teaming up with Amazon Alexa and Echo devices in a move that would make healthcare more accessible. And, you know, whether or not you have insurance or not, you could still be able to access it. And this also expands on Amazon wanting to really expand in the health space. We know that it's been trying to expand in the pharmaceutical space. Now, its Q4 of 2021 got a boost from the Delta Omicron variants when they were surging. But as we know, COVID rates are starting to slow. So we'll have a better idea, though, of where it's headed when it gives its Q2 22 guidance after its April's earnings call. But a really interesting one to watch.
Yeah, it seems like at least for the full year of 2022, revenue guidance is pointing towards $2.55 to $2.65 billion. And that would be about 20 to 30% growth. But particularly what we've seen is companies who are either in the fit tech space or in the healthcare or health tech space, they're leaning more into some of the devices that are already in home. And we've seen that leveraged through some of the other fit tech companies trying to attach that to Alexa skills. And similarly so, it's only right that we're going to see that even more with some of the health tech plays, Teladoc being one of those major ones, and continuing to see some of their year-over-year visits grow, both on a quarter-by-quarter basis, where in the fourth quarter they saw that grow in those visits, total visits increased 38%. And so we'll see how that continues to move forward, given the full-year projections and revenue guidance that they've provided at this point.
And telehealth, a crowded space indeed. All right, guys, well, moving on. In a rare move, Switzerland not staying neutral, instead joining the EU in sanctions on Russia. More on that and what's happening as companies weigh in on the conflict after the break.
The escalation of the conflict in Ukraine has left many wondering what the extent of the fallout will be for the economies of Russia and Ukraine, as well as for the rest of Europe and the world. DJ Peterson, Longview Global Advisors president, joins us now for the latest. DJ, thanks for joining us this afternoon. We're now hearing early estimates of how Russia's economy will be hit amid the latest set of Western sanctions. JP Morgan said it now expects a 20% quarter-over-quarter annualized contraction in Russia's GDP in the second quarter and a full-year decline of about 3.5%. Do these estimates track with what you're expecting out of Russia, given the sanctions as they stand now?
I do agree with this sentiment. Going into 2022, Russia's economy wasn't bouncing back very strongly from the coronavirus pandemic. Now, the recent uptick in oil and gas prices has certainly spurred the Russian economy, but it was fundamentally weak. And now what we see is not only financial sanctions, but technology export controls, logistics, ban of logistics, trade, cargo movement into and out of Russia, which is really aimed at throttling their industrial production. So it's not just financial sector issues we have to watch. It's actually the throttling of Russian industry. And yes, I do expect the country to tip into a deep recession.
And of the sanctions that we've seen so far imposed by the US, EU, and UK in particular, you mentioned some of those export bans as well as the financial restrictions. Which do you think are most significant, if there is one in particular that stands out as particularly squeezing Russia's economy?
Right now, it's the restrictions that are being placed on the central bank. Russia has amassed about over $600 billion in foreign reserves, including gold. This was a war chest. This was built up in part to resist Western pressures, financial pressures in an event like this. But basically what the UK, the Europeans, and the Americans have done is basically locked off a large portion of that, perhaps 1/2 of it or 2/3 of it that Russia can't tap. And you see it very clearly today in the exchange rate. And this is going to hit individual Russians very hard. And there's a calculus that this will lead to widespread political unrest. Another important issue is that Russian bond issuers are not going to be able to pay principal and interest. And so very quickly, you could see Russia falling into numerous technical defaults.
And to that point about political unrest, we've been seeing images of the ATM lines in Russia. Citizens have been racing to withdraw funds amid these sanctions. Is there a limit to how much economic fallout Russian people see before Putin is forced to change course?
That's a great question. The situation in Russia it's extremely politically stable until it's not. And the general assumption is that the political stability, in part imposed by Putin's very strong authoritarian control and control of domestic security forces, will keep a tight wrap on this. But also, talking to people in Russia, what I'm hearing is a fundamental sense of shock. First, about the fact that there was the invasion, and then, of course, the fact that their country has been completely cut off from the rest of the world. You think about urban professionals who used to travel to the West, used to travel to Europe, obviously had international business ties. Right now, Russia is on pariah status with Iran and Venezuela, and this is a shock. I think it'll take a few days for this to sink in, but what we've seen in the last few days is that the situation has changed very dramatically, and I think the next few days will be telling as well.
And we've been seeing in the West a number of businesses and entities punishing Russia beyond the scope of sanctions. The European Champions League soccer finals moved to Paris from St. Petersburg. Formula One canceled the 2022 Russian Grand Prix, and Delta has suspended its partnership with Russia's Aeroflot. Are these moves mostly symbolic in further condemning Putin's actions, or do they have further real implications to the Russian economy?
This is huge. I think it is quite remarkable that we've seen the business community move so fundamentally on key investments that they have made on Russia. If you look at BP abandoning its 20% stake in Rosneft, BP being by far one of the largest investors in Russia, suddenly walking away at a time when global oil prices are so high. Even the Delta Airlines example, I think, is very significant. And the fact that this is, a key tie, a business trade tie for business leaders to travel back and forth. What you're seeing across the board, and it's taking a few days, but you're seeing both very firm statements coming out of the business community, also the investor community, and then you're seeing very big commitments to pull back from Russia. And Russia's not going to recover very quickly from this, however the situation changes on the ground. This is significant.
And I'm also wondering if you have any thoughts on how China fits into all this. Of course, Xi Jinping has said he wants Russia and Ukraine to resolve this conflict diplomatically, but China still hasn't outwardly condemned Russia's actions and also abstained from voting on a UN Security Council resolution condemning the Russian invasion of Ukraine. What do you make of this posturing by China and how it fits into the country's relationship with Russia and with the West?
This is a great question, and this is what we need to be watching very closely in the next few days. Obviously, as you noted, Beijing threw its lot in with Russia on Ukraine. And now Beijing is the lender of last resort, is the trader of last resort with Russia. So in many ways, China is getting a great financial and economic deal with Russia right now. But the political fallout in Russia, the potential for political instability in this entire region is also something that China does not want. And China overall, for many years, has talked about political stability and non-interference. And this is obviously a hallmark example of interference in another country's affairs. So China is walking a very difficult, diplomatic position. But also, if things continue to go south in Russia, China doesn't want a basket case as a partner. And you might see some modification of its position in the coming days. It'll be very important to watch.
And certainly something we will be watching along with the broader Russia-Ukraine conflict. DJ Peterson, Longview Global Advisors President, thank you so much.
All right, coming up, after starting mixed with the Nasdaq in the green, all three major indices in the red. We'll check where things stand in our countdown to the closing bell.
Welcome back to Yahoo Finance Live. We're minutes from the closing bell, and stocks are now mixed, with the Nasdaq flipping into slightly positive territory. Yahoo Finance's own Jared Blickery is here with the latest on the market moves. Jared.
That's right. Just wanted to start with some breaking news with respect to crude oil. You can see already settled up more than 4% for the day. But over in Canada, they are blocking all imports of Russian crude oil. And it's not a lot. I think they import something like 500 million or 550 million barrels per year. But a symbolic gesture, definitely. And you have to wonder what other countries are going to follow suit. And just a quick look of the energy market heat map. And here we go. We can see lots of green, except for some of those foreign majors. Royal Dutch Shell and BP. BP famously withdrawing from the Rosneft project. They had 20% equity interest in it. No longer. Total down 7%. But the rest of the screen, very green here. And let's take a look at some of our other heat maps. NASDAQ 100, kind of telling today. NASDAQ just turned green briefly. We're seeing Alphabet up 23 basis points, practically nothing. Microsoft basically unchanged. But Tesla, a real standout today. That's up 7%. And we also have some other EV makers. We're going to get Lucid earnings after the bell, so stay tuned for that. Rivian up 6%. Li Auto up 9%. So a lot of gains here today, but not necessarily in the market overall. I'm just going to leave us on our crypto heat map. We can see you had a nice break to the upside today in Bitcoin, maybe forming a double bottom. So we'll have to see what comes of this. Be pretty interesting and nice to see a bottom finally form in Bitcoin, guys.
All right, going to be staying tuned for earnings from Lucid as well as Workday coming after the bell. We'll be breaking those down, plus Zoom as well. Jared, thanks so much. Yahoo Finance's own Jared Blickery breaking down the levels to watch going into the close. Take a look at the U.S. major averages. We're mixed with just minutes left in today's trading activity. Ringing of the closing bell is next. 'Closing 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 b
Welcome back to Yahoo Finance Live. I'm Rochelle Akufo along with Brad Smith and Emily McCormick. We're just minutes away from the close. I want to introduce our market panel who'll be digesting all the news for us. Reese Williams, Spouting Rock Asset Management's Chief Strategist, and Dory Wiley, Commerce Street Capital's President and CEO. We'll be checking back in with them in just a moment. Before we get to the close, let's see how markets are faring. Mixed at the moment. We're seeing that most of the day, all three major indices were in the red. The Nasdaq, you can back in.
And that concludes today's trading activity with major averages ending the day mixed. The Nasdaq was getting back into positive territory there at the end of today's trading session, with a lot of the activity really ramping up going into the close. With about 15 minutes left, we saw it turn positive once again on the day. The Dow and the S&P 500 didn't fare as well, however, closed off of their session lows, and we'll see exactly where this momentum continues going into tomorrow. The Dow closes down by about 0.5%, 179 points lower on the day. Compare that to the roughly 500-point loss at one point that we were looking at. And the S&P 500, you're seeing that close lower by about 0.25%, so also well off of today's session lows here. So let's get back to our panel for more discussion on what's played out over the course of today's activity. Once again, Reese Williams, who is the Spouting Rock Asset Management Chief Strategist, and Dory Wiley, Commerce Street Capital President and CEO. And Reese, I want to begin with you, particularly with what investors were looking at with today's trading session, and for at least the Nasdaq and some of those tech names that they may have seen some deals in right now, whether that is still going to continue to be kind of the outsized tenor, if you will, among many of not just the institutional investors, but even some retail investors that may be just looking for some good deals in this environment.
Yeah, well, it was certainly an interesting day. In the beginning part of the day, it was probably the most beaten up part of technology that did very, very well. And then at the end of the day, some of the bigger generals, big tech, turned positive. But they were negative for most of the day. So, I mean, on the big tech side, I think, those have sort of consumer staple-like qualities in the 21st century. So that is kind of understandable. What motivated some of the most beaten up, so I would say, growthy tech names to do so well this morning is a bit of mystery, other than they're probably very heavily shorted, and there was a covering.
Sure. And so, Dory, staying with the theme of tech, market risk, you say, is Russia, which we do know. Quantitative easing, though, as well, which tech would be directly impacted from. We've seen how reactive tech has been with any type of conversation or Fed signaling about their appetites to be more hawkish or raise rates on a more aggressive scale. And so we're going to hear from Fed Chair Jerome Powell this week, but again, ahead of the FOMC decision to come in their next meeting. And so what are you anticipating, and will the Fed, are they in a position now to have to address the international crisis that's taking place?
Well, we'll get to that in just a minute. I think that's a two-part question. Obviously, tech has been trading sideways to down, mostly down, since late last year, with this theme of moving from growth to value. So it's no secret that quantitative easing sucks liquidity out of the market. We have inflation. If you look at the December notes, the Fed is saying, you know what, maybe it's not so transitory. So we've got a lot of high prices. We've got a lot of inflation. We've got a lot of hikes. We're going to have hikes in March, April, and May. The only question is one of them going to be 50 basis points because of Russia? And if you look at GDP forecasts are still going down to very small numbers, even below 1% in GDP now from Atlanta. So when you look at all those things, it's no secret why tech or growth would trade sideways. Now, having said that, that creates a lot of opportunities in what I would call growth at a reasonable price stocks. And even if you look at big ones, say like a Microsoft or an Apple or a Lam Research, all of those have great margins, great growth prospects. A hike in 100 basis points or 200 basis points is really not going to affect those companies.
And Reese, to that point, in terms of the market reaction that we've been seeing through the end of last week through today, how much of this risk asset support that we've really been seeing, do you think has been driven by the expected monetary policy response, this potential taking the foot off the accelerator and not being as hawkish as potentially market participants thought earlier on, and potentially not getting this front-loaded 50 basis point rate hike in March?
I'm sure that's part of it, because I do think that Jerome Powell has historically been a cautious guy, and there's certainly a lot to be cautious about. I mean, we don't really know how the Russia situation plays out. The West has thrown a pretty tough ball at Putin, and ATMs were closed today. Most of Russia. I mean, there's a real panic now, and the big risk here is he decides to put the same kind of panic into Europe and cuts off energy supplies. So, I think that there's a lot of unknowns right now. And, until there's either some sort of negotiated deal and or the violence calms down in the Ukraine, I think that will keep, markets at heightened risk and Powell looking to be a little more careful.
And Dory, of course, we've now gotten a variety of sanctions coming down from the US, UK, and the EU against Russia. What are you looking for in order to really gauge the financial market and economic fallout that we're seeing here in the US as a result of some of these restrictions?
Now Putin's not stupid, right? So he had some predetermined outcome that he thought would happen as far as sanctions, and maybe even had something negotiated behind the scenes. However, it clearly looks like he may have underestimated what these sanctions would have done. And that's what we're seeing. So there's two things affecting him here and that relate to the markets. One is the sanctions. Did he expect that? Or are they stronger than we thought? And two, the resolve of the Ukrainian people to hold him out. I think he's probably clearly underestimated that as well. So the longer this goes on, the more it's going to affect him, more it's going to spill over into the rest of the market, and it won't be a quick end. I think he thought he was going to have a quick nod that, hey, I get a slap on the wrist, I'll take this over, and we're done with. It doesn't look like that's what's going to happen.
And to that point then, Reese, I want to bring you in here. So even if a de-escalation was possible at this point, when you have companies like BP unwinding their business from Russia and seeking alternatives to that country, we're now seeing obviously Canada as well halting its imports of crude from Russia, how do those relationships continue afterwards? And how do you really plan your portfolio around what might happen?
Well, we don't invest directly in Russia, so it's a little easier. But no, I do think that anybody with a big Russian exposure, it's pretty hard to know the outcome. And I'm sure British petroleum shareholders may not be so happy that the government's making them sell to Putin at cents on the dollar. I'm not sure how that necessarily helps shareholders longer term. But we don't own British Petroleum.
And I want to bring you in here, Dory, in terms of your buying strategy. When you're looking at this volatility and seeing what the VIX is doing, talk about your strategy in using the VIX as a guide and perhaps what that means in terms of how people invest in the shorter term versus longer term.
Yeah, sure, absolutely. Anytime VIX gets over 30, I'm eagerly salivating or watching the market, and it gets above 35. It's time to step in and find value. And so you need to have it pre-identified. You need to have some cash. On the day of the invasion, I looked up in the morning and it was 36, and so you start buying. You don't know when you're going to get your gain back, either in a day or a week or month or maybe even a year. What was amazing is a lot of the gain was right back there in one day. It was tremendous.
We're going to have to leave things there on the day. We're going to continue to track the volatility as it continues to be highly reactive in relation to the Ukraine and Russia conflict. We're appreciative of your time here with us today. Reese Williams, who's the Spouting Rock Asset Management Chief Strategist, as well as Dory Wiley, who is the Commerce Street Capital President and CEO. Appreciate the time. We do have to shift gears, though, because we're getting some earnings that are coming in here for Workday. We'll go there first. Shares moving higher and after hours trading by about 7% from what I'm seeing. Inez Ferre standing by with the latest results from Workday. Inez?
Brad, it's a beat on the top and the bottom line and a guidance raise for Workday with adjusted earnings per share coming in at 78 cents. The street was expecting 72 cents. Fourth quarter revenue coming in at $1.38 billion. The estimate was for $1.36 billion. Barbara Larson, Chief Financial Officer of Workday, said, given the strength in our fourth quarter and our optimism that the environment will remain robust for finance and HR transformation initiatives, we're raising our guidance for fiscal 2023 subscription revenue to be in the range of $5.53 billion to $5.55 billion, representing year-over-year growth of 22%. She goes on to say, we are also raising our fiscal 2023 non-GAAP operating margin guidance to 18.5%. Our market position has never been stronger, and investing to support long-term growth remains our priority. As you mentioned, shares are up 7% in after hours. There are 30 buy ratings from the street on this stock, 4 hold and 0 sell. Guys, back to you.
All right, Yahoo Finance's own Inez Frey, thank you so much for that breakdown of Workday's results. And coming up, many across the world have rallied in support of Ukraine amid Russia's invasion. The Be Strong initiative is sending $10 million in aid to Ukrainian citizens impacted by the attacks. We'll have a discussion with Bethany Frankel, the philanthropist helping lead this charge, on the other side of this short break.
Jared, then Rochelle will thank Jared and bring in Miss Bethany Frankel. Thank you so much for joining us.
Welcome back. Zoom video communication shares are sliding in late trading after the company reported quarterly results just minutes ago. Yahoo Finance's Jared Blickery has the breakdown. Jared.
That's right. Not bad on the top and bottom lines, but subscribers, especially the higher paying ones, a little bit of a disappointment. You can see the stock off about 8%. Let me give you the fourth quarter results first. First, revenue, very small beat, came in at $1.07 billion. The estimate was for $1.05 billion, just a little bit lower. Adjusted EPS coming in at $1.29 versus $1.22 a year ago, and that handily beats by about 22 cents the estimate of $1.07. Free cash flow, a little bit light here, $188.6 million. That's down 50% year over year. The estimate was for higher, $261.4 million. And then ending the quarter with cash and cash equivalents of $1.06 billion. It's down 53% year over year. The estimate was for $1.55 billion. And now here are those customers, the large ones, contributing more than $100,000 in trailing 12-month revenue. That came in a little bit light. The number was 2,725. Estimate was for 2,735. Now, Now, this number is a little bit more disappointing. Customers with more than 10 employees, 509,800. That's up 9% year over year. Estimate was for quite a bit higher, 527,304. And here's where the forecast gets a little bit ugly. They're seeing revenue for the first quarter of 1.07 billion to 1.08 billion. The estimate was for 1.1 billion, so just a little bit higher, seeing adjusted EPS of 86 to 88 cents, but the estimate was for $1.03. And now here's the full year forecast. They're seeing revenue of 4.53 billion to 4.55 billion. Estimate was for a bit higher, 4.75 billion. Finally, seeing adjusted EPS of $3.45 to $3.51. The estimate was for quite a bit higher, in fact, almost $1, $4.40. Also have a note on their board. They're announcing that Bill McDermott, they're electing him as an independent director of Zoom's board effective March 1st, and he is going to replace Bart Swanson. He was an early investor in Zoom. He is stepping down from the Zoom board following more than 8 years of service. This is from one of the releases. And if you know the name Bill McDermott, of course, he was once the leader of ServiceNow, also served as CEO of SAP. So really a leader in the industry. But I think investors really focusing on these key numbers here, and the stock is down 9% in after-hours trading. If we take a quick look on the Wi-Fi Interactive, you can see on the trailing 3 months, it's down 37%, and then over the trailing year, down 64%. So no relief in sight just yet for Zoom investors.
Indeed, a tough day. Thank you so much. Jared Blickery reporting there. All right, well, as we turn our attention back to what's happening with Ukraine and Russia, the United Nations Emergency Relief Coordinator reminded the public that 3 million Ukrainians were already in need of humanitarian assistance from the 8-year-long conflict in eastern Ukraine. Now, with the ongoing Russian invasion, more concerns as thousands flee to safety. Joining me now to discuss humanitarian efforts in Ukraine is Bethany Frankel, philanthropist and entrepreneur. Thank you so much for joining us today. Now, you established the Beast. Yes. Now, you established the Be Strong Disaster Relief Initiative in partnership with the Global Empowerment Mission. Now, the team is currently set up in the southeast Polish border with Ukraine. What are you hearing from your team on the ground right now about the key needs for people in Ukraine right now?
There are multiple things going on at the same time. There are refugees fleeing that would like to stay in Poland. They sort of feel that they're in limbo and need supplies and help and lodging in Poland. There are other people who have left and gone to relatives and friends throughout Europe. We have a warehouse secured and a place to receive aid, because aid is now coming from Europe, from larger companies like Goya, so we can distribute aid. One of the other issues happening is Ukraine. The people in Ukraine are running out of food and medical supplies. And just an hour ago, we had a very large request for protective gear, civilians that want to protect themselves. So we're going in several different directions to meet different types of needs. But a big urgency is now back in Ukraine, where supplies are limited. And that's more challenging, trucking back into the country.
I mean, I can imagine. I mean, so then how much has the initiative raised so far? And how are the funding needs then changing, as you mentioned, with all these developing situations so quickly?
The key to Be Strong is transparency at all times. In the beginning, we always say, this is what we would like to do. We never intended to raise this much money. We can have the capability to raise $100 million and execute 100% go into the effort. But we were surprised that by tonight we'll be at $5 million in donations from the average American. These are $50 donations that could get someone a plane ticket to see their family and friends or to go relocate. Separately, the $10 million in aid initially discussed was from our warehouse in Miami, where we have $16 million in aid, and this is 100,000 survival kits. So as a crisis evolves, the needs evolve also. When we were doing the PPE crisis, it started with crisis kits. It evolved into PPE, masks, and hazmat suits. In this case, we started with 100,000 crisis kits, and it has now evolved to travel logistics local in Poland to help people relocate, to a warehouse locally, to house aid, to trucking and pallets to then distribute aid, and to booths to give people their individual hygiene needs, baby needs, whatever those needs are when they cross. And then now the most recent development is people wanting protective gear, But right before that was us realizing we had to go back into Ukraine with aid because supermarkets have run out of food and medical supplies. So there are many different things going on. And that's the thing about Be Strong. It's not a pamphlet 5 days ago that can describe what we're doing. It's moving every single day to where the need is. And that's what we do specifically and efficiently.
And as you mentioned, you started with the initiative committing to that $10 million in aid distribution via 40 containers and you're saying if possible, if it ends up being a mass exodus, that goal could be ramped up to 100 containers. How are you able to ramp up so quickly?
Well, we have an infrastructure in Miami in our warehouse, but what we do when we go to different places all over the world, which we've been to Mexico and Guatemala and Australia, is we have partners, because we've done this so many times, on the ground. We have people right now flying in that speak the language because we need travel logistics and trucking and logistics in the warehouse to move the aid. So wherever we are, we establish our relationships, our volunteers, we partner, and we function as sort of like a general contractor, then executing. Because if you were to bring 100 people with you and pay for plane tickets and travel and all these things, this is how many of the big orgs, 40 to 60%, don't go to the effort. We do not have that. I won't tolerate that. We don't do big events. It's really, really lean and efficient. And, it would be like, you could help find a way to renovate your house yourself, or you could hire 10 other people and middle people to pay them to do it. So we figure out how to do this in the most economical way possible, and we are thoroughly organized and strategic.
So then, as you mentioned, a number of partnerships. You mentioned contributions there from Goya and the refugee camps, which are providing, so many different needs. They are a temporary solution. So beyond the critically important immediate aid, how does Be Strong then go on to sort of hand that off to some of these longer term needs, the longer term people who are going to be sort of taking care of this beyond the emergency needs?
Well, that's a great question, because camps are a very temporary solution and are not great for infrastructure in Europe. So you really want to get people to where they need to go to. So the travel partners and those logistics are hugely important. The Airbnb type partners to get people temporary and then permanent lodging. Travel is a huge thing. Plane tickets, train tickets out. That's huge, that logistics. And then partnering, what we did for Hurricane Maria was we amassed aid from all over the country because people hadn't thought the plan through and they didn't know how to get it to Puerto Rico. Remember the situation with the Jones Act? So we were having everyone get their aid to us and then we were distributing it. So that's what we want to do here too. Have people from Europe, big brand partners, bring their aid to us at our warehouse in Europe, and then we can distribute it via trucking. So there are many different things happening at the same time. Another thing, like I said, protective gear, helmets that civilians want to protect themselves. That's something for us to get back in. So like I said, it's each pocket has different ways of doing it. People ask about pets. We've seen no pets. There are so many things that people ask and think. People ask, can they put together clothes, to drop it off? And we're dealing with hundreds of thousands of pieces of clothing to be distributed. So, and my partners have stayed in Haiti 90 trips after the earthquake there. So you don't just leave when the headlines fade. You stay and you help them with their infrastructure, with relocation. I mean, this is going to be a several month minimum process.
Well, incredible efforts there. We do appreciate them. I'm sure the people of Ukraine do too. Thank you so much for joining us today. Bethany Frankel there, philanthropist and entrepreneur. Thank you for your time.
And switching gears here, everyone, we've got some more earnings that have come out. Lucid Motors on your screen right now. Shares moving lower by about 11%. We'll round that off to an after-hours trading activity. And for more, we want to bring in Yahoo Finance's own Pras Subramanian. Pras, what are you seeing in this earnings report?
Yeah, Brad, stock moving lower here. It's a miss on the top and bottom line and a production outlook cut that's really weighing on the stock. So let's talk about the headlines here. Revenue, 26.4 million. That's a miss. Wall Street expecting 36.7 million. Earnings of 64 cents a share. That's a loss versus 26 cents a share loss that was expected. Good news, the reservations for Lucid Air now exceed 25,000. They were at 17,000 at the end of Q3. But the bad news is the company has produced around 400 vehicles through end of February. For 2022, they're expecting 12 to 14,000 vehicles by the end of the year, production-wise. Lucid had previously forecasted 20,000. So that's a big cut, 12 to 14,000 from 20,000. CEO Peter Rawlinson said, quote, This reflects the extraordinary supply chain and logistics challenges we've encountered. So yet again, we're hearing about the supply chain chips and other component shortages. What we're going to watch here on the call as well is, are we going to get an update on that $70,000 lower price, cheaper Lucid Air? Is that still going to come at the end of the year? Are we going to see anything on the status of the Project Gravity SUV? Now, this is a very highly anticipated model for the company. They teased images of it at the end of this month. That's a big model that's supposed to come out. We want to hear more about the production lines at the factory in Arizona, and then also anything about partnerships with regards to charging networks and also retail service centers. Brad?
I'll take it from here. Subramanian, thank you for that on Lucid Motors. And coming up, a breakdown of our winners and losers of today's session. That's on the other side of this break. Stick with us. Welcome back to Yahoo Finance Live, and it's time now to chat our winners and losers of today's session. And our winners of today, Target employees. Today, the big box retailer said it's raising its starting minimum wage for some workers to as much as $24 an hour. Now, this will apply to hourly workers at Target stores, supply chain facilities, and headquarters. Now, Target's overall minimum wage remains at $15 an hour, where it has been for some time now. But again, for some workers, depending on the nature of their job and the local market, that $9 an hour minimum wage pay raise will apply. Now, guys, just getting your take here, the U.S. economy is still, of course, seeing a worker shortage. Companies have had to be more competitive with wages to attract talent. And it looks like Target is just the latest in a long line of retailers and other employers now to really step up the game when it comes to raising wages.
And this certainly isn't the first time. I mean, we've seen over the last 5 years that Target has really started with this uptick in terms of its minimum wage. And it does seem to want to be a wage leader in this space. And as you mentioned, at a time when inflation is high, the cost of everything is going up, couple that with a labor shortage where a lot of these companies, especially these client-facing, these customer-facing positions, people were still worried about it with COVID and didn't want to be on the front line of that. So I think Target is very smart here by making this move and really trying to shore up its labor force by making this look so lucrative.
And I think this still continues to come back to where the private sector has had to stand in the gap for a lack of a public sector movement on the minimum wage front, and really had to answer for those employees and provide a workable living condition so that they're not stressed out continuously because financial stress is one of the biggest sources of stress, and ensuring that you have a workforce that is pleased about where they work, the type of work that they're doing, the job and the role that they have, and the entirety of the past 2 years that they've had to navigate in any of those capacities. It's essentially important and critically important to make sure that amid this labor shortage, as you mentioned, Emily, that so many of the corporations that are battling for that headcount, especially within those customer-facing roles, that they are pleased with the payment, and that compensation comes in so many different forms. But I think this is critical for Target to get right in. We'll see exactly how this kind of moves forward for that brand and what type of pressure it puts on other competitors. But we talked about the biggest winner of the day, so we've got to, on the other side of the spectrum, I guess, talk about the biggest loser of the day, and that is EPAM Systems. This is not a company that we talked about quite often here, but it is a huge loser intraday, or at least on today's activity. They moved lower by about 45%, and this is after what is a software design company. They had to actually remove some of their forecasts for financials, not just for the first quarter, but the entirety of 2022. And this is directly stemming from the Ukraine and Russia crisis and the Russian military actions in Ukraine. And so there you're taking a look at shares, not just here today, but over the past month, down by 56% in aggregate over that time.
Right, and you take a look at this stock, and it was the worst performer by far in the S&P 500 during today's session. And I think what this really speaks to, seeing this enormous stock decline just during today's session, following the company's disclosure that it does have this exposure in terms of where its personnel are located, where its major software development centers are located, and the fact that about 5% of EPAM sales come from Russia, really speaks to the fact that although for the broader stock market indices, of course, we are seeing a little bit of pressure. We saw that during today's session, but when we think about the rally that we saw on Thursday and Friday, really the fact that the market overall is being able to be underpinned by where we think the Federal Reserve is going to go with its monetary policy, we're not necessarily seeing that in the individual stocks that have this exposure to Russia and Ukraine. And I think that is going to be something really important to watch for a number of names beyond just EPAM Systems, of course.
And obviously, we were wondering, on Friday, we saw this rally in a lot of these high growth tech stocks. And we were wondering, maybe this is something that could be sustained, but not necessarily the case. I mean, we're seeing this rotation away from growth to value as people are looking for something a little more as close as you can get to a safe haven at times like this. But when you have the Ukraine-Russia crisis, when you have this uncertainty about whether the Fed is going to act as aggressively as some people thought at 50 basis points, now that we're perhaps seeing that tempering as we're getting more of this pressure from Ukraine and Russia, we'll have to see how much that then starts to affect some of these tech stocks as well. All right, well, do stay with us. Coming up on the other side of this break, Switzerland no longer neutral. They are also now following the EU's path of sanctions against Russia. We'll have more on that with Senator Mark Warner after the break.
Welcome back to Yahoo Finance Live. The US, EU, and UK have unleashed additional sanctions against Russia over the past several days, ratcheting up the economic pressure to the Kremlin as Russia's invasion of Ukraine persists. Our next guest joins us for the latest on these and other developments out of Washington. Senator Mark Warner of Virginia is chair of the US Senate Select Committee on Intelligence and joins us now. Senator, thank you so much for joining us this afternoon.
Thank you, Emily.
And Senator, new sanctions were announced earlier today by the Treasury Department aimed at Russia's central bank. I'm wondering, do these and other penalties implemented to date go far enough to punish Russia for its actions in Ukraine?
Well, Emily, 9 days ago, I was in Munich at the International Security Conference, where we were meeting with all of our NATO allies, their defense ministers, their parliamentarians. And while they believed the American intelligence that Russia was potentially going to invade, they weren't all fully ready to pull all the triggers. We're 9 days later, 5 days into the invasion, and we've seen crippling sanctions in terms of Nord Stream 2. We've seen Germany completely change its whole position in terms of sending assistance to Ukraine and dramatically increase the defense budget. We've seen the Europeans take the lead on kicking some of the using SWIFT to kick some of the Russian banks out of the system. We've seen the export controls, not only from America, but a number of our, not only European, but Asian allies, limit semiconductors flow into Russia, which will cut back dramatically their ability on any advanced technologies, particularly around defense. We've seen Vladimir Putin himself personally sanctioned. We've seen even the Swiss, who have always been neutral, weigh in against Ukraine. And now these central bank sanctions to really limit the ability of Russia to settle any of their accounts in dollar-denominated transactions. This is going to create enormous pain and hurt to the Russian economy. Candidly, much, much faster than I anticipated. You couple all that with the remarkable resistance of the Ukrainians on the ground. I think Putin thought he could simply roll into Ukraine the way he did into Crimea. None of that's happened. Now, again, the Russians have got additional forces they can throw, and we've not seen the level of cyber attacks that I anticipated. But in terms of united European, American, and candidly other major democracies around the world weighing in, I think this is a much bigger economic hit than Putin anticipated.
And Senator, you mentioned that these sanctions are going to have a much quicker and more palpable impact on the Russian economy than you previously anticipated. When do you expect to see a tangible shift to Putin's course of action here in response, again, to some of these sanctions that we've seen and been implemented over the past several days?
Well, Emily, we saw the Russian markets literally close today. The ruble was in such free fall, they didn't even reopen their markets. But we never anticipated that sanctions alone, and just as we've seen in prior sanctions against regimes like North Korea or Iran, they don't happen overnight. They don't create this cascading effect on the economy overnight. So will it take days or weeks? But I think it's a pretty good indication when you've got oligarchs who have basically become billionaires many times because of their friendships with Putin, actually start to speak out and say, hey, we don't think this is necessarily a good thing for Russia to invade. They will feel the pain first and foremost. And when you've got somebody like Putin who has become so isolated from any outside input, I don't know if your viewers have seen any of these images where Putin sits at one end of the table, and whether economic ministers or military leaders, they sit at the total other end of the table. This is a man who's disconnected from his ability to kind of have, I think, honest input. So I think we will see results hopefully sooner than later, although at the same time, we have to acknowledge that Russia has still additional tools in the toolkit. The idea that Russia may launch some of their cyber capabilities against America or the West, either in terms of their direct intelligence service cyber capabilities or the large numbers of cyber criminals that reside in Russia to kind of unleash their ransomware attacks against the West. We have to be ready for that in the coming days as well.
Where do you think the greatest risk for a cyber attack lies right now? Would it hit infrastructure, U.S. government agencies, the private sector, or be directed elsewhere?
Well, Emily, let me break that into two components. One of the things I've actually been pleasantly surprised at is that Russia has not launched their full cyber capabilities against Ukraine. I was very concerned because, unfortunately, Russia has penetrated a lot of the Ukrainian networks. And again, I think the fact they've not launched these capabilities is an indication Putin thought he was going to be able to take over so quickly. But if Russia launches a full-on cyber attack on Ukraine and, in a sense, tries to turn off the power, turn off the water, turn off the internet, many of these networks are interconnected. You take Poland, which is right next door, a NATO nation where there are American troops and other NATO troops. If somehow you turn off the power in Ukraine and it turns off the power in eastern Poland as well, and a truckload of NATO soldiers have a crash because the lights have gone out, or Polish citizens start to die because the power has gone out in Polish hospitals, that gets very close to what would be considered an Article 5 violation of the NATO treaty, which says if you attack any nation in NATO, all 30 nations have to respond. That was my immediate concern. That hasn't come to pass so far. I think many of us in the intel and security community have been surprised Russia has not gone down that path that far, but that is my immediate concern. The concern over the next coming days, as these sanctions really start to cut into the Russian economy even further, is that Putin has said, all right, I'm going to strike back against NATO, American, whether it be ransomware or whether it be with direct cyber attacks. Literally, there are thousands of cyber weapons that the Russians have, and we've never seen a time where they've launched multiple weapons at the same time against other nation states. We could see that hit America and the West in our financial sector. It could hit in some of our critical infrastructure, such as our power. It could also appear in the form of ransomware attacks. We thought, some of your viewers may remember when Colonial Pipeline was hit a year ago, it shut down that pipeline. That caused long gas lines across the whole Southeast. So we are on guard, and we've got the cybersecurity agency has basically got a program called Shields Up, a kind of like Star Trek terminology. We've got all our defenses out there, but as is just the truth in cyber, if you bring a first-tier nation state like Russia against generally most cyber defenses, chances are at some point they will get through. So the question for American business, industry, and government will be, even if the Russians are able to penetrate our cyber defenses, how quickly can we bring our systems back up in terms of resilience? So I think we'll be okay, but there could be some bumpy days ahead.
And Senator, what magnitude of a cyber attack would potentially warrant a militarized response from NATO outside of a cyber response?
Well, I think the kind of response that I laid out, where you actually had a cyber attack that shut off the power in Poland, eastern Poland, that led to loss of life, whether it be NATO troops or Polish citizens, would get pretty darn close to an Article 5. This has always been in an area that's called strategic ambiguity, because we've not been necessarily fully clear on that. And there's also been the doctrine in our country has always been that if a nation state, Russia, uses an attack against us in cyber, we reserve the right to respond in other domains, militarily, economically. Because candidly, I think there's been a great deal of concern in America, in NATO, hopefully some responsible heads in Russia, that if you start escalating tit for tat in cyber, where you've got a whole series of malware with worms that can go from one network to another, you don't know when you'll unleash this much malware cyber attacks into the wild where it may lead. So we are, again, unfortunately, because of Putin's unfounded necessity of trying to reestablish old Russia and take on and invade Ukraine, we're unfortunately fast approaching areas that have been hypothetical to date, but unfortunately may become very real in terms of policymakers' decisions.
Certainly something we'll be watching in the days and weeks ahead. Senator Mark Warner of Virginia is chair of the U.S. Senate Select Committee on Intelligence, and we thank you so much for your time this afternoon. We'll be right back.
Welcome back, everyone. Mental health has been kept in the spotlight among athletes, social justice advocates, healthcare and educational institutions providing more support to students, too. Joining us now, ahead of his new book titled Abundance, is Deepak Chopra. And Deepak, it's great to speak with you here on the day. I imagine that during the international crisis stemming from Russia's invasion of Ukraine, a good portion of our viewers may be seeking ways to be informed while also protecting their mental health. How can we best practice mindfulness during times of conflict like this?
So our foundation has launched a program called I Am Never Alone. If you want to check it out, neveralone.love. And the goal of this program is to offer mental support globally to anyone who is part of this community. And we offer that through attention, which means deep listening, affection, deep caring, appreciation, deep gratitude, and acceptance, not trying to change anyone. So far, with an emotional chatbot on neveralone.love, we have de-escalated something like 6,000 suicide attempts. We have 11 million conversations going on, and everyone feels more comfortable, at least the younger people, speaking to an emotional chatbot or AI because they don't feel judged. Our chatbot is called Peewee, named after a recording artist who died from suicide. Along with that, we are creating all kinds of programs online for mindfulness and meditation.
Certainly. And so with more on that, I want to come back to the technological component of this too, because I think that's a big part of this conversation moving forward. But thinking about education, first and foremost, schools provide resources and practical solutions so that mental health is more in focus and really just monitored among their student base. But how can they do so that it's not a reactionary measure, but is embedded within the construct of education?
There are organizations doing that, like Goldie Hawn's Mind Up, which is a beautiful organization, which provides curricula for brain training, as they call it, in schools. And they're now in many countries. And I think that's going to be a very important movement because you can track whatever is happening in the mind, you can track it in the brain. And now that we understand neuroplasticity, you can actually rewire your brain from mental distress in the direction of empathy, compassion, joy, equanimity, and well-being.
Certainly. And then, shifting from the educational construct to the corporate world, or just the employment construct, if you will, in what's been dubbed as the Great Resignation, the U.S. has reached its highest rate of people leaving their jobs. What would you recommend for people considering a new career in order to attain happiness in that new way of making a living?
Well, in my book, I talk about finding your unique strengths and then connecting with other people that you can complement their strengths. So if you go to a site like LinkedIn, you can identify people that complement your strengths. Right now in the corporate world, it is very clear that if you have shared vision, emotional and spiritual bonding, and complementing each other's strengths and maximum diversity, then everybody is happy and everybody is fulfilled. This is a big movement in the corporate world. I co-founded an organization called Just Capital, which is a nonprofit, and which tracks all the corporations that are treating their employees in a way that the employees feel fulfilled and they find meaning and purpose. So there are a lot of resources for those who don't want to go back to work. You just have to do a little bit of due diligence.
What are you hearing from individuals, from households that are navigating financial stress right now, with inflation changing the spending habits of households, and even with the career changeover that we've been watching? What has that attributed to this point in time in the form of our mindfulness and needing to be more mindful as there is that added financial stress in some households?
Yeah. So when you do surveys and you ask people about security, safety, emotional well-being, career well-being, community well-being, emotional, spiritual well-being, actually the one thing that stands out is financial well-being as the major cause of stress. Money is the biggest cause of stress right now. So one thing is, of course, to learn to manage stress through all the techniques from mindfulness to deep breathing to vagal stimulation to mind-body coordination. But on the other hand, it's also important for companies right now to make sure that people feel financially secure. One thing I can say is right now, please don't spend money that you haven't earned to buy things that you don't need to impress people that you don't like. You'll get more stressed. And in the meanwhile, actually connect with people who can complement your strengths, do some work on the internet and look for people that are like-minded, and emotionally and spiritually you can bond with them and focus on what we call emergence.
Do not spend money to buy things you don't need to impress people you don't like. That's probably some of the best.
Money that you haven't earned, you'll get very stressed.
There you go. Exactly. Hey, just lastly, while we have you here.
This is the American mantra. Buy things with money that you haven't earned.
Yeah.
And buy things that you don't need to impress people that you don't like, and then wonder why you have all this stress.
Deepak, just very quickly here, I only have about 15 seconds left here. Since you mentioned technology and brought that up, there is, from Elon Musk, of course, this company in Neuralink that's really powering neurotechnology. What advancements do you think that will have in the future for practicing better mindfulness and being more aware of how to practice mindfulness?
It will have a huge impact because bio-tracking right now will not only help mindfulness, but everything. It'll track your biomarkers, including blood pressure, bone density, hormone levels, gene expression. This is the next movement. So good for Elon Musk.
Deepak, appreciate the time and the conversation here today, as well as some of those tips. Deepak Chopra, author and wellness guru and founder of Chopra Global and the Chopra Foundation. Thanks so much. And everyone, we'll be right back on the other side of this short break.
welcome back. Before we go, we want to highlight our top story on Yahoo Finance today, and it's about the Russia-Ukraine crisis, but specifically, multiple media outlets have now reported that a Ukrainian sailor attempted to sink the luxury yacht of Russian businessman Alexander Mikheyev, the CEO of a Russian arms exporter. Now, guys, two thoughts here. Number one, this really underscores the fight that is being put up by Ukrainians on multiple fronts. That's really been much more formidable than Russians seem to have been expecting. And number two is really the fact that Russian oligarchs have been a key target in the global response to Russia's invasion, from sanctions to asset freezes in Europe, etc. So again, I think really going to show the far-reaching nature of this conflict and the many people now being impacted.
And I mean, this certainly isn't a cheap yacht. This is a super yacht worth about 7.7 million by most estimates, 156 feet. And so basically this sailor, Ostapchuk, is allegedly to have opened several valves to intentionally flood this yacht. And, you know, he really took this to heart. He was saying that he saw this helicopter attack on a building in Kiev and those armaments, as you mentioned, produced by that yacht owner's company. So it just goes to show how creative and determined a lot of Ukrainians are when they want to somehow join in the fight any way that they can.
And I think Ukrainians are really showing exactly how they are pushing back against any type of force that tries to go against their sovereignty in their nation, and putting up the best fight that they possibly can right now, and in many different forms, as both of you have brought up. And I have no doubt that there will perhaps be even more stories like this to emerge that we're going to have to continue to watch how they play out amid the crisis and the conflict taking place between Russia and Ukraine right now, as even more sanctions have been put in place as well from other EU and North American nations as well. But everyone, we have to leave things there on the day. From myself, Rochelle, and Emily, and our entire production crew, we appreciate you joining us here. We'll see you back same time tomorrow at 3, but our coverage for Yahoo Finance Live kicks off at 9 a.m. We'll see you tomorrow.